Good morning, everyone, and welcome to Traders Corners Investor Summit, Roadmap to Profits in 2026. I'm your host, Anthony Chapman, and we're thrilled to have you with us today. We've put together an outstanding lineup of professional traders and educators who are actively trading today's markets, and we'll be sharing the strategies, tools, and frameworks they believe offer the greatest opportunity heading into 2026. This summit is designed to give you clarity, perspective, and a roadmap, not just trade ideas, but guidance on how to think, plan, and execute in today's dynamic trading environment. Each presenter will be sharing valuable insights and in many cases a special offer made available exclusively to Summit attendees. After every presentation, we will be placing a special link directly in the chat box. So let's get started. Our first presenter today is Martha Stokes, CEO of TechniTrader. Martha is a professional trader, educator, and a chartered market technician. She has spent decades studying market structure, institutional trading behavior, and the mechanics that drive price movement in U.S. equities. In this session, Martha will explain why good trades still fail without structure, the key differences between retail and professional trading, and what it truly means to trade as a business, not a hobby. So please help me welcome Martha Stokes.
Good morning,
Martha,
everyone.
Hey, good morning.
It's great to be here. I'm excited to share stock trading as a business. So let's get started because I have a lot of information. Please take notes, and you can ask me questions as we go late at the end of the session. We're just educational. I do this in my retirement. It is my legacy. I have a great passion for teaching, and a lot of people think I'm a great teacher. So I've already been introduced to you. I have cycle evolution theory, how to identify evolutionary cycle deviations, which was a landmark change in how cycle theorists look at cycles. And I also have relational technical analysis that professionals, I presented at the CMT, and all the professionals watching this, please stay through the whole thing because we have a very special offer that you will not want to miss out on. Trading as a business, more and more Americans are feeling the pressure of a harsh reality. Despite a long, productive career, they're facing a retirement that is less financially secure than they had planned for. Today, millions of Americans are facing rising inflation and more uncertainty about retirement, even if you're only in your 30s or 40s. They realize they have a limited choices to maintain the lifestyle they have become accustomed to prior to retiring. Nobody wants to go backwards. Everybody wants to go forward. Retirement's supposed to be fun. There is a solution. It is something anyone can learn. It can be a part-time at-home adventure, and it's fun. It takes as little as a few hours a week to generate income to maintain the financial security growth for years to come. You can trade any financial market via the stock market derivatives. Every single one is there. So all you have to do is trade the stock market. If you want to trade other financial markets, that's fine, but each one is uniquely different. And I'm talking about the stock market today. Trading as a business takes the worry and frustration out of retiring into an uncertain future. Trading as a business is approved by the IRS and other nations' tax and entities. No one wants to bag groceries at a store. I see elderly doing this. Nobody wants to drive in rush hour traffic to a workplace and spend hours in a low-paid job after they retire or even before. Trading as a business doesn't have to be an 8-hour, 5 days a week job. Less is more in the market. If you know what you're doing, you actually trade less and make much higher income. Trading as a business has far more flexibility than owning any other type of small business. It is a small business. So if you've never owned one, it's going to be an exciting adventure. It provides an exciting and fascinating way to increase your income without the hassles of being an employee or hiring employees. Just you. The hidden world of professional traders. Today, you're going to learn what separates you from the professional traders who make high incomes, 6 and 7 digits, but are invisible to you as they keep a very low profile deliberately. It's intentional. The true professionals are not gurus on YouTube or self-proclaimed experts on social media. They are never on TV, nor do they ever give interviews. So what you're watching on the retail side are small funds managers and gurus who want to become famous. Professional traders have no desire to be famous. However, they are the most important market participant group for you, for your success. Right now, you are trading against the pros. I can guarantee it, because you're trading on the retail side. You have no idea where these guys are. True professionals are the most talented, skilled, and successful traders in the world. They know that skill takes time to develop. They've honed their skills and they have vast tools they use. Why aren't you trading in harmony with professionals? Because you do not know how to recognize their footprint in the stock chart. You miss it because it's so small. Trading as a business. Trading as a business was an IRS ruling that was approved in the late 1990s. How many of you have heard about it? But most of retail traders have never heard of this unique tax status for semi-professional retail traders. Once you're trading as a business, you become a semi-professional, and then professionals respect you. The IRS and many other countries provide the same tax status given to professionals of the market to retail traders who make their trading as a business rather than a hobby. Right now, IRS classifies you as a hobby. You're a hobby trader. Trading stocks should be an enjoyable adventure that also ensures your financial security for as long as you live. One fact that most traders are shocked to learn is this: it takes fewer trades to make consistent profits to exceed what you are making right now with hundreds of trades. Less is more when trading as a business. Why? Because trading as a business creates higher profit percentages with much lower risk. Trading. So let's compare it to how you're trading right now, which is hobby trading. When you trade as a business, you can take off all of your expenses relating to trading, including a salary for yourself. All of your professional level educational expenses are fully tax deductible. Your charting software is fully tax deductible, and you should be using full charting service software, not a freebie that has only part of what you need. Your coaching or training from certified professionals is fully deductible. Your office space in your home, which includes the electricity, the water, the sewer, the phone, computers, tablets, repairs, maintenance, all are deductible. Even if you put a new roof on your house, that part that goes over your office space is deductible. You do not need to document each and every trade for taxing. Wow, you don't have to fill out a Schedule D with 100 different trades that you made that year or whatever. The stock you trade are your inventory, not individual stock transactions. This saves a huge amount of time. You add up all the profit you made, you take all of your deductions off, and that's your tax. Travel expenses related to education or trading are taxable, deductible also. There's a ton of tax deductible things you're not allowed to take right now that you can once you trade as a business. The U.S. stock market is the largest in the world by a staggering amount. The U.S. stock market has the top Fortune 1000 corporations in the world. It has at any time anywhere from 6,000 to 10,000 stocks and ADS and ADRs, which are foreign stocks, and derivatives and instruments you can trade. The U.S. has more than 5,200 ETFs, and the most popular are SPY, Q, and DIA worldwide. So you can trade anything on the stock market. The U.S. also has the SEC Midas computer, which tracks every single transaction every day, including the dark pools, which are hidden from you, and the consolidated audit trail, which tells the SEC who made that transaction. Both protect everyone who has investments or trades the U.S. markets from fraud, corruption, corporate insider trading, and much, much more. The U.S. also has the largest financial markets in cryptos, forex, options, commodities, futures, bonds, credit markets, alternatives, digital assets, and coming this year, non-fungible tokens. And they're all derivatives on the stock market as well. You can go to those individual financial markets, but you can also trade everything on the stock market, which is super cool. The world trades the U.S. market because the huge possibilities for success and the security rules that we have. Test your knowledge. How much money changes hands in the U.S. stock market every day? Anybody have any idea? No? 350 to $400 billion per day changes hands. That's massive. What speed of execution does the professional side use? You use a 1 minute scale. So if you're trading day trading, you have a 1 minute and then another candle will form a minute later. Millisecond routing, they trade on the millisecond. A millisecond is 60,000 transactions per second. And how many seconds are in a minute? Okay, so they can trade, they can see your order, make decisions, and before the next candle forms on your day trading screen, they're already trading against you. What venues do the professionals use? Most of them don't trade the public exchanges. If you're day trading, you will know, or even swing trading, the intraday is liquid. The first of the day, there's lots of volume. The end of the day, there's lots of volume. And in the middle, it's just retail traders. Off public exchanges called alternative trading venues, called colloquially dark pools, because it's dark liquidity. There's no market maker order book. There's no lighting of everything going on. Everything is dark. That's why it's called dark pools. What is the projected global assets under management for this year? I love this one. 200 trillion, that's a T, dollars. Okay. You think that the buy-side institutions who are controlling the global assets are worried about anything? I don't think so. After expenses, how much money did you make last year? You have to give yourself a salary. I mean, your time is worth something, isn't it? You wouldn't work for free for somebody. So don't work for yourself for free. And then you have all your expenses, you know, the internet, your computers, your broker you get free trades, but you don't get free trades. So how do you start trading as a business rather than a hobby? First, you need to accept the fact that the market is not one-dimensional. It is not Wall Street versus Main Street. That's been long gone for decades. The concept has been gone for over a century. What you need to understand is where you fit in within the highly complex, multi-tiered market. This is one of those rare instances when do-it-yourself doesn't work because you only have 20% of what you need to know. You can spend 10 to 30 years, and I have students that come to me hat in hand saying, Martha, I wish I'd come to you sooner. I should have. Trying to figure it out and finally accept that you need to get a real education from a certified credentialed professional. It doesn't have to be me. Part of this professional level education is trading as a business. You must accept the fact that what is available on the internet is missing 80% of what you need to know. 80%. What you need to have right now is all good, is all great, but it's not enough to get you where you need to be. You're way up here. And then all the professionals are down here, dark pools and floor traders and professional traders, small funds managers trade on the retail side. HFTs also trade on the retail side. So this is kind of how it looks. You can't see any of this activity on the professional side. So this is what everybody believes. Oh, 50% of the market is controlled by average investors and uninformed, and 50% is controlled by banks and wealthy individuals. It's 50-50. No, it's not. It is 20% for the retail side. These are all the retail sides. 80% on the professional side. See this red line? Everybody down here, you can't see what they're doing at all. HFTs do trade up, and so do the hedge funds. They trade the public exchanges, front running milliseconds before the market opens. You need to be down here trading with the buy side institutions and the professionals. It's all in your charts. I can show you how it works. So this can be a day, this can be a week, a month, a year, 20 years, whatever. But this is how the market works. It starts down here and moves on up. So you want to be, and then when we go to the downside, it's the same thing. Professionals, buy-side institutions are rotating out of a stock because it's reached market saturation, which means its growth years are over, and they're looking for the next growth company because they're all about growth companies. Don't let them think they do hold a percentage of the big blue chip stocks, but that's not where their head is. Sell-side institutions know this, and so the professional traders are also knowing this. They get in early, they sell short, and then some people buy on a dip, and they lose more money, and then retail traders go either selling and panicking as the bottom begins. The dark pools create the bottoms. They always create the bottoms. So you want to be into the bottom thing, platforms and things like that. Foundational knowledge. There are 6 primary market conditions. Can anybody name them? Okay. The bottoming market condition controlled by the buy-side institutions, dark pools. Platform, which is where we're coming out of a bear and the bottoms are developing and now they're starting to move up. And all the retail is still sure that the market's going to crash. The world's coming to an end. Oh, there's an AI bubble. Dark pools and buy-side institutions control that. Moderately trending up or down. Okay, we start to see the professional traders getting in on the platforms and some bottoming early. And once it's a moderately trending, they're starting to push. You have your buybacks by corporations moderately trending. This is the market we're in right now, moderately trending up with the indexes trading sideways. Velocity up or down, who controls that? Retail and smaller funds managers with less than 5 billion assets under management. $5 billion is nothing in the market. It's a little guy. Topping markets are instigated because the dark pools see the market saturation. The company has had its growth years for its new technology. Everybody who has that wants that technology, or most of them have it, so it'll slow down its growth. So then they start looking for the next one. Trading ranges are very rare on the indexes. They do happen. The longest one was in the 70s, but trading ranges occur often in companies that do not reinvent with new technology. So there's a lot of companies in trading ranges, and that is something that the dark pools do not participate in. Each market condition is unique. The trend line patterns are different. This is because different market conditions are created by different market participant groups dominating and controlling how price moves up or down. So dark pool with pro traders, and then nudging the smaller funds and HFTs and so on. Retail, smaller funds, dark pools, and then sell side. Trading range, no dark pools. You don't want to trade a trading range. It's just too hard, and a lot of you try. Market condition is your roadmap for navigating the market activity over time. You will trade differently in a velocity market than in a platform market. A platform market is where there's this real tight consolidated price range that goes on, and it goes on anywhere from 1 month to 3 months, and then boop, it moves up because they're accumulating. They build this. The dark pools have this time weighted at price level, and they control the price in that range. If it drops below, their TWAP orders stop, time weighted at price. If it goes above, it stops. So they're easy to see, but you haven't learned to read the charts. You need to be able to read stock charts as easily as you read a book or music or whatever, or zeros and ones if you're a programmer or whatever you do. The stock market, yes?
Sandy had a question.
Yes.
Is it okay to ask a question as they ask them?
Sure.
Okay. Sandy asked, excellent session. Do they amass data for their decisions from prop trader evaluation account trading servers also to further gauge and trade further against retail?
That's really good. Dark pools don't worry about you. They want you to be a 401k holder, IRA, or join them and have a trading account on their brokerages, okay? Because it's Fidelity, it's Vanguard, they're private companies. And they remain private because they have control when you're private. When you're public, like BlackRock and State Street, you have no control. And BlackRock and State Street are seriously regretting the decision. They're derivatives developers, and they want to be what the Vanguard and Fidelities and others are, but they're not. There's a whole bunch of pension fund managers too that are Northern Trust. There's all kinds of them. So what they do is they have a team of experts, analysts, that go and visit every CFO and CEO on the main office campus. And of course, when a buy-side institution, there's only 20 to 25 of them, comes through the door with their book in hand, they open the books. And they usually do this about 2 months into whatever quarter is coming up. And they open the books, they walk them around, they show them everything. And the analyst does all this writing, and they gather all this information, and they take it back to the buy-side institution CEO and say, here's what I found. And then throw it into quantitative analysis that does use some AI. They do a quantitative analysis of what's going on. They evaluate the company, and they make a decision. We can either add more, accumulate more stock in that company. We can slowly rotate to lower inventory mildly, so we have some money to buy this other new technology stock early, they make decisions. And they make it about 2 months before the earnings release, because by 2 months, they can extremely accurately determine what that earnings season is going to be for that company. So you can see all this going on in the charts if you know what you're looking for. But it's a really tight price action, so you have to learn how to see that. Does that answer your question? Okay, are we good? Okay, and within each market condition, there are trading conditions that define strategies to use. A lot of you call day trading a strategy. It's not a strategy, it's a trading style. There are several trading styles that you can use. Who controls price is the number one market participant group. Before 2008, it was the big banks. Since then, the buy-side dark pools have grown enormously. In 2002, the dark pools, the buy-side institutions went to the SEC and said, we need to go dark. Everybody's front running us, and we can't protect the vast wealth of the United States middle class if we don't have something where we go dark. And the SEC, said, yes, you can. Buy-side institutions are called dark pools a lot of times. The buy-sides are the most powerful, dominant, and hidden group in the market. You do not have access to them. There are about 20 to 25 giant buy-sides, mostly pension funds and other huge mutual fund companies that are morphing into much more. Dark pools do not create momentum runs. Write it down. Price is controlled to the penny. They set a time weighted at average price orders to slowly accumulate a stock over an extended period of time. Their activity is mostly dominant in bottoming or platform market conditions, where you can see it, because most of the time people are still thinking there's a bear market, it's going to get worse, it's going to get worse. But once those bottoms start, folks, and the buy sides are in there, they're going to support that market. Even during 2022, when the market was crashing, the dark pool said, we have to support this market, and they moved in. When there's a flash crash, like in April of 2025, they just, the next day, they're pushing that back up. That's the only time that their candles are long, when they support the market. Dark pools create a buy zone that develops into a bottom formation. There is no way to see these activities at level 2 or level 3 screens, no matter what you do. I know a lot of people say, oh, Martha, I found this place on that I can see the dark pools. And I'm going, oh, really? Really? Because I know they can't, because there's no market maker limit order book. It's peer-to-peer. It's all dark. They said, yeah. I said, well, how large are the lots? Oh, 50,000, 100,000, 200,000. We really found the whales. And I'm going, no, you didn't. You found small funds managers with less than $5 billion on assets under management who are trading the public exchanges. And that's what you see. And they go, really? Well, that's a large lot. I said, not anymore. Maybe in 1990 that was a large lot, but it's not anymore. The dark pools will set this TWAP order, and it's got a 25 million lot order thing. And so they'll send it out there, and they'll send little feeders out. And then a broker will light an order saying, yes, I have a 200 share lot order from this retail trader and this retail trader and this retail. And small lot guy is buying 50,000. And so they pull that out into the dark pool, and your orders are filled. And then the dark pools are buying these, right? See? And that's how it works. So you can't see them. Their transactions are off the public exchanges entirely in ATS venues, and it have been since 2002. So it's nothing new. And the SEC knows all about what's going on and keeps an eye on it. The number 2 thing that you really need to be, and I would say you piggyback on these guys, because why not take advantage of the brilliance of these guys? Professional traders are growing in numbers. These are the most talented, skilled, and expert traders in the world. There are 3 categories of professionals you must learn about and learn to emulate. 1, the buy-side professional floor traders who strike the penny or half penny spread. All of their orders are off the public exchanges, hidden in ATS venues. You never see their activity if you're retail day trading and you don't use the stock charts like I teach you. Once you see it in the charts, you're going, oh. You can even see fundamental levels in the charts. The sell-side professional traders, these are strictly short-term traders. They're the big money center banks. There's 5 banks left. There were more. And there's just Goldman Sachs, #1 financial services giant. They at times act as market makers when the market is weaker or stressed or under retail news negativity status, which is common these days. They are the best in the world at what they do, and they mostly sell short. They do all the corporate buybacks, which is a hugely popular strategy for corporations to boost stock prices artificially. And buybacks are all over the place. There's like almost all of the Fortune 500 and a lot of the Fortune 1000s. And there's never been so many buybacks going on in the market as there is this year and last year. Professional independent traders who trade for themselves or for a proprietary professional trading company that provides liquidity and trading services to the buy side. Independent professional traders are a large group you never hear about. They actively trade, but not on the public exchanges. The professional companies trading for buy side needs to boost. We have promised a rate of return this year to our 401k holders and everything that we will maintain at least this level of return on investment. So they're not doing that. So then they say, okay, professional traders, you do some quick buying for us so we can boost our rate of return. So that's how they do it. All of the above have a unique footprint on the stock chart. When they are trading, their orders are routed independently from routing retail uses and often is delayed until after the market closes for dark pool orders. So the dark pools don't want to have it slip out when they're routing, because you could pick it up in the routing. So they wait. They have permission from the SEC to hold their orders that are completed until shortly after the market closes, and then they push all of them to the national clearinghouses at the end of the day. So if you're studying the charts, you have to wait for at least 45 minutes to get all of the data for that day into your charts. For professional traders, this is a friend of mine. She was a high-level options market maker, and we talked a lot about what I did, and she was astounded because she said, Martha, you can identify there's all these option puts on this stock, but the option puts actually mean that there's this huge lot. And she went and searched for this huge lot and found this huge lot. She says, Martha, there's a couple of guys out there with 5 million shares holding this, and they're using the option puts as a mitigation to lower their risk. And so I said, oh, really? I have to teach my students that. It's not like but in the movies. Professional traders do not go out drinking, taking illegal drugs, and chasing women around the world after work. Sorry, guys, it's a hard job, and they don't do that. They go home, or when working from home, they spend time with their families. The most common layout for professionals nowadays is similar to the one shown here, with about 8 monitors, with a powerful computer that costs millions of dollars, routing to a specific ATS or market maker, and insulated from internet electrical failures. So they have backups, so they never go down. You do not need such an elaborate system, but you do need to be able to piggyback and ride the momentum and velocity runs that professionals create with nudges. A nudge is a very small candle, but it nudges and pushes the HFT and the hedge funds and others, because then they think, oh, they found dark pools. They know the professionals are chasing them, and they know the professionals know where they are. So it's this very interesting structure inside. You also need to learn that they are not day trading. Penny spreads do not provide enough profit. So if you think that it's great and wonderful to be a day trader, it's not. The SEC says that about 99% of the people who try to learn to day trade fail and lose all of their capital. That's a huge amount. Students trading as a business, this is a typical layout. You need an office space to do your trading, typically a room in your home, or even a closet if you don't have a lot of room will do. It needs to be separate from private. It needs to be a separate room, private and not part of the family room or where a TV or gaming console is located. That's the one ruling IRS stresses. It has to be a private office, just dedicated just to trading. You will need a quiet place to study and work also, where little ones or family won't interrupt you or distract you. Trading is a skill that, like all skills, takes time to perfect, and you will continually be improving your skills even after you are more successful than you imagine you can be. My students often surprise themselves at how different their success is to what they had prior to trading with TechniTrader. That's my company. Even though you're in a private office, you are never alone. Everything about TechniTrader is private, so no one can see our activities. If you're on social media or in chat room or someplace that's a public thing, everybody can see you. The HFTs can see you. The hedge funds can see you. Everybody can see what you're doing, so they can front run you all day long, and they do. The TechniTrader communities, discussion groups with my professionals, my semi-professionals. So if you're a beginner, it's like, wow, you know, you get to watch these and listen to these guys talking and these ladies talking about what they're doing, and it's fascinating. You learn faster when you're in that kind of group. Student mentoring sessions where we all get together and students give me charts and I read the charts and they study and they see how I read the charts. So they're constantly updating how they learn. And one-on-one tutoring, if you need it, is always available to anyone. Trading tools and resources. As in every business, you will need tools to operate your business on the highest level of expertise and profits. No matter if you become a plumber, you have to have tools. If you become a programmer, you have to have tools. If you're an engineer, you have to have tools. So I provide these. Trading Journal is my journal that I created for myself. It's provided to my students as this provides the written evidence of your activity trading as a business and also historical data to consider and compare over time. And you can even use an AI and go, can you summarize the last 6 months for me? Out it comes. So the Trading Journal is great. You just plug in the numbers and then over time you can use that. This is the one thing that differentiates you from hobby trader to trading as a business for the IRS. It shows that you're actively trading the market. You don't have to be a day trader to be trading as a business. Trade management planner that provides a monthly plan, your trading income that you want, the number of trades you should trade, the capital that's going to be required, the stock price range that you must use or should use, risk assessment versus risk management so that you control that, profit potential and market condition for that month or that period of time. And the trade management planner was developed by Howard Johnson, the co-owner of TechniTrader. And it was amazing when I walked in and he started showing me this and going, my students need this. My students need this. So that's part of the program. Trade calculators, other tools that streamline accuracy and execution. The single number one reason that people lose money is mathematics. Your math is off. And so you're not calculating your risk properly or your entry level or whatever. Trade calculators are also included because they're essential to your training. Scans, sorts, layouts, and parameters. I share all this stuff with my students, and we're continually updating and changing and modifying these as the market changes for your trading styles and preferences. You may have two trading styles. Usually my students do swing and platform position because it just makes it easier. Trading simulator, it must be a real simulator and not a game simulator. A lot of charting companies now offer an embedded simulator. That's awesome because then you get to feel like it's real time and you trade and you simulate how much capital you actually have. You don't simulate 2 million if you don't have 2 million. Market condition analysis scans. These are my scans. I'll show them in a minute. Test what will tell you what trading styles and strategies to use. Controlled bracketed order type. Howard Johnson called up a New York Stock Exchange market maker when we were just starting our first courses, and then market maker was so astounded with what Howard had come with, even though he's just an educator. He asked Howard if he could have his bracketed order type. And Howard was, of course, delighted. And I'm going, duh, you're delighted. I mean, I was just shocked that he even had a chance to talk to a market maker because market makers doesn't talk to anybody at all. And so that bracketed order is still taught in our courses and it is still used by professionals. Brokerage account that is designed for trading as a business. I know you all love your smartphones and you want to have it on the smartphone. But if you're getting serious as trading as business, you also need a brokerage account that's tailored for this kind of semi-professional level. Morning market and morning market open reports or market condition reports are something I write every morning. It is as part of a subscription as you start your course. Daily market educator, discussion groups, communities within the TechniTrader student only private campus. It's important to have a private campus. Otherwise, if you're all talking and you're on social media somewhere, Instagram or something, and you're all talking about TradingView, anything that's open, you're all talking about something, HFTs are listening. They're all listening. They're all listening to see what you want to do, and then they front run you. Okay, market condition scans. I built a long time ago because I realized that futures tell you how the market opens, but it doesn't tell you necessarily how the market's going to go the rest of the day. It's just about futures. Okay, so I say, give me all, it's like an AI, give me all the charts, stocks that have moved up with momentum at the end of the day, all the stocks that move down. This gives me the bias for the next day. Is the market moving to the upside the next day or moving down the next day? It's very accurate. My students tell me I have a 95% accuracy rate. I don't know. I never bothered to check. Then I ask for all the institutional activity, and I know HFTs are chasing those and professional traders in there. So it tells me where the dark pools are. Then I ask for all the bottoming stocks because I know, even though it's an early bottom, that the dark pools are doing this. So I track how many of that's going on. Then I track the professional traders with a consolidation because all their tight penny price action is very, very narrow. And I know that consolidations will bring that up. Then I ask for all the stocks turning in trading ranges. That gives me an idea of how many stocks are moving in a trading range versus, and then if the sell side is high and the bias is going to be to the downside, and that also the indicator for the trading range going down, that's a signal that we're going to have some selling going on, and it could be short term or intermediate term. That's nice to know ahead of time. And then I say, okay, I want to know about, I have a schedule, what's the price is today versus the price X number of days ago. It's usually the number of days in an average trading month, so the trading days in the month. And then I compare prior price to current price, and it tells me whether there's price improvement, because sometimes it just feels like the market isn't improving when it really is. So market condition analysis tells you who's in control of price at that moment, dominating. What technical patterns are prevalent and reliable, because it changes in each market condition. How price will behave at resistance and support, that also changes. Velocity market resistance just gets blasted through. What trading style or styles work best for that market condition? Which indicators to modify or adjust and how you use them, because it can change on the market condition, because there's 6 different market conditions. The inherent risk of trading specific styles in certain market conditions. It is very risky to be day trading in a velocity market because it can whipsaw in a New York minute. What trend line patterns are common? I'm the only one that actually teaches trend line patterns. You learn uptrending, downtrending, neutral, or non-trending, and that's about all you learn, or you learn Elliott waves and sort of things, but there's also patterns. With each, which entry signals and exit signals are most reliable? The entry and exit signals have to be candlesticks. Price is pure. Pure price is the most important indicator you have. But there are new entry prices. If you've done Steve Nielsen's candlesticks or any of the other candlestick experts, they teach you the candlesticks of the Japanese Rice Commodity Exchange. We're the US stock market, the largest in the world, and our candles are different now. We have pole vaults, we have hurdles, we have nudges, we have setups, we have nesting candles, we have resting day candles that are not taught in those books, and that's what I teach, are the Western candlesticks that goes for our market structure. The strength of price and volume patterns. You must understand that volume will often lead price. Market condition analysis tells you how and when to trade, which market participants are actively trading, which are sidelined or waiting, where we are in the overall long-term, intermediate term, and short-term trends, which are important because you could hit resistance with a swing trade and not even know it. This provides the relational analysis needed to navigate the complex market structure of today. So relational technical analysis is the next tier of technical analysis. You all know some technical analysis, or you will be learning it. Relational is that next tier that makes you semi-professional to professional. So custom scans for stock trading. Custom scans come with the Methodology Essentials course. These can be easily modified to fit your personal trading styles and criteria and take the work out of finding stocks to trade. We have an extensive library of scans that are available with your course to simplify and streamline your trading process. We support a couple of the three or four charting software companies, and then we can give you the formula for the rest. We also provide custom proprietary hybrid leading indicators with your course, which I developed personally. These are unique indicators that reveal dark pool zone buy zones, dark pool accumulation or rotation, and to lower inventory. So these are very important indicators because they lead price. They literally tell you in advance. Hybrid leading indicators signal before price moves. Right now you're using MACD, stochastics, Bollinger Bands, AD, whatever. But the problem is that they're all price-based. And dark pools, what do? They have massive volumes, right? Right? Okay, so you're using the wrong indicators. You need to be using dark pool indicators that show where they are. This ensures more profits with less risk. So hybrid leading indicators, we always have to track volume. Volume is very important. We also have a shift of sentiment right here. So there's some small funds managers dumping, and then the dark pools start buying, and then small funds realize they're on the wrong side of the market, and the pro traders are nudging, and then it moves it back up. So the shift of sentiment is very important. When you have a spike to the top of the chart here, this leads one day is telling you the next day this stock is going to have a correction. Wow. So it's pretty cool to have these because they lead price. All right, we're going to get into the final summary of this really quick. If you're a beginner, you want to come to our website, you have to register, but it's worth it. You will learn a great deal in the introduction to trading. For everybody less than 1 year. If you've been trading for 2 to 5 years, then go to the professional trading plan and study that. That's going to be super great. And relational technical analysis is for those of you who've been trading for 10 or 40 years, and you're not going to be able to retire because you're still struggling. Relational technical analysis takes you to the level where you will be able to figure it out because it has what you need because of what we are now in our market structure. So and there's others that are free. They're all free, and you can study. But it shows you how we teach. It shows you how it feels to be a student, and either you like it or you don't. My students love being educated. They have a passion for the market, and they're very interested in it. So trading as a business changes how you trade, not just what you trade. When trading is treated like a business, every trade fits inside a defined process. Market condition determines how and when you trade. Capital and risk are planned before entries. Performance is measured over time, not per trade. The Methodology Essentials program provides the business framework for a repeatable process, market condition to strategy to execution and to management of the profits. Rules for when not to trade as much as when to trade. Alignment between the framework's risk tolerance and trader goals. Alignment between timeframes. Consistency that does not rely on constant screen time and trying to predict. The word prediction doesn't mean the same thing to retailers as it does to professionals. Prediction means probability, not predicting the future, okay? All my students are, it's amazing. I've been so blessed. We have a Better Business rating of A+ for the past 27 years. We've never had a bad rating. And our students are so excited and have so much fun trading and are making a lot of money. They did extremely well last year, and they're setting up for another banner year because we're in a great bull market, folks. We're in a great bull market. And nobody believes it, but we are. So you come to the website, there's like 50 some pages of not unsolicited comments. So you can have that. So this is our special for the day. You get to watch how professionals trade, read the market condition each day. It's the Daily Market Educator. My Daily Market Educator is a subscription service. 30 days comes with your course, and it teaches you. It teaches you all kinds of things. We're talking about CRM and all these other things. Read market condition every day, because I publish it every day after the market closes. Verify institutional pressure and dark pool activity. Where the heck is it and how strong is it? Because sometimes they'll just sit back and wait. Decide when and when not to trade, because not every day is a good day to trade. You'll be managing your trades because you'll have open trades for extended periods of time, and you'll be actively trading in a different way than you're trading right now. Adjust styles and strategies as conditions change, because you have to modify things slightly, and it's easy to do. You just pick a different scan, you just look at it something differently. This is the same process taught step by step in the Methodologies Essentials training program. Now, if you guys, some of you are ready to go, you can just contact us and we can get you started on the methodology. But for the rest of you who want to experience us, you get to come to https TechniTrader.imDME preview. You have 5 days of a complimentary access to our daily market educator that I write every day, and it's published in the afternoon. You have to sign up within 24 hours to opt in. You'll be able, by the end of those 5 days, you'll know if I can help you or not. It's that simple. And these are some of the topics that we had recently. A lot of times the students are asking questions about this. So you have professionals asking questions, and I put them on the DME so everybody can see them and read them. And it's very insightful. It's very educational. You'll love it. You should try to get there. I'm a little over time. Okay.
Thank you, Martha, for noticing that. Can we answer some questions real quick? Is that possible? Sure. Okay, I shared your link, so that's good. Let me see. Okay, so Tim's asking, can all this be geared to things you already have learned and indicators and strategies you already have? So Tim wants to know, can you integrate this into stuff that you already know?
You must integrate what you've already learned, because that's your foundation. What I'm doing is I'm building it up. I'm not getting rid of what you know. You build upon what you know.
Juan is asking if I'm traveling, what type of laptop do you recommend? Juan, I don't know. I think you get yourself an AMD chip. I prefer AMD chips. Get yourself at least 16 gigabyte of memory. I like SD and HD. So anything else you think, Martha?
Yep, that's perfect.
I think so. Yeah.
Absolutely.
Sandy wants to know, I guess, how do you stop like big firms? I'm just paraphrasing. How do you stop big firms from collecting all of your data? How are you able to serve the smaller customer and you don't get like overwhelmed by the big firms? How are they not taking your business? How are you able to serve the retail customer, I think is what Sandy
retail customers,
and not the big guys.
My legacy is to try to help as many retail traders as I can become semi-professionals. That's my goal. Is if you learn this, then you're trading with the big guys rather than against them. The retail news is just fraught with misinformation. 90% of it is inaccurate. If you come and join me with this daily market educator, I'm going to be talking about that this coming week.
All right, I think that's all for the questions right now. I think we're at time. Is there anything else that we need to say? I
think I probably flooded.
Yeah, you did great. Thanks. Thank you so much. Thank you for just bringing us in with starting off with the basics of, what are some of the common things you need just to get started to appreciate starting with that. Thank you so much.
Thank you. Bye-bye.
Thank you. Thank you, Martha, for those powerful insights on structure, discipline, and professional trading. Martha has also shared a special link, which I've posted in the chat, so be sure to check that out. She has amazing experience, so many years, and she's just there to help others mostly, so please take advantage of that. Okay, so let's move on to our next presenter. Our next presenter is Headley of Big Trends. Price will be showing us how he trades options on Tesla, one of the most liquid and volatile stocks in the market, using price action gap patterns supported by simple moving averages. He'll also explain how overnight Tesla option trades are structured for momentum opportunities. So please welcome the great Headley of Big Trends.
You're too kind, Anthony. Good morning. How you doing?
I'm good. Thanks for your patience. We ran over a little bit. I appreciate it.
No worries. Always a pleasure to hear Martha as well. So let's see. What do we have for? Let me see. Sharing my screen. 1 second here. See if we can make me presenter or what have you. There we go. And share it right here. Make sure, is that coming through?
Yes. Yeah,
Oh,
we can see
great.
that.
Ready to roll. All right, let's roll then. Thank you so much, Anthony. Great to be with each and every one of you. Good morning. It's all about, taking advantage of opportunities. But I guess, one of the things in my 30, whatever it is, 36, 37 years of options trading experience, I think one of the things that you want to learn everything, right? You want to feel like you can cover the entire basis, but then you kind of come back around full circle and you say, I've got to get focused. And you've got to get focused, folks. You can't be trying to be a jack of all trades, all indicators, all things. You're much better off to get zeroed in, laser focused on just really becoming good and ultimately great at one potential pattern, and even better on one potential stock and or index. And so we've a lot of our growth here at Big Trends, now on our 27th year serving the trading community has really happened in the last year or two, geared towards adding just single ticker strategies. And TSLA, of course, is one of the ultimate best for trading because it moves so much, right? Whatever you think about Elon Musk, you don't get to be the richest man in the world by being, underneath the radar, right? He's out there, he's a target, for better or for worse, but he makes stuff happen. And so you can say all you want about him, but Tesla's been a great stock. And of course, now you're talking about Musk potentially IPOing SpaceX this year. Of course, he's got so many irons in the fire. I don't know how he has enough time in the day. It's pretty amazing what he has achieved. We're just focusing on one piece of that with Tesla, right? So, and Tesla's options are some of the most active. So the bottom line is that, okay, how can we do it? How can we focus? We're going to simplify it. We're going to look at just simple price action patterns here along with moving averages, right? So we're going to take it about as simple as it can get in terms of trend analysis and walk you through it. As we get things started, let me just remind you that the information provided in today's presentation is based on our proprietary research. It's intended for illustrative purposes only. What we talk about here should not be considered specific advisory recommendations. As you know, stock and options trading have got large potential rewards, let's face it. They've also got large potential risk. We're going to talk about both sides of the coin today, how you manage winners and how you manage trades that don't pan out too. You've got to be able to manage both. The past performance of any trading system or method is not necessarily indicative of future results. We all know that future results are going to vary. A big part of your trading success and investing success will come back to how well you're able to consistently execute your signals, whatever you're trading, through the uncertainty and to keep on being able to fire. And so that's why I always tell people when you're getting started, start small. Trading is scalable, but you're in the first process. Your first goal should not be how much money you make on your very next trade. It should be about continuing to build your confidence in your ability in yourself to consistently execute your signals, both when they're working and when they're not, right? You got to keep firing, but keep doing it at a small scale. That'll keep you in the game for the long haul. See our terms of use on the bigtrends.com homepage for more here. Now, we're going to talk about weekly options on Tesla. And the nice thing about weekly options is that the big name stocks all have weeklies that have every single Friday afternoon expiration days, okay? So, of course, we've got a holiday shortened week coming up. The markets are closed on Monday for the Martin Luther King holiday. And the bottom line is that, of course, that impacts, how much time you have till expiration. And so we will still monitor that carefully, but we'll be looking at any signal that we get in the next couple of trading days still could be this coming Friday expiration. But when we get too late in the week, we'll go out to the next Friday's expiration. We'll show you a bunch of examples, success stories of how that works, what the trades look like when we get in, when we get out, winners and losers. We'll look at both sides and walk you through our Tesla options trader strategy with a reveal on kind of how it all focuses, just focusing on Tesla, just really zeroing in, not being distracted by all the other news and noise that's out there. Let's face it, there's a ton of noise out there, right? You've got to be able to cut through that and say what's important. So of course, the market's closed Monday. You could get a new trade on this system as early as Tuesday afternoon. We're looking for doubles. And we're looking for doubles typically in just one trading day. So we never have a day trade getting in late one afternoon, getting out the next trading day. If you don't know me, I've been trading options for 36 years. It'll be 37 years in April. That I got the trading bug when I was a student at Duke University back in the late 80s and really saw the power of the markets and loved the liquidity of the markets. Some people say, did you change your name with a name like Price to get into the stock market? But actually, I come from a long line of thoroughbred horse breeders and owners and racers. And so I told my dad I wanted to do something more conservative than thoroughbred breeding and racing. I wanted to trade options. He thought I was nuts. Here we are now, 37 years later, almost, and basically blessed to have served people in the past 27 years with Big Trends analysis since I launched the company back in November of '99. Now, it's all about a systematic approach. So you've got to focus on executing your system consistently and never getting emotional. You've got to take your emotion. And the most expensive 3 letters that I've ever experienced are the letters E, G, O. My ego is my biggest enemy in my trading. My ego, what does your ego want? Your ego and my ego, our egos want to be proven right. An ego thus gets stuck holding losing trades too long, taking winners too quickly, doing basically all the wrong things in trading, right? You've got to be able to get more out of your winners and be able to cut your losers quicker, get smaller losses compared to your winners typically. So let's get into it with the charts. Tell more than worth more than 1,000 of my words. But the idea here is that, you know, show you the trades that worked, also trades that didn't, and go into more detail how the strategy works. Okay, so here is a daily candle chart on Tesla looking back this past month. So a lot of December on this chart. Well, what we're looking here is daily candles. So we're not trying to, you'd think if you're in and out in 24 hours or less that you want to be looking at intraday charts. I don't, because again, the noise is my biggest enemy as a trend trader. I want to find the true trend, and I don't want to get whipsawed or faked out by the false moves and the moves where there's just a little bit of an adverse move against you and you overreact. You get emotional, you get reactive, you get in trouble, right? So what you see on this daily chart is that we also have plotted a simple moving average on here in the light blue line. Now, I don't give away settings in these free overview events, but you know, it's one of those things where if you know moving averages, you know, you're just looking at the last however many bars closes. You're not even looking at highs and lows with a typical simple moving average. You're just saying if I've got a 100-day moving average, I'm looking at the last 100 days closes. Guess what? If I'm at 10-day, the last 10 days, whatever it is, the more that stock is rallying, the more it's going to be basically pulling up the moving average and, more importantly, breaking out above that moving average of the prior closes. So the point being that we will never take a bearish trade. Buying a put option is a bearish trade strategy. We're going to buy a call if it's above the moving average, if it's got the right pattern, but we can never buy a put. We can only consider calls. We're only going to consider puts below that light blue moving average. Okay, so again, that is immediate as a first filter that will clear out a lot of the trend fighting that I see a lot of traders doing, a lot of the disbelief of the trend, a lot of the, oh, this is this red candle here. People say, okay, if I get a red candle on this chart, you know, should I consider put a question mark by these red candles? Say, is that a bearish reversal? Is that a bearish reversal? Is that a bearish reversal? Question mark, question mark, question mark. Those questions are gone with the moving average filter, okay? So you can wipe those right off of the chart. You can say, okay, I don't have to raise a question about what to do. I'm never going to fight that trend, okay? So erase those questions out of your mind. Now it just becomes about finding the right day-to-day setups to catch enough of a move in the proper direction, in this case to the upside above the moving average, to get a piece of it. So we're looking at price action. Of course, a white candle on a candle chart shows you that we close above where we open on these white open bodies with the green candles there. The red ones, of course, we close below where we open. Of course, there are gaps on there as well. So on this particular day, for example, that was December 12th, 2025, it was a Friday. We bought the next Friday's expiration call options on Tesla. Why do we do it? Well, several things happening there. You can see that there is a higher open versus the prior bar's close. So we've got a gap higher compared to where we closed the prior day, right? Open above the prior close. And of course, then we're finishing well above, finishing near the high of the range, closing strongly to the upside, right? So you could say, well, you haven't quite broken out of that high from about a week ago, so shouldn't you wait on that? We're saying, no, we're looking at day-to-day momentum. We're saying, guess what? The institutions were the ones driving Tesla, driving all the major stocks out there, not you and me as individuals. Everybody wants to talk about Wall Street bets and how all the individuals got a leg up on the institutions. So let's face it, the institutions are moving a lot more money around than you and I are, even collectively, right? So the idea here is that the institutions are just like you and me, though, and that they want more of a good thing. When they see something that looks like good news coming, they will start pouring on the gas and the buying power, getting on board, even as the stock has been rallying. And in retrospect, you see that Tesla gapped up on that Monday morning. Why did it gap up? It gaps up tied to there's been multiple times where we've had news about either Elon Musk buying stock, like back in September. I think we got one of those where our system picked it up. We didn't know that when we were getting in. We just knew that the the pattern of the chart shows strong buying, right? Whether it's Alon himself or the institutions or some combination, the idea is that, yeah, we're going to be wanting to take advantage of that. Now, this one was different. Memory serves about a month ago that this is where the news came out over that weekend that Alon, his company Tesla was starting to test in Austin, Texas, their self-driving technology without a driver assist in the car, so without an actual human in the cars. They were spotted just driving around without anybody in the car. Like, they're really expanding their self-driving technology tests down there in Austin, Texas. So people are like, wow, they're making progress even faster than maybe Alon had led us to believe, right? So the stock gaps up on Monday. We sell it out into that strength. You can see we had bought, what did we buy, by the way? We bought when the stock was trading just under 460 on that Friday. We bought the next Friday's 460 strike calls. These are near the money calls. And so we will pay up to and never more than $10 or $1,000 to control 100 shares of Tesla stock. Here we paid 8.80, meaning we paid $880 to own an option that was going to expire a week later, the next Friday, and we've got the 460 call, which basically means we're buying an at-the-money option that's all time risk. So $880. If you sat there and nothing happened by the next Friday, you could lose what you put into the investment. We're not going to sit there till the next Friday. We're going to be out by the next day's close, no matter what. Win, lose, or draw. We only give ourselves a one trading day hold from one afternoon to the next trading afternoon. So on a Friday afternoon, we can hold it as late as the end of the day Monday if we haven't gotten our double target. And if we haven't gotten our price stop is a 50% price stop, right? So we're targeting twice the gain relative to the risk. Okay, now in this example, think about this for a second. You pay $880, seems like a lot for one options contract, right? But think about this, it's controlling 100 shares of Tesla. How much would you pay if you bought 100 shares of Tesla there on Friday's close? You pay at 460 about 46 grand, right? So you're still getting about a 50 to 1 theoretical leverage when you control 46 grand worth of stock for under 900 bucks, right? So the idea here is that, okay, we're just looking to double it. We're not, sometimes we'll get gaps past a double. We may have a couple of those on these charts, but the bottom line is that, you know, when we get a double, we take the money and we run, right? Because it's happening within the next trading day or else we're out, right? So we don't try to hold for more. We don't get greedy. We don't try to sell a part of a position and hold the rest if we had multiple contracts. Our objective here is, we're using an example of, say you put in $1,000 a trade maximum, right? So you're going to at least get one contract, at least control 100 shares on each of these trades. So I'm not trading for maximum contracts, by the way. I'm trading for what I think is the right option to buy. You see how far Tesla went, just over 480 that next trading day, right? We were out before then because, of course, at 480, it'd be worth 20 bucks intrinsically. We were out at the double target. 880 doubles turns into 1,760 bucks there on our closeout on that Monday. We're saying thanks very much, Tesla, and then the markets were locking in the double and moving on. Again, we didn't know that news was coming out per se, but we knew that the buying pattern was a good daily chart set up to want to play follow through momentum into the next trading day, whether there's news or not. Probably the only time the news that we would know about that we wouldn't necessarily try to trade right in front of would be earnings. I'm not playing for earnings gaps. Obviously, earnings are a known time when the earnings are going to hit, but you pay up for the earnings, right? We didn't pay up. It seems like it's not cheap, but it's not that expensive, really. Less than 2% of the cost of stock, only in the trade for a day, and we'd be out win, lose, or draw by Monday afternoon at the price target, the price stop, or the time stop. We send follow-up emails, email entry and exit instructions to all subscribers, and then also in real time, and then also you can get set up for text alerts as well. So we'll get into more examples, but some of the basic just guidelines here. We're going to hold it up to 24 hours in market terms, from one trading day afternoon to the next trading afternoon. Okay, we will never have a day trade because we're going to get in the final half hour of the trading day to make sure that our daily chart is setting up properly at the end of the day. I don't want you to be overreactive at the beginning of a day, think you see a breakout, and then by the end of the day, it's totally reversed on you. You're like, oh, that wasn't a signal after all, right? I want to wait till late in the day to make sure my daily signal is valid and to get the benefit of buying late one day, selling out as early as the next morning, never having a day trade. So this works for even small trading accounts where you don't have to have a ton of capital in the markets. Now, we're going to look at 3 different price action patterns. 2 of them are bullish, 1 of them is bearish. We'll walk you through some more chart examples there. We only trade the weekly options, but we alternate between the same Friday expiration. If we're early in the week, like on a Monday, Tuesday, Wednesday, of course, the markets are closed this Monday, but Tuesday or Wednesday, if we got a new trade, we'd be trading this coming same Friday, same week expiration this coming Friday. That'll be January 23rd expiration. That's what they call the week 4 expiration. Now, for January, the bottom line is that if it's a Thursday afternoon or a Friday afternoon, we go to the next Friday because we don't want to hold an option into the options expiration day with this strategy, okay? I'll show you some more examples, but just basic principles here is that we'll try to get the alerts out in the last half hour, give or take a few minutes, right? So 3:30, 3:35 p.m., even 3:40 p.m., that still gives you enough time to get in before the Tesla options stop trading at 4 p.m. Eastern Wall Street time. So you can do any platform too. It's not platform dependent. Any platform you trade options on, you can for stock options like Tesla, you can use this strategy. Okay, so you just log into your account once you get a new alert from us and say, okay, I determine how much I want to put into each trade. Okay, if it gets me one contract, if it gets me more, whatever, it keeps you consistent in your capital allocation. If we say get in up to X price, if we say get in up to $9 and we get filled at 880, okay, well, now 880 is your entry. Then you put a target at double what you pay and a stop at half of what you pay. Okay, so this will help you to really not just eliminate a lot of noise by waiting to the end of the day. It also allows you to not have to screen watch. It really leverages your time, right? So you know that you should see a trade within minutes of that 3:30 window. If you don't see one, then we don't have a trade on that day. We're not going to trade every day. We'll probably have about maybe 7 or 8 trades a month with this strategy, about 2 a week on average. So we're not trying to be heroes every day. We want to pick our favorite patterns, our favorite setups. And then when it's not the right setup, you know when not to trade too, but you just won't get a trade signal. Of course, you can always call our 800 Big Trends number if you've got questions about if you think you missed something or whatever. But the bottom line is that, look, it's all about keeping it clear, keeping it time managed. You don't have to invest a lot of time to follow the markets. You don't have to invest a lot of time to place the trades. You know exactly what we're looking for. So once you're in, you know what your double target is, what your stop is. We send reminders, so you don't have to worry about that. So you're always being reminded, hey, we're getting out here. You should be out. We're out. Okay, so that way you're never left hanging. So you get a lot of bang for your buck, obviously, with weekly options. Like we said, 46 grand worth of Tesla control for less than $1,000. Our average contract entry price going back to the beginning of 2023, so now just over 3 full years of data, is just under $600 a contract, 580 per contract on the entry on average. Okay, sometimes it'll be less than 5, sometimes more, but the idea is that we want to buy the right type of option. We'll always get out by the next trading day at 3:30 p.m. Eastern if we haven't gotten our profit target or our price stop hit. So this way you don't get into that hope mode. Hope is not a strategy, right? Hope gets a lot of traders in trouble. Our objective is to say, look, we've got a number of examples where we'll show you, hey, we can even be ringing the register, booking profits one afternoon, and then rolling over and going on to another option, another strike price for the next trading day, right? So we've had times we go back to back to back with different option choices, and it just keeps rotating to what we think is the properly leveraged strategy. Now, to avoid me just cherry picking 1 or 2 trades, say, well, what if you took every trade that this system called out, going back to the beginning of 2023, right? So like we said, just over 3 full years of data now with a couple of weeks into the new year under our belt as well. You see that if you started with a $25,000 model portfolio and said, I'm going to put in just $5,000 a trade, you'll never have more than 1 trade open at a time, right? If we're getting into a new trade, you're already closing out the other trade. So keep rolling that over. So you're basically, starting out with just a maximum of a 20% commitment into any one trade. And then as the portfolio grows, keeping it fixed at $5,000 means your actual risk as a percentage of your portfolio goes down as your portfolio goes up. Okay, so we're not compounding our amount invested per trade, we're keeping it fixed at a maximum of that 5,000 in this example. So your portfolio grew from, in the past, just over 3 full years since the beginning of 2023. System trades called out $102,000 plus worth of profit. That's gross before commissions and before subscription investment. So 25,000 grew to over 127,000, 127,651, again, gross before commission and subscription investment. Like we said, commissions have come way down, right? Commissions are no more than the bucket contract on each side. So if you're doing a 1 lot in and out, that's a maximum of $2 commission. Some brokers aren't even charging a closing commission. So the broker price wars have massively helped you and me as off the floor options traders. Best options trading environment in that sense I've ever seen in my 37 almost years of options experience. Now, we're reminding you that we're looking backwards. Past performance cannot guarantee future results. We know that future results are going to vary, but the big secret to staying in the game for the long haul is starting small, building your confidence, letting the system prove it to you, and then just consistently executing on a small, steady basis. It's definitely one of those tortoise beats the hare kind of analogies where staying small and steady will beat going all in or picking and choosing, and then you won't be confident if you're playing that picking and choosing game. You got to just keep on taking each system trade. Remember, we're playing a probability game here. Probabilities means you're going to have times you win and times you lose. That's the nature of probability. But you still have to keep firing, even not knowing what the next trade is going to do, to say I'm following a system, I'm following a pattern, I'm following an edge that I'm looking to cultivate over a longer sample of trades. So we're looking for 3 different price action patterns tied to the interplay between gaps and candlesticks, and then that moving average filter. So 2 of the 3 patterns are bullish, one of them is bearish. If we don't see one of those 3 patterns, then we don't take a trade, right? We never trade for activity. We don't trade just to be in the game, right? A lot of people make that mistake of saying, you're used to going to work and doing something every day. You're used to going to school and studying and taking tests and doing something every day. But the reality in trading is that if there's nothing to do, there's no point in putting capital at risk if you don't have an edge, right? So that's a big shift for a lot of people coming out of both our educational system and our kind of typical career system of thinking you got to do something every day. You don't. If I don't have an edge, I don't take a trade. That's part of the secret of staying in the game until you have an edge to strike when the iron's hot. So like I said, I don't give away the settings here. When you become a subscriber, we do give all paid subscribers all of our system rules, system study, a strategy session, kind of going deep into how to apply the system. So you do learn how to trade it once you become a subscriber. Like I said, we're using a simple moving average to filter which is the general trend direction. Okay, that alone is a huge stress reliever. It's a huge kind of not putting yourself in harm's way so much, right? Every trade you place has risk, right? You still will have times, even the moving average backing you up, there are going to be times where you still don't get your trade fired, where you still get stopped. It's part of trading, but the key is it's about playing that odds over a long enough sample of trades to say you're not fighting the trend, you're aligning yourself with the trend. That's a huge difference to get yourself on the right side of where the stock wants to go, in this case Tesla. Now when we're talking about these patterns, price action combined with candles, we're really all about just kind of lining up these things. When do the edges say that when we look back typically over 10 years plus of data, however long it's been since Tesla IPO, it might not be quite that long in Tesla's case, but the idea is that we've got many years of data. We're looking at all those for Tesla, say where are we getting the edge? If we don't get an edge, we don't trade. Bearish trades will require a little extra confirmation because more often than not, Tesla's gone up than down. But when it goes down, it can go down quick too, right? As they often say, stocks take the escalator up and the elevator down, right? But we're never going to see us calling a top after a big run up. We're going to wait till the moving average rolls over. Here's an example where it rolled over to the downside, right? So on the left side of this chart back in early November, we wouldn't be taking bear trades. You can see as we start to break down, we come back, we kind of retest into that moving average here, we stay below it. And so now the trend is changing. But guess what? We didn't actually take a new put trade in that breakdown cycle until we got the gap down and the follow through hard on the downside. That told us that that stock had even more potential the next day to go yet again even lower. So at that point, late in the day, and a lot of times people will say to us, like especially new subscribers will say, why are you getting in here? You've already missed it. That feeling of you've already missed it, that's not what we're that's like kind of the beginner sort of amateur feeling of thinking like, well, by the time I take the trade, it's probably the end of the move, right? That sort of paranoia if you've been trading for a little while and you feel like you got burned on some breakouts that turned into fake outs, right? But we're looking for just the proper setup. Remember, we're using leverage in the form of options, or we're getting, like we showed you before, like 50 to 1 theoretical leverage. This is one where we actually bought an even cheaper option than we're used to. We bought a $2.04 entry price option here. That was on a Thursday. We were betting on the downside. Stock's trading near 400. We buy the 392.5 calls, 400 on a Thursday. Buy that option almost 4% out of the money and the next day it gaps down to like 385. By the time we're getting filled, it's pushing it's pushing down towards like 382 or 383, I guess, maybe 383 and a half. We're basically getting out at $9 that next morning, right? So we paid 204, we got out at $9. This is an outlier. We don't expect to get this much of an edge over our double target, but this one was one of those where we took advantage of this pattern, leveraged it with a very short-term option, and took advantage of that 341% gain, right? More than a 4-bagger, almost a 4.5 bagger. So if you, in this case, you would have bought 4 contracts on $1,000 for $816 and turned that into a $2,700 plus profit. So it just shows you like how fast you can get things working for you when you are patient, when you wait for the right setup, when you don't overreact. Because one of the worst things you can do is say, oh, well, it looks like a breakdown when we just start to come underneath this moving average right here. You buy a put there, and then the next morning you're getting, or next day you're getting stopped out up here, you know, from first X to the second X, right? You don't want to just be too premature thinking that one bar, one candle might make a trend. We're usually looking for like a series of candles to line up, and it's kind of a process for trading trend changes. That, you know, it's like, you know, the rest of the market had seen Tesla going up, and so the question is that they're thinking, oh, is this a buy the dip opportunity? Well, for a day it was, but you see then when it rolled over hard. Now you look at this chart before I even mark it up, you say, which direction are we trading? Only to the upside, right? We're above the light blue moving average. We can only buy calls. But we love the pattern where one of our other patterns is, in addition to trading that upwards momentum, is when you get a lower open versus the prior day's close, you see how it even undercuts the prior day's low here. We called this the flush, where a lot of people will set their stops if they're bullish underneath the prior bar's low, and they'll keep kind of trying to raise their stops. Of course, you'll see how many times you can get whipsawed on this chart alone with being undercut from one day to the next and getting stopped out at losses while then it reverses back up. We're waiting for that pattern to flush and then to reverse. So as my late friend Steve Bigelow called it the J hook. When it trades lower and then reverses back up, that looks like a J, right? That we're showing that almost kind of fish hook there, where you basically, the J hook, Steve called it, basically that's the kind of reversal pattern when you see that. Other people are getting faked out. They're getting flushed out, they're getting stopped out, they're getting left on the sidelines at a loss or less of a gain, and then they're basically on the outside looking back in, saying, should I get back on board, right? And so it's reversing back up, you're getting the buyers coming back in. We're buying those calls right into that close. Stock's trading about 442. We're buying about 10 points out of the money, 452 and a half strike calls. That was happening on September 30th. That was a Tuesday. We're buying out to the October 3rd expiration options. So when we buy on a Tuesday afternoon, we've got 3 more trading days to go before expiration, but we know we're not going to hold it past that Wednesday afternoon. That next trading day is October 1st. So you see it opens kind of flattish, and this is also why we give it a little room. You see that where we close it maybe 442 or 443, we trade back down to 440 on that little V pullback that next morning. So if you put too tight of a stop on these trades, folks, you will often whipsaw yourself out. If you're like, well, I won't take a 50% stop, I'll take a 20% or 25% stop. A lot of times you get shaken out, and then Tesla will rip on up by the end of that day. In this case, you see it popped all the way towards 460. And at 460, of course, you say, well, how are you able to, you get in at 755, that's worth like $7.5 at 460. But of course, you have still 2 to 2.5 days worth of time left in these options as well. So we're able to get our target up there at the 15.10, make on just one contract, make $755. Say thank you very much, back to the sidelines, waiting for the next opportunity from there. Now back in September, you know, we caught actually part of this big surge up here back in the week or so before, which I think we might have a couple of charts for you on. But then even after, this is where it was announced that Elon himself had bought almost $1 billion worth of Tesla stock himself there in that second week of September. And point being that even as it kept on grinding back up, we said, look, this still checks the boxes for us as a pattern. We're trading here to get in at 720 on a 437.5 call. Stock's trading about 425. See, the next day it goes to over 440, right? So that's a nice 15-point move. We get about half of that. We get about 0.2 of those points and make our 100% profit target intraday. Now, this is why we take the bird in the hand, right? Because by the end of the day, it's reversing back down, and you wouldn't be sitting on a double at the end of that next day after we got in. But we were there intraday. Anytime you get the chance to take a double intraday, you take it. So you just got your order working. You don't have to screen watch. And then if you're not getting filled, we'll send a follow-up reminder there at 3:30 on that exit day. So we got in on Friday, got out on a Monday. So on Monday afternoon, if we hadn't gotten filled, we'd say, okay, 3:30 is time to get out. Here's your exit criteria. Go on, get on out before that day's closed. So we're always reminding you what to do. Now, how about downside opportunities again? You see on this chart, only when it breaks down underneath the moving average, in this case with a gap down, see the lower open from the prior day's close happening right there, and then closing hard down, closing right near the lows. You know, a lot of people would say, man, isn't that thing too oversold? This is obviously in a prior period when the stock was lower. But you get the same idea here that, you know, we're betting there's going to be follow through the downside. So that's where a lot of times we get paid very quickly from one afternoon to the next morning. It's not always going to happen, but we're definitely trying to play that follow through gap effect. In this case, to the downside, we're expecting more downside pressure, and the selling pressure has just been heavy. And so the odds are that, hey, there's bulls that are feeling the pressure that are getting either stopped out, or new bears that are coming in, adding to the selling pressure, more short sales and what have you. So point being that, okay, we called out to buy it at the money put option, paid $3.80 for it. Next morning it gaps down, we make our 100% right off of that open. You see though, a couple days later it gaps again to the downside. Here's an example where it did not give us our double. So this is where the time stop kicked in the next afternoon. We got in at 395 there, right near the end of the down, that next gap down here. The stock's trading just about 150. We're buying a 143 put. The options have gotten more expensive because it's been going down so fast. Volatilities are jumping. And so we're 7 points out of the money, paying 395. It does pop down about 4 points, closes down about 3 points. We make 1 point, $100 a contract, 25% gains. Nothing to shout about, but we clean it up and move it on. And you say, well, gee, doesn't that look like a bearish pattern? Shouldn't it go down the next day? Don't come up with any rationalizations. Just say, look, we are trading a follow-through momentum pattern into the next trading day. If it doesn't follow through, doesn't give us what we had hoped for, that's okay. Bottom line is that we will just follow what the market is telling us, what Tesla's telling us, and say, just cut and run, take the 25% here and move on. Here's another time stop example when they don't get to their targets, another bearish one actually here. And here's one where you say, why'd you get into puts when it looks like it's reversing back up? But you can see that it actually, not only did it close lower, gapped lower, but it also basically, you see, is essentially undercutting the prior support as well. So basically everything still checks the boxes that this is still not out of the woods yet on any kind of major reversal. And what's the other key? We're below our moving average, right? So even if you believed in the reversal, which we didn't, but even if you did, you would not buy calls there. You couldn't buy calls until it started trading back up over that line, right? That's one of the things that just keeps you out of a lot of trouble, keeps you out of a lot of second guessing. Because I don't know about you, but the second guessing is where you can really get to yourself and really hurt your confidence and really hurt your conviction and belief in what you're doing. There's no room for that. You've got to just be really clear when the odds are in your favor, where you trade. If the odds are not in your favor, you don't trade, right? That's how you can protect your capital in addition to making more on it. Now we talk about, okay, that was a little more expensive option, 965. So it's a little harder to double that one, right? To get it to almost 20 bucks, 19.3 was our target, but we didn't get there. We got to 1375 that next afternoon. We take that 42%, or we say, okay, fine. You know, even on just on one contract, I make 410 bucks and say, moving on to the next trade. Now, could we have gotten back in? You know, if we have the right setup, we could into a different option. But the bottom line is that they're not all going to work, right? Here's an example of a trade we thought would work. It didn't. It got stopped out. So here's one where we're above the moving average, getting a nice reversal back up. This is back here. You can see they're in early October setup where we're coming back up here. It looks like a positive time here. We're just under 250. We buy just slightly in the money 247.5 calls. We paid 570 for it, about 2% of the cost of the stock, or just over that. And then you see the next day, instead it gaps down and keeps going down into your day and stops us out at a $290 loss a contract, right? So So the idea of 51% loss, give or take, and you're like, well, it's still holding the moving average. You know, could you have hung in there? No, we're just saying it didn't do what we thought, it didn't bounce back like we thought. We're done, we're out, we take the loss, and we go back to the sidelines. But sometimes you get gaps even past your target for winners that are large enough. Remember what I mentioned about Elon buying back there in September? You know, he was buying. That news didn't come out until that weekend. This was a Friday entry. We had picked up on the Thursday on 9/11 too, but basically the Friday entry, we got back on the wagon, bought the 405 calls, 725 a contract. So that would still just get you one contract if you're putting in $1,000 worth. If you're putting in 5,000, it gets you what, like at least 6 contracts, almost 7, but 6. But point being that however you're trading, just be consistent. It finishes strong, just under 400. We buy the 405 calls. It gaps open to like 422 when the news comes out that Elon himself is buying almost $1 billion worth of stock. Big gap up. We make more than a double. We make 237% more than the triple in this case. So you buy one contract, you end up 725 turns into a more than $1,700 profit. So that's like an extra $1,000 beyond what we expected to make. So one of the things that I've just approved, Traders Corner has been really good to me to help spread the word about big trends over these years. And bottom line is that I want to be good to them and to you to say, let me give you something that I don't usually give out, which is a really good starter price point. A lot of our subscribers will buy a year or more with some of the longer term offers that I have, but I'm going to give you just a chance to try it for the next 90 days, just for the next 3 months, and say, look, try it out. Let the system prove it to you. Don't just take my word for it. That way you're not worrying about if we don't have a trade over the next couple of days for some reason or whatever. I don't want you panicking, thinking if you bought a short-term trial or something that you're losing time. 3 months is plenty of time to see this in action over a lot of different environments, right? Tesla's going to have its ups, it's going to have its downs. You'll see how we manage both. You will also get access, like longer term subscribers, to the settings and rule sheet. We just ask that you keep that for your own benefit. You don't share that with anybody else. That's part of our terms of service. You also get weekly video training from me. You get dedicated email access to me and my analyst team. So you're getting the same things that longer term subscribers who paid a lot more are getting, but I'm slashing this down to try it out for the next 3 months. From the normal $297 a month times 3 months, that's like $891 you'd normally invest for 90 days access. I'm going to slash it today for you by more than $700. I'm 80% off. I'm going to take it down to just $177. This is a one-time try it out for the next 3 months for just under $2 a day, right? The next 90 days for $177, just under $2 a day. And one trade alone can easily pay for it, right? So what I've done is I set up this special link for you. It's bigtrends.com/corner. The discounts have already been applied on that page, by the way. So when you see that page real quick, I know I'm coming up on my time limit. I know we started a little bit late, but I'm going to try to get us back on time. So just another minute or two here and we'll wrap it up. But you see this page, it's already taken down all those discounts, so you don't have to worry about any promo codes. No other discounts apply. Basically, you just go on that page. Easiest way to do it is just go click through PayPal. You just review terms and conditions that are there, review it, click on that, go to PayPal, or you can put all your information on that secure page and then hit the green complete my purchase button. If you've got any questions, you've got our 800 Big Trends number there, or our client care at bigtrends.com email. So it's bigtrends.com/corner. Thank you to Traders Corner for having me as always. It's available to only the first 25 traders who lock in this value. It's going to give you, think about it, in the next 3 months, it'll give you in the neighborhood of about 25 trades. That's more than enough to get a fair sample and let the system prove it to you. Like we said, past performance never guarantees future results. So you see what the results have been over the past several years. Common questions. We're just buying calls. We're buying puts. When the setups are right. Real-time email, and you can also get text alerts. New entries and exits come out at 3:30. It's about 7 trades a month, like we said, and then maybe 8, and then basically you see average entry price just under $600 a contract. So even if you're just doing one contract at a time, you're not putting that much capital at risk, but for trades that can easily double, and then we'll always never leave you hanging. We'll give you reminders. You'll learn the system too. So we'll give you the settings and rules, a special HD video strategy session, and access to me and my team. So remember, just one trade alone could have easily paid for it. That one made $880 on that mid-December buy. Like I said, just to get us back on time here, bigtrends.com/corner. Check it out. For only $177, it's a small investment to make. I don't believe in free trials. You got to have a little bit of skin in the game, But the idea is that that's that little bit of skin in the game. You can see many multiples on that. On the upside, we'll help you guide you through the trades when they don't work. We want to have you be in the game long term, like I have for now coming up on 37 years. The way to do it: start small, let the system prove it to you, and build the habit of consistent execution. So Anthony, I'm going to hand it back over to you so we can get on to our next great fellow trader and presenter. Thanks for having me. It's always a pleasure, and Happy New Year and a prosperous one to each and every one of you.
Oh, thank you, Price. We appreciate it. And thanks for getting us back on time. Thank you so much.
My pleasure. Thank you. Great to be with you.
Yeah, have a great year this year. And I know you will.
Yeah, man. You know it.
Thank you, Price, for that excellent breakdown of Tesla option strategies. Price's special link is now in the chat box. There's a shortened link that says bigtrends.com/corner, and then there's a larger link. It's the same thing. It's just shortened. So be sure to check that out. Big Trends is pretty darn good. All right, our next presenter is Marina Villatoro, also known as the Trader Chick. Marina specializes in helping traders simplify their approach by understanding market movement, using indicators effectively, identifying breakout opportunities, and building confidence through scalping strategies. So please welcome Marina Villatoro.
Hello. Hi, everybody.
Hey, Marina. How are you?
Happy New Year.
Happy New Year.
Hang on
I'm
a
still
minute.
making
Let
you
me
an
just.
organizer. Yeah, there you go.
Hello. Can you hear me?
Yes, we can hear you.
Okay. Cool.
Yeah.
I thought I lost you there for a sec.
No, you're good.
So much for having me. This is great. I'm so excited to be here on a Saturday. It's rare that we're doing Saturdays anymore, so this is exciting. Hi, everybody. Hang on just 1 second. Can I see, oh, the question box is right here. Let me just open that up so I could manage everything in one place. All right. So hi, everybody. Thank you so much again for being here. And I am Marina, the Trader Chick. And today I want to talk to you guys about the breakout trade. I know that everybody actually knows about the breakout trade, right? We all hear about it. We know that it's one of the most powerful, profitable trades. Yet a lot of times people miss it because they don't know exactly what to look for. So today I really want to break it down so that you guys can understand it and be able to take advantage of it, regardless of which market you guys are trading, which market you guys are in. It doesn't matter if you're into crypto, options, anything, stocks, equities, futures, because the breakout, if you understand how to read the charts, and it's all about the charts, you will be able to totally understand and get in right when you're supposed to. So let's get in and find out. This is me, Marina, the Trader Chick. And today I want to talk to you guys about understanding market movements, right? Just because there's a breakout that's happening in front of us, we have to understand how the buildup to the breakout happens so that we are ready to go for it immediately. And as Anthony mentioned, I do love scalping. I believe that scalping saves so much stress because we're in for quick moves. And when you're in for quick moves, you don't have to sit and stress too long for the really big moves. But if you know how to spot the really great moves, you can make a lot of money via contracts or the positions that you are placing for that particular trade. So before we jump in, this is me. I am Marina, the Trader Chick. I am an expat. I live in Barcelona, Spain. I have been here now for almost 3 years, but before that, I was an expat living in Central America for over 20 years. So I've been an expat for a long time, and I absolutely love it. It defines who I am, and the coolest thing about being an expat is that you get to travel a lot. And when you are trading, because of trading, you get to be able to do trading wherever you go. So that is definitely a massive perk. The other really cool thing is I used to be a fitness instructor. And the reason why I bring this up is because a lot of people have this misconception believing that you have to come from a software engineer, a software or engineer or a math or financial background to really become a good trader. Completely untrue, right? Anybody can do it. And that is truly the beauty of day trading, is that once you learn and understand the charts and how to read them and how to understand the markets, anybody could do it. And the coolest thing of all, it could be done from anywhere. So the other thing about me is that I'm trilingual. And actually, the only real reason I bring this up is because I was born in the Soviet Union. So when I moved to the United States, I was really tiny. So I didn't really learn how to speak English as much as learn how to speak. And it just continued on. However, I learned Spanish in my later years. And when I began trading, I've been now trading for almost 14 years. And the first couple of years, I really struggled until I looked at it as learning a new language. Because when you are looking and reading the markets, if you think of it as a new language, you could start to approach it in that respect. And because I learned Spanish in my later years, I recognize that if I approach learning the markets the same way I approach learning Spanish, I'll be able to follow along better. And I think because of that, when I mention it to people, all of a sudden they have like this new perspective on understanding how to read the markets. And that really has given so many people aha moments. So that's the reason why I bring it up, because once we start to understand that it is a different language, we can learn to read it and understand it. And that's how we could truly master it. And the coolest thing of all is you could trade from anywhere in the world. There's absolutely nowhere anymore that has any issues with it. So go out there, guys, have fun with trading, travel, and take your computer, and you could do it anywhere. So what I want to go through today are the 4 basic strategies that the market leads us up to understanding and spotting those breakouts. Before I continue, I have the entire presentation for you guys on this format, on a worksheet. So you can get it completely for free. I know that we only get about 40 minutes together. So I'm going to be going through some things a little bit quicker. However, when you download this, you'll be able to go over it completely, and you could also go through the replay at your own time. So go to makingofadaytrader.com. Go to makingofadaytrader.com, and you can get it immediately for free, and you could follow along as I do the presentation, and then you could review it on your own. And then if you have any questions, you could definitely write to me. Just go to my website, thetraderchick.com, and you could just ask me any questions right there, and I'm happy to respond. Okay, so let's get back to understanding the trading foundation, right? What are the basics of trading? First and foremost, you need a charting platform. You cannot not have a charting platform. It just doesn't work that way, right? You need a charting platform. I don't care which one. There are so many different platforms out there today. So please and a lot of them are free, and they're still really powerful. And you do not need to be buying indicators. You could go and use universal indicators from the charting softwares. Charting softwares today are so proficient, and they are so wide with their indicators. I personally only use 3 indicators. That's another massive misconception, that people think they need to have a lot of indicators. You'll be surprised. If you have 2 or 3, that usually is all that you will need, truly. Okay, remember, makingofadaytrader.com, and let's begin. Market movements. Okay, there are only 3 real trends that we need to think about. No more than 3 trends. One is the obvious, the upward trend. 2 is the obvious, the downward trend. However, the most important trend is really the sideways trend. First of all, this is where the majority of the people end up losing their money, because there are so many ways of misinterpreting sideways trends. First of all, a lot of people believe that it's going to continue in certain directions. They are not giving the benefit of the doubt that when there's a sideways trend, the market is really just an indecision mode, right? What is a nickname for a sideways trend? It's called the chop. It's called the indecision zone. It's called the exhaustion pattern. It's called the channel. It's called the consolidation area. All these areas and all these nicknames that they are for it really represents that it's just not going anywhere. And as retail traders, we just need to understand that it is just flatlining, okay? So understanding where this trend comes to an end and where a new trend could either begin or a breakout is really, really important. And the way we recognize that is by understanding how it's moving in the first place, right? So just a really quick review. Upward trend is when each pivot is higher than the next pivot. This is what we are calling the bull market. This is when the market is trending up, market is going up. This is when you enter a buy, right? This is when you are going in for a long position. This is that long position. You're entering a buy. That means that you are entering low, exiting high, taking the profit in between. All right, you're going long, you are buying. Downward trend is literally the opposite. Each pivot is lower than the other one. This is where you are selling. This is when you are shorting the market. What does that mean? It literally means you're entering at a high price point, exiting at a low price point, and you're taking the profit in between. This is where you are shorting the market. This is where the market is trending down, the market is going down, it's a bear market. Okay, now understanding consolidation areas, transitional areas. Like I mentioned before, sideways trends, I literally call them the trader's worst enemy. And once we learn how to spot them and avoid them, not only will you be able to make really good decisions and profitable breakouts or transition trades, but you'll be able to save yourself so many losses. Once you understand this, you will have so many aha moments. First of all, consolidation markets, right? It is when a market is moving in one direction and then all of a sudden it just stops moving and bounces in between two areas, right? So the main reason why people end up losing money in these areas isn't technically because of the sideways market. It's more of the stories that we tell ourselves, right? So a person that is like a trend is your friend kind of a trader, when they see this kind of action happening, they're telling themselves, you know what, the market's been going up all day, it's going to continue going up. And they just keep on putting in for a buy or for a long. And again, it's flat. It doesn't have to do anything. Or the other kind of a trading story is the contrarian story. Oh, the market's been going up all day, it's going to correct, so I'm going to short it. And then people start to put in shorts. And again, the market doesn't owe you anything just because you think that you're going to be able to beat the market or predict what it's going to do. None of us could ever do that. But the only thing that we can do when we see this is stay out entirely, right? Because this is a dead market. When the market starts to consolidate, you really just need to stay out because you have no idea what it's going to do, right? And being actually out of the market is a very powerful, decisive move, which a lot of amateur traders don't understand. They have this misconception that they need to be going in constantly. But the pro traders, they understand that sitting out is as important as knowing when to enter and when to exit. Okay, these areas happen often. They could be small consolidation areas, they could be large consolidation areas, there could be multiple consolidation areas. So knowing and understanding, and really, really important, guys, you need to draw those areas in. All platforms, all trading platforms, they give you free drawing tools. All you have to do is draw it in because, as we say in the trading world, everything is to the left. When you enter a trade in the live market, your adrenaline is pumping. You are not thinking straight. So you have to look to the left on your chart where you have to understand why you made that decision in the first place. And when you have things drawn out, it's easy for you to be like, oh, right, this is a massive consolidation area. This is where the breakout is about to happen. So you have to have that drawn in. All right, here's the thing, guys. The market respects areas, and we, again, as individual retail traders, have to respect the market the same as we just have to understand that the market respects these areas. So what are these areas? They are the support and resistance areas. This is what defines where the market is hitting either a support or a resistance, and a resistance is literally called the ceiling. It is the ceiling of the market. It is the ceiling of the market. This is where the market is hitting an area 3 or 4 or more times, okay? This is when we see it and we have to draw it in and understand, wait, I'm going to chill out until the market either transitions from it or it breaks through altogether, right? And what is a support area? It's the opposite. It is the floor of the market. It is the floor of the market. It is when the market is trending down and all of a sudden, bam, it starts to hit a floor 3 or 4 more times. Immediately draw that area in so that you are ready. You understand where this area is happening. Now, when you are in a channel, you have a ceiling and a floor of that channel, right? The resistance and the support area. Again, if you don't draw it in, it's technically like saying that you're going to put on a seatbelt on your kid and not put it on. Just have a mental seatbelt, right? And thinking that when an accident happens, you're going to be able to save them. If you don't have your support and resistance areas drawn in, it is literally just, you're playing the odds. And really, why would you do that, right? We want to be as safe and as secure as possible. And this is kind of like putting on seatbelts. So draw these areas in, because even when you have a wide sideways market, look at this horrible, horrible movement, right? This is terrible. Even if it's wide, would you want to be anywhere here? No, it has absolutely no direction. It is just flailing between 2 areas, okay? You don't want to be in these areas. All right, now, how do you spot these areas before they even become areas, and to put an even more safety mechanism on yourself for several reasons? 1, to stay out of bad trades, and 2, to recognize when those areas are happening, and also to understand when they are ending so that you could enter a really profitable trade. I call these areas reversal areas and divergences. And to me, this is the holy grail of trading. These are my absolute favorite. I call them the trader's map to shift in directions and trends. What are these areas? Double tops, triple tops, double bottoms, triple bottoms, head and shoulders. All right, guys, this is really, really important. When you can spot these, and they happen a lot, and the greatest thing of all, it's free. You do not need to be paying for any indicators that actually don't work. This is right here in front of you, and this could be used on any market. Look at this beautiful double bottom, and I can guarantee you, when you go and look at your charts, you'll be able to start to spot these, and then you'll be able to recognize when the shifts actually happen, when the slowdowns happen, and to be able to recognize when the opposite does happen so that you are going in for a really strategic, profitable trade. Look at the double bottom. The market is going down, boom, double bottom. Now, what is divergence? I personally use the MACDs. You can see right here, the red dotted line, the little red dots on the bottom, that is the MACDs. You could use any sort of indicator that works for you. But what is a divergence? So as you can see, my price action is a perfect double bottom, yet my MACDs are showing incongruence, right? They're showing a divergence. So what is that telling me? Is it telling me it's going to 100% reverse? Absolutely not. But it is telling me the market is losing complete energy and strength. And it's telling me that, wait, this is not a place that I want to be in, right? When you start to recognize these divergences and with these reversal patterns, this is gold. And you'll be able to start to recognize it a lot. And if you really want to focus even beforehand, if you look at my price action, the price action is going straight down, right? However, my MACDs are already flattening out. So it's already giving me a forewarning that the market is already starting to lose its energy. I personally want to listen to it from the beginning, because it's not worth it for me to put in my hard-earned money into a market that's already completely losing its energy, right? Now, let's put all of this once again together. Again, everything that I just went through is in the free workshop, worksheet. You can go right here, makingofadaytrader.com. This is literally the cheat sheet that I use for trading. So go and get it. It's totally free. And then this way you could review it on your own. All right, let's talk about those those breakouts. How do we spot these breakout trades, right? Because they are the most powerful trades out there. And if you don't know what you're looking for, or you do not have it done properly, you're going to miss these trades, right? So it's very obvious. The market has been going straight up, and then boom, massive ceiling, massive top. It's the resistance area, right? After 2-3 times, you start to draw that area in. And like I mentioned before, the market revisits areas. So you already have that drawn in. Now you're sitting to see, is it going to transition into a whole new trend, or is it going to break through? And in this case, boom, it broke right through. So you're already sitting and ready to see either direction. And when it gives you the proper indication or the proper signs, the proper triggers, you want to be in on it, right? So this is that breakout trade. The market is going in one direction. In this case, is moving up, right? And then all of a sudden, boom, it hits a stagnant point. It goes nowhere, right? I'm sitting out. I am waiting to see what is the market going to do. And then, boom, it breaks out and continues going in the same direction. And I am ready and waiting for that breakout trade. So this is how I view my breakout trades. This is how I do the setups. I have my area fully drawn in. Again, I'm going to repeat this again. This can be done on any market, because regardless of the market, you are trading options, equities, crypto, futures, Forex. You have to use a chart. You cannot be going in blindly. That is completely amateur, and you are 100% going to lose, 100%. But if you have a really good platform where you are reading what is happening, draw these areas in, guys. They are free. And when that breakout happens, it is magical. So as you can see here, like I mentioned before, I personally love the MACDs. To me, they are the most telltaling indicator. They are also the ones that are the least lagging indicators. A lot of indicators can be quite lagging, specifically the volume ones, which a lot of people use. So as you can see here, the red dots are kind of hanging around the dashed black line, right? The dashed black line, that is the zero line. That shows that there is no energy, no strength at all in the market, right? And look how perfectly it goes with the resistance area. And then, boom, the price action just jumps, and so do my MACDs. This is when I am sitting and ready and waiting. I have my order waiting, boom, to enter that trade and take the breakout trade. This is what it's all about, okay? Now, I want to give you guys a bonus setup. I personally call this the initial reaction trade setup. So when we have a transition area happening, right, a consolidation that turns into a transition area, meaning the trend changes direction, you want to be in as early as possible into the trend trade, right? Why? So let me give it to you in layman's terms. For instance, let's pretend that you want to go jogging. You are full on energy. You are rock and roll. You are ready to go, right? You put on your jogging outfit, your sneakers, and you're out the door. And if I was to put money on you going the furthest, probably be the earlier you leave the house, right? The same happens with the trends. The earlier you get in on a new trend, the higher your chances are of getting a better profit, right? So you want to be able to understand when that happens. Now, as you can recognize here, I have a really strong resistance area, and then boom, it changes direction, and the MACDs and the price action are in strong running past the black dash line on the MACDs. So I am ready for this trade as well. I call this the initial instant reaction trade. Okay, just so you guys know, both of these trade setups are in this worksheet. So I would really recommend just to go and get the free worksheet, makingofadaytrader.com, so that you could follow along. And again, if you have any questions, you could write to me at the Trader Chick, and I am happy to answer all of your questions. Okay. So here's the thing. We have absolutely everything we need to take action, right? We have everything we need to take action. The real question is, how do you know that you are doing it right? How do you know that you are doing it right? Right? Because all of this is great, but the real question is that you really are asking yourself, how do I even get started? Right? How do I get started? I mean, we have all these amazing things. Like we have everything that we need. We have these live presentations, we have YouTubers, we have podcasts, we have books, we have all these different chat rooms and alerts. But at the end of the day, how do you know you're doing it right? Right? And this isn't a question that I get from beginners only. I get these questions from seasoned traders, people that have been trading for a long time, yet are still struggling and are losing money. And mainly, they're just inconsistent, right? Like they aren't reliably profitable. And I get this question, like, how do I turn this around to become profitable consistently? And honestly, at the end of the day, it's always comes down to lacking understanding of the basics, right? It's to have that understanding of the basics. So I'm going to give you an example. I know the majority of you are probably have been probably driving for years, right? Probably even some people for decades. But when you first sat down in your car, you weren't born with the information of knowing how to drive your car, right? You learned where is the ignition key, where is the clutch, where is the brake, where is the gear shift, how to use the steering wheel, right? But you might have had a really quick learning curve. The point is, you still had that learning curve. But what if nobody ever taught you that and just threw you in the car and expected you to go? Chances are you would not do well, right? Especially if you're driving a stick shift, manual transmission, you might not even know how to get out of first gear, right? Now, I mean, just get really creative in your mind. Imagine somebody enters your car and they have never been in a car before, and you're telling them, buckle up, it's going to save your life. And they're thinking to themselves, buckle up. What am I buckling up? Nobody taught them that, hey, grab that seatbelt and buckle it in. But once they know it, boom, it has completely, first of all, given them a peace of mind. And the safety is probably up by 90%, right? So if nobody teaches you the basics, so understanding the basics of trading, are you really going to know how? Chances are no. And this was my own personal sad truth. I spent over $20,000 on my trainings. No joke. I spent that much money, but because I was thrown into live chat rooms or given alerts and no one actually ever explained to me what is a divergence, how to spot resistance areas. And every time I asked these questions, I would be treated as if though I was born with this information. So I ended up struggling for years. Look, I know that a lot of people are telling you, come and sit in the chat room and watch as we take these trades. But if you don't know what is actually happening, it doesn't matter if they're taking trades if you're not understanding why they are doing what they are doing, right? You can't drive a car just because you're seeing someone else do it. You have to understand how to drive that car, correct? That's the same thing for me. Like I wasn't fully understanding and I was sitting in these chat rooms and it was terrible. And at the end, after a couple of years, I was losing. And here I am again, seeing this person saying, oh, what a great trade this is. And I started to follow that trade. I ended up entering it way too late, lost almost $4,000 because it obviously immediately changed on me after I chased the trade. And it was just terrible. And at that point, I was already struggling and I ended up quitting. I said to myself, I just seriously am not, I can't do this. Like I felt completely defeated. But here's the thing. Everybody in this room, we are all bit by the trading bug. We are all bit by the trading bug and it never stops itching, right? It never stops itching. And do you know why that is? Because deep down inside, we know that we can do this. And that is exactly what happened to me. I quit. I left. I ended up going for like 4 months. I ended up not trading. I had to get away entirely. But I kept on still watching other people trade. And the only thing that kept on going through my head was, if they can do it, so can I. And that's when I decided to come back. I came back. First of all, I had 3 charts going on. I was literally following 3 different monitors. It was awful. I was in constant analysis paralysis. I had 10 indicators going on. It was really difficult. So I ended up literally donating 2 of my high definition monitors to the garbage men. I hope that they didn't throw it out. And I removed all of my indicators, and I ended up just watching the price action and just studying the basics. And that is how I started to train myself with the basics. And I did this for years until I truly understood it. And several years back, one of my students says to me, he's like, you know, Marina, your philosophy and training and teaching style is very similar to Coach John Wooden. And I'm like, Coach, I don't know who Coach John Wooden is. I never heard of him before. So of course I looked him up. And if any of you know who Coach John Wooden is, he is he was a legendary coach, legendary basketball coach. I mean, still to this day, I think he's the most iconic coach out there. And his entire philosophy was, when in doubt, get back to the basics. And I mean, this guy has more accolades than most of us will ever see in our lives. 88 national championships, 10 NCAAs. He trained A-list, A-star players, A-star players. But it didn't matter. Every season, in the beginning of the season, didn't matter if you won 88 national championships in a row. If you are being egotistical and not going back to the basics, for instance, he believed you have to relearn all the time how to tie your shoe, how to roll up your socks, how to dribble the ball, because you might be out on the court and you might be all ego, centric, and yet you forgot to tie your shoe properly. Boom, you could either get a massive blister or even worse, sprain your ankle and sit out for the whole season, right? So getting back to the basics is crucial. And when you get back to the basics, you have that strong foundation. And today, that is exactly what I want to offer you guys right here. Special introductory course. And this is only for people that are sitting here today. I do not offer this to anybody. My bootcamp for day trading course. You could do this on any apparatus. You could do it on your iPhone, your Android, tablets, desktops, laptops, anywhere. All of this for one-time price of $97. One-time price. Okay, I want you guys to go right now into your navigator and put in bootcampfordaytrading.com. Bootcampfordaytrading.com. Go and follow along with me so you guys understand all that you are getting for $97. But first, let's just think about what can we really get for $97 today that brings us the same investment, right? Do you guys like to play golf? I mean, I don't know about you guys, but I don't think there's anywhere cheaper than like $197 to like almost, I think, $800 per day to go golfing, right? How about going out with your family or friends to even a lunch? Me and my husband went out to dinner the other day. For 2 people, it was more than $97 with 1 glass of wine, okay? So let me break it down. What you guys are going to be getting in this course. Again, you could follow along, bootcampfordaytrading.com. So follow along. First and foremost, you will have a platform tutorial setup. I know that a lot of times platform setup can be a real bottleneck and a lot of people really avoid it. So I'm going to help you guys get past the worry. Boom, 30 minutes, we are up and running so that you guys could have fun doing what you are here to do, and that is to trade. All right, then we dive really deep into understanding and dissecting the markets, the uptrends, downward trends, and the most important trend, the sideways trends, understanding those magic telltale signs, reversals, divergences, because once you understand how to spot the reversal pattern, it is magical, okay? We really dive into those divergences, support and resistance areas. They will save you so much, but once you know how to read divergences, I think this is probably the biggest aha moment for the majority of people. Once you spot that, it is amazing. And we will be completely mastering the breakout trade and the power of it. The other thing we'll also be learning is the fake out breakouts, because they happen and you can completely avoid it if you understand what you are looking at. Okay, it's because breakouts, they are not complicated, but once you understand how to spot them, they will be your magic trade, and you will have complete unlimited access to this curriculum. Everything is valued here at $1,600. You go through all of that, and remember, it's $97. Here's what some of my students from all over the world have told me. First and foremost, I finished in the boot camp, best money ever spent. You are the only mentor that truly checks the work. I am enjoying your boot camp every day. I'm learning more and more. So let me go back to something really, really important. Do you remember when I asked you, how do you know if you are doing it right? How do you know if you are doing it right? So here's the thing. How do you know? Who is there to help you out, for you to ask questions, for you to show your charts, for you to have this accountability? So what I am doing in that one-time $97 fee, I'm giving one entire month of mentorship, one-on-one mentorship with me, unlimited, because having that mentor could be what will take you to the next level of your trading. And best for last, I also have a live trade chat room that you will get for free for the first month. Everything that we are doing, you'll be able to see implemented in the live market. All of this is valued at $2,600 only for you guys today, $97. So please go to bootcampfordaytrading.com right here, bootcampfordaytrading.com, so you guys could see all of it there. Okay, please go here, bootcampfordaytrading.com, so that you guys could see all that you will be getting. Again, everything you'll be getting is in the course, 30 days one-on-one mentorship, and 30-day membership as well. You'll get me for one entire month, unlimited questions, feedbacks, analysis. You tell me, that is all included. And you know what the reality is? This is worth less than one trade per day, right? I don't know about you, but the average trade is usually around $200 to $400, right? This is $97. You could 10x your return on investment and go to 100 of these dinners. But here's something that's really important. Usually I sell out really fast because of the mentorship and the demand and the price. So I only have space for 25 students because I could only give so much of my energy. So 25 people, the first 25 people will get this right now, and it is a full house right now. So I want us to go right here. You can put in bootcampfordaytrading.com, and here is the actual order form. As you can see, one-time payment, $97. If you do want to do a payment plan, it's 2 times $59, but you get instant access to the course and everything you will get in this course right here. Okay, so go right here, bootcampfordaytrading.com, and this way, if you have any questions, this is your time to ask me. Anything you guys need, please let me know. So hang on just one second. Here we go again. Bootcampfordaytrading.com. This is right here, the live link. I'm going to send it to everybody. Let me see if I could do that here. Oops. All right, if you guys have any questions, I put in the actual link to the course directly. So again, here is the order form. Everything that we just talked about is in this order form. Hang on a second. So here's what you guys will be getting. Everything in the course, 30 days, one-on-one mentorship with me. Ask me any question, whatever you guys need, I am here for you guys. All right, if you have any questions, please let me know. And thank you so much for taking the time to be here today. I really, really appreciate it. And let's start 2026 strong. All right, thanks, Anthony. Thank you, everybody.
Oh, thank you, Marina. We really appreciate it. Thank you for that clear and practical approach to breakout trading. You're always great at that. Marina's special offer link is now available in the chat. So thanks again, Marina. We appreciate you. And have a great year. I know you will.
Thank you. You too.
Yeah.
Bye.
Thanks. Our next presenter is Silas Peters of T2 Markets. Silas has over 15 years of trading experience across equities, futures, currencies, and options. He began his career on a global trading desk at the Chicago Board of Trade and has worked extensively with institutional order flow. In this session, Silas will share a simple, structured price action system designed to remove emotion and work across all markets and timeframes. So please welcome Silas Peters. Silas, are you there? I apologize. I think you're on mute.
Hey there. Good morning.
You
Can you hear me?
Yeah, we can hear you.
Okay. Sorry about that.
That's okay.
All right. So
We started a little early, so I apologize if I caught you off guard.
yeah, no worries. No worries. I was just getting to the desk here. And do I have was it 45 minutes or an hour?
Yeah, you got 45 minutes.
Okay.
Yeah.
Let's see. Happy New Year to everybody.
Yeah, Happy New Year.
All right, let's see.
So you could go until 1:30 or you could cut.
Can you see my screen?
Yes, we can see your screen. Cracking the code.
All right, cool. All right, just I guess give me the green light when we're ready to go and we'll get started.
Oh, go ahead. You're good.
Okay, awesome. So thank you, Traders Corner team, for having me on this Saturday morning. Hope everybody's doing well. Hope everybody's staying warm wherever you are. I just pulled up the question in the chat box, so if you guys don't mind, can you please let me know? Just type a 1 or a Y or a yes or hello, and just give me a confirmation, second confirmation that you could hear me and see my screen, and then we'll go ahead and get ready. Thank you so much. All right, cool deal. All right, let's what's going on, Pat? Hey, Kumar, Gary, Tim. All right, guys, let's go ahead and get rolling here. So my name is Silas Peters from T2 Markets. You're here to see Cracking the Code, a simple 3-step pattern for all markets. Hopefully, I'll have a little bit of time, and just a couple minutes is all I need. In the end, I'm going to show you some. I'm going to teach you a fully mechanical strategy. Okay, so if that sounds good. Teach you a fully mechanical strategy. Literally going to have all of the rules, everything you need, and you can start trading by next week, okay? And well, if you're trading crypto, you guess you start trading this weekend. But I want to show you some of the setups that we had to end the week yesterday. Absolutely killer, and you're going to have the exact set of rules. So you are in the right place, guys and gals. If you are sick of losing money, you're tired of confusing strategies, and you want something real, something that works. And by the end, you're going to see a way that you can trade with confidence, with a clear set of mechanical rules and a high probability setup and plan of action, which means zero guesswork. We must quickly cover the risk disclaimer. Past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading. Only risk capital should be used to trade. So take that very seriously. You probably see that throughout the course of the day. It is important. There is a risk of loss in trading. Now let's talk about what we're going to learn today. We're going to learn why price action patterns beat indicators. We're going to talk about the 3-point setup, fully explained in detail, step-by-step entry and exit rules, real trade examples, and how to apply this starting today. My goal for you is this, is that I'm going to prove to you that this works in any market or time frame, but this is the real benefit of listening to today's workshop, is that you are no longer going to be chasing hot stock tips. You're not going to need dozens of indicators cluttering your charts. You're going to have the exact rules for entry, exit, and target for your favorite markets, okay? You will leave here knowing this exact set of rules. In fact, you're gonna leave here knowing how to spot and identify trades like this. This is a daily chart of Halliburton, plus 10% move, plus 8% move, plus 12% moves. And look, these, it may not sound sexy when you turn into CNBC or your penny stock letters talking about gains of 800%, 1,500%, but these gains add up. You know, we're talking $1,100 on 100 shares, $600 on 100 shares, $2,000 on 5 option contracts. Here in Bristol Myers, a plus 3.5% move, 6% move, 9% move. You're going to learn how to identify all of these in advance before they happen. This is a daily chart of Lockheed Martin, how option traders could have bought put options or sold bear call spreads, bought call spreads or sold bull puts, bought call spreads, sold bull puts, over and over again, rinse and repeat. This is a 30-minute chart of gold futures. This is an $800 per contract move, followed by a $450 per contract move. For the day traders out there, this is a 5-minute chart, the E-mini S&P. We have 3 points, we have 8 points, we have 6 points, we have 10 points, over $1,300 in a single session. So hopefully you're starting to see the potential here, because all we're doing, guys, is trading the ebbs and flows of the market, all right? Those that like to scout, 610 tick chart of the 30-year bonds. We've got 4 ticks here. We've got 7 ticks here. This is $218 on a single in a single session trading one contract. Who would be happy with $218 a day, $500 a day, $1,000 a day? This pattern is responsible for identifying these moves before they happen and let you know when to get out, okay? Now, you are in the right place today if you want simplicity and consistency. If you're one of these that have tested dozens of indicators and subscription services, you've been frustrated by emotion-driven trades, you want something simple, mechanical, you are most definitely in the right place. Now, if you're a retail trader or even a pro who's fed up with overcomplicated systems and the endless noise of indicators, then pay close attention, because what I'm about to show you today is different. You're finally going to get something that you can rely on using pure, raw, naked price action, and there's no guessing. Now, before we get started, let me introduce myself, who I am. I'm the founder of T2 Markets. I'm a co-founder and partner of Blue Marlin Advisors. I'm an entrepreneur, risk taker, full-time trader. I'm a speaker, author, educator. Started my career at the Chicago Board of Trade. Most importantly, though, is this. I'm a husband, I'm a father to 2 girls, and I'm a mentor to thousands of students, okay? Now, I've spent years in the trenches, trading stocks, options, futures, currencies. I've tried everything, indicators that claim to predict the market, flashy newsletters, elaborate strategies that cost more in frustration than they've ever paid off. I've taken losses, but I found what works. And now I build tools so you don't have to bleed your account dry experimenting in these markets. Now, what I want to address is why most traders fail and kind of my struggle initially, probably exactly what many of you are here going through now or have at some point. Overcomplicating systems, chasing lagging indicators, making emotional decisions, and then really just lacking a repeatable edge. You have to have an edge in the markets if you're going to succeed. Now, before I discovered this pattern, I was right where you are. My charts look like spaghetti, indicators everywhere. I chased hot stock picks and just really overcomplicating the process. Greeks, robot trading, EAs, black box systems, and complex strategies. And the drill of, you know, hey, we need more damn indicators, okay? I have seen hundreds of students of mine log into their screens, whether it's an in-person event or doing a remote session, their indicators looking like spaghetti. And all it does is leads to frustration, emotional hesitation, entering too late, exiting too early, risking more than I should, and I got burned again and again, and I lost money. I lost confidence. I felt trapped in a cycle of hoping and second guessing. Now, does this resonate with anybody? Of course it does. Does it resonate with anybody? Type a Y or a yes or a 1 in the chat if this resonates with anybody. Yeah, I mean, we've all been there. And so it kind of led me to what I call the big discovery, something very powerful. And it's what I call the 3-step or 3-point reversal pattern. And we're going to discuss this shortly. Now, what I'm going to share with you has been around forever, but most traders ignore it or overcomplicate it because of its simplicity. And I thought, well, what if we could take it a step further and build something completely mechanical around it with the exact rules, precise targets, which means no emotional guessing. You start with that, you back it up with tests. I was already doing this manually. I knew the power of it and that it already worked. So I said, why don't we use the powers of technology? So I've already gave you the hint. The strategy consists of 3 steps. So let's get right into this. Now, let me ask you this. Can you follow 3 steps? Step 1 is we're going to identify where the trend is shifting or the trend is changing. Step 2 is we're going to find the exact entry, exit, and target before the trade sets up. And then step 3 is only trade when the rules align. Okay, so can you follow 3 steps? Now, if you can follow 3 steps, your trading becomes much, much cleaner. And if you skip them, then frankly, you're just back to the noise. Now, because we're trading price action, we have a strategy that produces repeatable setups, works across all markets, and they're easy to spot in real time. Okay, easy to spot in real time, just like this, where we're able to spot this chart of the NASDAQ, this setup here. That was a 55-point move in the NASDAQ. A chart here in silver, SLV, led to a $330 trade on 100 shares. This trade in DIX, $10, $12, $15 per share. How do I know? Because we plotted these in advance. We have crystal clean, clear charts, and we know exactly what to do when the market is ready. Coca-Cola, 4.2%, 6%. Here we are in the Euro USD, 125 pips, followed by 110 pips. Here we are on Baidu, 51% move, 56% move on a weekly chart. Back to Coca-Cola, back to the E-mini S&P. This is a 1-minute chart of the E-mini S&P. This is plus 11 points in a single session. Knowing where to short here, where to short here, where to short here, where to get long here, where to get long here. Simplicity beats complexity. Now, we went through those very quickly, but how smooth and how clean were those setups I just shared with you? All we had was naked price action with clearly coded entry, exit, targets, and stops. So let's get to the rules here. The 1-2-3 strategy is a widely used trading hack that helps traders identify trend reversals and continuation patterns in trading with high accuracy. So we're going to identify the trend shift, spot the pullback, and then we're going to confirm the trigger breakout. So whether you are a day trader, a swing trader, or a position trader, understanding this pattern will significantly enhance your ability to spot profitable setups in the markets. So let's start with point 1, as this is the baseline starting point for our pattern. Step 1 is all about spotting the potential reversal. Okay, so whether the market's going higher and starting to peak, or market going lower and finding a bottom, that's what we're looking for. So the highest point in an uptrend or the lowest low in a downtrend. So let's look at an example. Here we have the market going higher. This is our highest high. We continue to go higher. Okay, this ends up being our highest high. Therefore, that ends up being our number 1 point. Okay, in a downtrend, it's the same rules, just opposite. So as the market goes lower, we're looking for that lowest low as the market is trending lower. Step 2 is spotting the retracement, okay? The first retracement from point 1, which leaves that higher high or a lower low. So here's an example. So as we've identified our number 1 point, as the market retraces and then pulls back up, that gives us our number 2, okay? In a downtrend, we have our number 1 as the market retraces higher and pulls back, forming this lower high. We have our number 2. Step 3 is the third leg. We're confirming the breakout trigger. It's either the second low point, the higher low for a long or bullish formation, or the second high point or lower high for a bearish formation, okay? So here we have a 1, market pulls down, retraces up, we have our 2. This is our lower high. That's our number 3, okay? In a downtrend, we have a 1, we have our 2, we have our 3, which is the higher low. That's our number 3. So now what? We have a 1 and a 2 and a 3. What do we do next? What are we missing? Yeah, where do we enter? Anybody want to take a guess at where we enter? Anybody want to take a guess? We simply wait for a break above or below the number 2 point, all right? So in our bullish example here, it means we're looking to go long. In a bullish example, we're looking to go long, expecting that market to go higher. We're simply waiting for the market to do what? Trade above a break or close above the number 2. Okay, this is a reversal pattern. We're expecting the market to go higher. So this is our entry. Price breaks above the high of the number 2. So we all agree on that. 1, 2, 3. We're looking and waiting for the market to trade above the number 2. In a bearish example, we are looking to short, expecting that market to go lower. This is a reversal pattern. We have our 1, we have our 2, and we have our 3. We're looking to get short on breaks or closes below the number 2. And that's exactly what we get on this next bar. All right, so we can all agree on that. So do we agree that this is damn near, if not 100% mechanical? We're all seeing the same thing, right? It's rules-based. That means it's mechanical, okay? So 99 out of 100 of us should see the exact same thing. So once the price breaks through the point 2, that's our trade entry. That's our trade confirmation. That's our 3-point pattern. Pretty straightforward, right? So what about other important ingredients of the recipe, like profit targets or our limit order to take money off the table? What about stop losses? Because every trade that gets placed needs a stop loss to manage risk. And then overall trade management. Once we are actually in the trade, what do we do so we don't freeze up, we don't lock up, we don't become a deer in headlights? These are all great questions and extremely important. We must always use the stop loss to protect our capital, and we must always know where we are looking to take profit, because that's why we are in the market in the first place. So let's first cover stop losses. This simply means that sometimes Mr. Market does not do what we want it to do and goes in the opposite direction. That's okay. We're okay with that. We're not going to be right 100% of the time, but we put a stop order in the market to protect our capital in case we're wrong. So for a bullish setup, the stop is going to go below the number 1 point. Okay, so our stop or our risk is going to go below the number 1. So we've identified a 1 and a 2 and a 3, a 1, 2, 3 bottom formation. We know we're looking to get long here. Our risk is going to go below the number 1. All right, bearish setup, you're going to see how mechanical all of this is. Our stop is going to be above the number 1. So we've got a 1, 2, 3 pattern. Our stop is going to go above the number 1. All right. So now we're managing our risk to protect ourselves against adverse price movements in case the market decides to go back upside. Profit taking. This is the fun part, right? This is the fun part, profit taking. For a bullish setup, we are going to measure the distance between the 1 and 2 point, then measured higher, okay? So let's take this. We are going to measure from the low of the 1 to the high of the 2, and then measure higher. So basically, we're just taking this range and we're going to measure up. In this case, it's $1.98, all right? So we're going to measure that up, and that's going to be our profit, okay? That is our target for price. So before this entire trade even triggers, we know where we're getting in, we know where our stop or our risk is, and we know where we're taking profits, okay? So everybody else, 98% of every trader does not have a plan. They get in, they don't know where they're guessing on targets, they're guessing on stops, random throwing darts. This is a mechanical process. Bearish setup, same rules as you probably figured out, but in inverse, we're going to measure from the high of the 1 to the low of the 2, and then measure down. So here's our 1, 2, 3 pattern, 1, 2, 3. We're going to measure from the high of the 1 to the low of the 2, and then we're going to measure down. That's $3.68 in this example. So we're going to measure that down, and there's our target. Guys, you are going to be absolutely blown away on how accurate this is, how often we'll come tag that target 1 and then often reverse. So everybody follow this. Everybody follow this. This is the same pattern, guys. I've been trading this pattern for over 15 years, okay? It doesn't matter if we're looking at McDonald's, doesn't look at if we're looking at Canadian dollar or Dogecoin. The pattern is price action based. It works in all markets and time frames. So let's talk about the bullish, the 3-point strategy for a bullish trade. So we've got price heading lower, right? Price heading lower. Price retraces to find the number 2. We pull back and make a higher low, 1, 2, 3. And then we're going to look for an entry above the number 2 for our reversal, okay? 3-point strategy for a bearish trade. Price is heading higher, all right? Price retraces. Price makes a lower high. And then we are looking to get short where? On a break or close below the number 2. Let's look through some, or walk through some additional examples, because all this is, guys, all of this is just about repetition, okay? This is a monthly chart. 1, 2, 3. All we got to look at, monthly chart, we got to look at our markets one time a month, guys. One time a month. 1, 2, 3. We know the pattern is setting up. We know that we're looking to get short here. We know our stop is going to be above the high of the 1, and we know our target is the distance between the high of the 1 measured to the low of the 2 measured down. So it's an equal 1 to 1. All right. And you can see, here we go. 1, 2, 3. There is our entry or breakout level. There's our risk, and there is target 1. Weekly chart. All you got to do is look at your market once a week. 1, 2, 3. We know we're looking at long on a break or close below the above the number 2. Stop below the number 1. Target is the distance between the low of the 1 measured to the high of the 2, measured up 1 to 1 distance. Okay. All right. There we go. We trigger above the number 2, stops in target 1, and we let it rip. So we can put all of this. We can put this entire order in one single order. It's called an OSO, order sends order. You're going to put your buy stop or buy limit here. Once you get filled or triggered into the trade, then it's called an order sends order. So it's going to then put an OCO in, order cancels order. So once you get filled here, your target and your stop are going to go in. If the market goes up and takes you out, it's going to cancel this order. Or if the market reverses and stops you out, it's going to cancel this order. So you don't have to babysit this thing. Daily chart, guys. Daily chart. I've hid the symbol because it doesn't matter. People go, well, what symbol is this? It doesn't matter. It doesn't matter, guys. It could be any. It could be ExxonMobil. Could be Walmart. It could be live cattle. It could be the Japanese yen. It doesn't matter. Hourly chart. Here we have a short. We have a long. We have a short, and we have a short in the making. Guys, it's the same pattern myself and our students trade every single day. All we're doing is trading the ebbs and flows of the market. The market is constantly moving up and down. We're trading the reversal points as they move up and down. People say, well, what about choppy consolidating markets? We're not getting any signals. We're not trading in the middle of this noise because we're waiting for new highs or new lows, okay? Hourly chart, right here, triggers, hits target to the tick, 22 points. Hits target almost to the tick, a little bit lower, and then reverses. And then here's one in the making. 1 minute chart works all the way down to the lower time frames. People are using this even on 15-second charts because it's so damn accurate, okay? 1 minute chart. If you like to scalp, and I'm going to show you example after example if I have some time when we wrap up, okay? So do you see how we only trade when the rules are met? It means that we're not forcing trades, guys. Not forcing trades, which means we're not guessing. There's no fudging criteria just because you feel like the market should move or move down. We're simply waiting for our 3-step criteria to be met. And so what this does is it separates hobby traders, emotional ones that are second guessing, chart hopping, chasing entries, to those that follow a systematic process with a mechanical plan. Because guess what? Guess what? It's either there or it's not. Just like this here. This is in crude oil, okay? We have a 1, 2, 3 pattern. We know where we're getting in. We already know before the pattern triggers where we're getting short, where our targets are, and where our risk is, okay? Now the market retraces higher, we get a new pattern. This high is greater than this high, 1, 2, 3. We get short here or short here, target 1, target 2, all right? This is in gold futures. You could trade GLD, you could trade mini gold, micro gold options, all right? This is a $10,000 per contract move. Trading, selling bear calls, buying puts. Delta Airlines. This is, I know this has got to become redundant by now, but I'm just trying to hammer home the fact that it literally becomes a rinse and repeat process, okay? Rinse and repeat process. All we're doing here, trading the ebbs and flows, right? Get it long trade, get it long trade, get it long trade, followed by a short trade. We don't get caught up in the noise. Cardinal Health, here we have a long trade, short trade. I like trading options on these, right? I like selling put options here. I like selling bear call spreads. There's a reason that I'm sitting here talking to you about this 15 years later, okay? Google, how could you have traded Google? Well, we could short the stock, we could sell bear call spreads, we could buy puts, we could sell bear call spreads. Nothing complicated about this, guys. Nothing complicated. So here's what we've learned so far. You've learned a very simple step-by-step pattern. A step 1, a step 2, and a step 3. Does everybody here, I'm completely serious, does everybody here up to this point feel confident in what I've shown you? Something that you could say, yeah, you know what? I could do this. Yes, I can follow this. It's a 3-step pattern. This is absolutely 100% something I can do. Great. So what we're going to do, again, we're going to spot this pattern, right? We're looking for the market to go up, be going up, or the market to be going down. We don't give a flip about what's going on in the middle of the chart. We're looking for a high probability reversal point, okay? So the market is heading south. We start to get our new number 1 points. Each time that market ticks lower, that becomes a new number 1 starting point, okay? Then, as the market is going lower and then retraces, we get our confirmed 1. As the market retraces higher, this is giving us a new number 2. Once we finally stop printing these lower highs, we have our number 2 locked in. And as we start retracing back, we're getting new number 3s. And then once we finally get that last higher low print, that's our number 3. Now it's game on. Now it's game on, okay? So we now have identified that 1, 2, 3 pattern. Okay, day 1, day 2 goes by. What are we looking for? What are we expecting next? What are we expecting next? Well, we're patiently waiting for what? A break or close above, break or close above the number 2. Hang on, guys. Blow this back up, enter full screen. There we go. Sorry about that. And I'm going to answer all of your questions, guys. No worries. I'm going to answer all of your questions. And so we know we've got a game plan in place. We're waiting for a break above the number 2. And then we simply execute. We simply execute, right? We put the trade on. All right. We broke above the number 2. All right. So now we're getting long. We're buying the stock. We're buying call options. We're selling bull puts. Our stop or risk is here and our target is here. Do you understand where we're getting our target and where our stop is? Very simple. We've already explained it. Our stop just goes below the number 1 with a little bit of a buffer. Our target is the distance between the low of the 1 measured to the high of the 2 measured up. Okay, and whatever this is, I have no idea. All right, so bullish positions, we buy a stock or buy futures. We can buy call options. We can sell bull put options. Okay. If we, and so here's an example. All right, here's an example. Getting long this trade led to a $32 move to target. We don't care. We don't care if the market keeps going higher. If the stops look huge because of the wide range, then you size down. You size down accordingly. You're risking the same percent. You're risking the same percent, right? Bearish. We sell stock, sell futures, we buy put options, or we sell bear calls, okay? Very, very simple, very mechanical process. Now, let me tell you this. I used to do all of this by hand. So sitting in a live market environment, okay, I'm watching the market ebb and flow, and I'm saying, okay, well, all right, this is $39.62. This is $41.18. 41.18 minus 39.62 is $2.31. So let me add that to that. We don't have time for that, especially if we're, day trading on the lower time frames. Okay, so stop trying to do all this by yourself because it's not necessary. You're probably wondering, how do I do all this by myself? How do I find these patterns on my own? Well, at this point, you have the rules. I've given you the rules. You know what it takes. You see the steps, but you might be thinking, well, great. Now I've got to learn charts. I've got to learn multiple indicators, spend hours back testing, maybe buy expensive tools. No, that's what this strategy is built to eliminate. You get a system that does the pattern spotting for you, the plotting of entries, exits, targets, daily setups across all markets, all time frames, so you can start trading with clarity. What if you had a tool that locates the pattern for you, that automatically plotted your entries and exits for you and could scan multiple markets and time frames? Would that help you find high probability trades on a daily basis? Absolutely. Of course it would. That's exactly what we did, is we built a tool that does just that. So if you remember our examples from earlier, this replaces the need to hunt and manually hand draw these patterns. We're not sitting here getting our drawing tools out, doing this, doing that, trying to locate. Our tools do all of the heavy lifting for you. Spotting the pattern that was forming, mapping out the 1, 2, 3 points, eliminating the need for us to get out a calculator and to find where our targets and stops are. With the powers of technology, all of the heavy lifting is done for you. As you can see here, plotting the 1 and the 2 and the 3 with the entry, risk, target 1, target 2, 1, 2, 3, entry, risk, target 1, target 2. Like this chart on the NASDAQ, like this chart on silver. These will become your favorite charts. Look at how clean, clear these are. Well defined. You know exactly what the trade setup is, where you're getting in, where your stops are, and where your targets are, so you can plan ahead. Okay. Now we've been looking at Thinker's Trading View. This is what it looks like on Thinkorswim. This is what it looks like on TradeStation with your indicator and scanner. NinjaTrader 8, Trading View, MetaTrader 4, MetaStock, and even wealth charts. Look how beautiful and how clean these setups are. There's absolutely no guessing on what in the heck is going on. Now, why is this all different? Because as you've seen, we don't have dozens of indicators on our charts. We're not chart hopping or going through random watch lists, and we're not second guessing our decisions. Okay. Now I know you've tried it all, 20 indicators, 10 plus subscriptions, loads of strategy experts, and all it does is clutter your mind, drains you mentally, financially, and still leaves you lost. Well, this is different because it's a simple mechanical set of rules that anybody can follow. Now, the benefits of what I showed you is mechanical consistency. You know exactly what to do next, reduces your stress because we're not making emotional decisions, and it produces high probability setups every single day. Guys, we have thousands and thousands of trades under our belt using this exact pattern. And when you implement what you've learned today, your new trading day looks like this. You're confident. You're actually happy and not stressed to sit at your desk wondering what to do. You wake up, you look at your scanner, you see all the setups for the day. You know exactly what your entry is, your exit, your target. No emotional guessing, less stress, better decision making, okay? And results matter. Using this as one of my primary entry method techniques every single day for the last 15 some odd years, we get results. It's very, very simple. We get results. Otherwise, we would not be talking about it today. Okay, results matter. We don't need to go hunt for the next shiny object, holy grail, because the pattern works if you follow the rules and you respect the rules. Okay, we've got so many good things happening here. And why I still use this every day, because it's simple and repeatable. It's pattern based. It's not lagging, and it works across any market time frame. There's nothing going on in the S&P. Cool. I'll go look at crude oil. I'll go look at gold. I'll go look at bonds. I'll go look at Netflix. I'll go look at SPY. And it's all automated. I built a step-by-step program to master this strategy where we automate, we execute, and we repeat. We automate, execute, repeat on a daily basis, and we do it what we call the 3S code. And today, I'm going to give you the opportunity to start profiting from these predictable patterns with the 3S code. Now, let me ask you this. Let's do some math. How many losing trades have you taken because your system was unclear? How many indicator subscriptions cost you, I don't know, $50, $100, $200 a month? How many hot tip newsletters promised the moon and delivered scraps? If you added up the time, the stress, the mistakes, the pain, you've already paid way more in losses and wasted effort than what this will cost you. The 3S code includes full video training, indicator and scanner suites, members only Telegram room, weekly live trading and training sessions. You are not alone. Our weekly training sessions are where we walk through live market environments. We walk through real trades together. Now, if you try to build what I'm giving you here, the scanner, the indicator, rules, training, live sessions, community, spend thousands. You lose time figuring out what works. You make mistakes costing money. You feel stressed. But this package is proven. It's ready. We're not charging $3 grand, $2 grand, or even $1,000. Nothing near that. With the 3S code package, you're going to get the 3S code indicator, the 3S code scanner, access to our weekly strategy and scan sessions, private Telegram room access, 3 additional bonuses, all for a one-time lifetime payment of $397. Now imagine to be able to spot high probability setups every day without the hesitation, having mechanical clarity. You know exactly where to enter, where to exit, and you know where your targets are before the trade setups. Imagine trading swing, day trading without all the chaos, without worrying if that newsletter or indicator you just saw is going to suck you in. 3S Code eliminates all of this. And you can get lifetime access by going to code.t2markets.com. Now, I want to make it crystal clear you understand what's included here. You're going to get access to all of the following platforms: Metastock, Thinkorswim, TradeStation, Ninja 8, TradingView, MT4, and WealthCharts. Now, Metastock and WealthCharts, I think you have to have your own subscription, but my point here is that if you use multiple platforms, you can have access and load this on all. Okay, we don't limit this to just one platform. You're gonna get access to the weekly strategy and scan sessions. So every week, they are recorded as well. We covered my top setups, day and swing trading, using options, trading minis, micros, and more. All questions answered in a live market environment. The indicator and scanner includes a visual plot of the 1, 2, 3 top and bottoms, giving you entry, exit, and stops. All the settings are customizable. You can scan for setups only or trigger only, tops, bottoms, or both, intraday setups or swings or both across multiple time frames and multiple asset classes. Also going to include my chart pattern principle trading manual and guide. This will help jumpstart you by teaching you how the market works, why markets move the way they do, who the players are, and how to look at and understand the market the proper way. Bonus setups, how we use the power of seasonality to trade the pattern, and so much more. You're also going to get my 25 top option strategy guide. This is great regardless of your knowledge of options. I include this guide because I believe options are a powerful trading instrument if you know how to use them properly. So it's important for me to include this so everyone can take advantage of options if they wish to do so and do it the right way using the 3S code. You also get access to our Telegram room. So every single day, I am putting ideas into the chat for our members and students so they can fish, eat fish while they're learning to fish, stocks, ETFs, indices, futures, commodities, currencies, Forex, multiple markets, different time frames. You guys, look, it's not just me. Students come to me all the time. You know, I've tried indicators before, they didn't work. Well, this one is price action based. It's mechanical, it's proven. They say, I'm new, I don't have time. Well, this works on any time frame. This is perfect for those that might check the charts at the end of the day or in the middle of the day. You're going to get complete training. People say markets might change. Well, the strategy is based on price action. If this is still working 15, 20 years later, there's a reason we're still using it. Now, let me tackle what's probably on your mind here. You know, you say, I bought indicators and I've got burned. I get it. But that's why this isn't some secret sauce indicator. I've given you the rules. It's mechanical. You follow the rules. You don't guess. You just execute. Or, you know, you're not experienced, or I don't have hours. You don't need to stare at charts all day. You don't need to stare at charts all day. Our scanner is giving us the trades that we should be looking at. Okay? We're using price action, trading price action reversals, and it means it's timeless. So when your emotions start flaring up and your mega indicators are lagging, our price action is speaking to us in a very clear voice. Okay, so this is your complete package, guys. 3S code indicator, 3S code scanner, weekly strategy scan sessions, private Telegram room, and all of our bonuses. And you can get started here by going to code.t2markets.com. And so I did leave myself here a couple of minutes here for questions, and then I'm also going to look at the chart. So give me 1 second here.
Oh, Silas, I tried that link, and I can't seem to get it to work. I'm not sure how the audience is doing with that. Audience, can you let us know if that link is working or not?
It is working fine on my end. Try that
Okay.
right.
I apologize. Then it was just me then. All right. Can you
Yeah,
put that
I mean,
in?
it works fine for me. So it's,
Okay.
if you go to code.t2markets.com
All right.
and
Sorry
you
about
scroll down,
that.
guys, we do have a PayPal option. I know some folks like to use PayPal. Yeah, you can just click that. That will open up a separate page. You want to finance through PayPal or just use PayPal. But let me do something, guys, if you don't mind. Anthony, I've got a couple minutes, correct?
Oh yeah, you got 4 minutes. You got plenty of
Oh,
time.
cool. So what I'm going to do here, can you guys see my chart? Can you guys see my chart? This is TradingView. Most of you guys are probably familiar. So let me hide some of this drawing. These are just some charts I was going through. There we go. So you guys can see, hopefully, well, now the drawings are going to come back on. Let me just delete it. There we go. So can you guys see the 3S code pattern on the chart? So these do not repaint. So whenever you load this onto your chart, we're all seeing the same thing. All right, we're all seeing the same thing. So we can see we see our last setups. If we want to go back and look, so here's our last long trade. There was target 1, target 2. We had a short trade that hit target 1 to the tick. We had another short trade that hit target 1, and then we had a long trade here that hit target 1. And so let's go pull up a couple of other random. So PayPal. Okay, so here's a long trade. Here's a long trade, hit target 1. Here's another long trade, hit target 1. You see how, I mean, it goes there to the tick. Now, a lot of guys, people will ask, why not use the actual 1, 2, 3? And I'm like, well, that wouldn't make a lot of sense. It's just a platform limitation. So we have to use arrows. So we have a 1 and a 2 and a 3. And price never triggers above the number 2. By the way, we wouldn't take that long anyway because we're trading right into supply. But 1, 2, 3, you can change the colors and stuff like that if you want. I think you can change the symbols, but it never breaks above the number 2. So that's why we don't get the print. So this is a confirmed signal here. And when we get a confirmed signal, you're going to get this little X. All that's doing is telling you, hey, the pattern formed. Okay, the entry is right here because we know it's above the number 2, and the X plot's here just because of a platform limitation. All right, check this out, guys. This was on Friday in the NASDAQ. So we had back-to-back 200-point days in the NASDAQ using this pattern. Look at this. We had a 3S code pattern plot out of one of our supply levels here. That is a 200-point gain to the downside. And the 3S code pattern actually caught the reversal low. Here's the 3S code pattern. Hit target 1, hit target 2. We get ourselves in a risk-free position, and then we just let that sucker rip, right? Look at the hourly chart. Guys, this is huge, huge. 25,800 down to 25,855, followed by a reversal, 25,660. Target 1, 25,895. Look at where it reverses. Look at where it reverses. Guys, I can't make that stuff up. Mark, does it have to break above or below 0.2 or close above or below 0.2? Great question, Mark. I prefer a close. But we have a couple of nuances that we talk about in our training on when we can take an initial break. So meaning we just need to push through, or when we want to wait for an actual close. Okay, so we got a couple of different ways you can trade it. Mustafa, okay, I answered your question. Okay, good, Craig. 5 minute, heck yeah, it does. Let's look at a 5 minute. Let's look at a check this out. So let's go to a 5 minute. So we go to S&P. Look at this chart of the S&P, guys. Cannot make this up. So we have a failed short here. We have a new short here. Target 1, target 2. We have a long here. Target 1, target 2. We have a short here. Target 1, target 2, followed by a reversal long. Target 1, just missed target 2, but close enough for government work. Once you hit target 1, you're in a risk-free trade. You're not putting any risk out, right? Where are my targets 2 and 3? So we have a target 1 and a target 2. Okay, let me erase all that. Target 1 and target 2. So I don't have a target 3, Milo. Shabazz, did that? The link works, guys. We have people coming through. Somebody else said the link does not work. The link is working fine on my end, guys. It's code.t2markets.com. Code.t2markets.com. If you're having issues, I don't know why, because some people are coming in fine. You can email support@t2markets.com and do not put www. I didn't say so. Okay, I'm sorry. Just go to code.t2markets.com. Sorry about that, guys. I need to fix that. Yeah, I got you. Let's see. So Mark, I answered your question. Gustavo, does it work well? 5 minutes. Okay, thanks. Appreciate that, Pete. Okay, guys. I think I got us back on track there. I want to thank Traders Corner team for having me on. I really appreciate it. Guys, I love this stuff. I'm extremely passionate about the markets. I'm extremely passionate about what we've been able to create with the 3S code pattern right here. This is a one-time fee. You own it for life. Load it on multiple platforms and start having fun with it, man. Go check it out this weekend. Put it up on your charts. Check it out, and then get into our Telegram room, and we'll be trading together next week. And I appreciate it, guys and gals. Have a tremendous weekend. Cheers to your favorite team if they're playing. Mine is not. We're eliminated, but have a great rest of your weekend. Stay warm out there. Thanks for having me on, Traders Corner team. I look forward to coming back and talk soon. Take care.
Thank you, Silas, for that excellent presentation on price action and structure. Silas's special link is now in the chat box, so be sure to check it out. That's code.t2markets.com. All right. Our next presenter is Norman Hallett of the Disciplined Trader. Norman will be walking us through the realities of prop trading, how to fit a trading plan to you, overcome common challenges like the blowout line, and build a stable long-term income. Please welcome the great Norman Hallett.
Ladies and gentlemen, thank you, Anthony. I appreciate that. Boy, Silas must have a rush of, crashing his site there.
Yeah, exactly. Everyone's rushing to it, as I was thinking.
Right, got me confused. Got me rushing too.
Yeah.
I want to. I'm not going to offer anybody anything today, other than if you want to have a discussion with me after this presentation. I have nothing to sell you today. I really want to just speak the truth to you today as I see it. I'm going to start the presentation by showing you why you might want to listen to me, and then I'm going to take you through steps that I have created from my experience and now have applied, especially in the last year, to helping traders to get consistent payouts with prop trading. I call this the consistent payout roadmap. There's just a lot of noise out there. I've written a book on prop trading. If you're new, you may want to visit Amazon and invest $15 in my book to understand the power of prop trading and why it may be a good fit for you. I believe it's the greatest thing that's happened to the day trader since the advent of micro contracts and even exchange traded options. This is the only, this next slide is only really one slide that I'll be expanding today. I want you to just write down your communication with me, how you can communicate with me. N Hallett, that's my last name, first initial N Norman, at thedisciplinetrader.com. This is the, Anthony, if you assist me with putting in the chat, this is what I would like in the chat, not my normal website or whatever, because this year I want to create more substantial winners. And to do that, I need to be more in tune with you out there as an individual. This presentation is for traders who are struggling with prop trading, traders who are losing with prop trading. You know, they say, well, you're trading somebody else's money. Well, you know, those fees can add up, but mostly what you're wasting is time. Because if you do this right, there is literally a fast road to actually starting to grab the payouts that you're seeking. If you're winning in prop trading, I think you're going to find this interesting also from a standpoint of accelerating your winning. But really, I'm pointing to the 90% of traders who somehow felt that prop trading would make all the difference, and by trading somebody else's money, that would be all that you need to take the pressure off and start winning in trading, let alone be consistent. So let's get going. Please do stay with me for the. I'll try to absorb those couple of minutes of overtime by Silas, which is fine. This presentation is really just about a half hour long, if that much. So I want to go step by step into. I've experienced with traders. This is kind of the yellow brick road, but if you have a seatbelt in your chair, buckle it, because some of the things that I'm going to say to you and suggest to you may be uncomfortable for some, but I think that mostly you're going to say, there's going to be a lot of ahas during this. And I think at the end, if you decide that what my talk today resonates with you, get a hold of me, let's talk, see if there's something that I can do for you. Okay, because I've got offers for you in all kinds of price ranges, so to speak. So I want to be clear that I'm presenting you something that is from experience. And there aren't many purveyors out there that expound their way of doing things that have my experience. I mean, there's all kind. If you have 1 year type experience 100 times, it doesn't mean you have 100 years of experience. I've done this differently. And let me show you a little bit about my background. If you don't know, I'm a math major from the University of Cincinnati. But this slide right here is where I learned what winning is all about. This is not the exact picture, but in the 1980s, I started as an option trader and a professional option trader, a money manager, commodity trading advisor. And within a year and a half in this firm, I was running this firm, and I was in charge of the production of 63 different professional traders with their own systems and their own way of doing things. Here's where I learned what works and what doesn't. And I can tell you right now, promises and complicated charts, that's not what works. What works is something that works for you. And I'm going to explain what that means in a second. But simplicity lends to clarity. If you have 5 hurdles to jump before you make a trade, then that 5th hurdle is going to make you hesitate because it's not quite there yet, and you're going to miss a trade. You don't need 5 or 6 indicators in order to make a trade. More on that in another discussion, but I wanted you to understand where I come from, and I was responsible to make sure that these people produced. And I'm going to give you the same kinds of discussions that I made with these people whose lives depended on it. They weren't just taking a shot at trading. They were trying to be, they were trying to live their dream through professional trading, and many of them did. And I'm going to show you how I guided them. Okay. I worked for Payne Weber for a while. It's a big name that you know, so I thought I'd throw that in. I was a commodity trading advisor for a year and a half. I made 20% of the millions that I was profited from. Those were the days, and you know, prop traders make 90%, but you know, to make 20% when you're trading several $1 million could be. Those are some of my better earning years, or equivalent to the previous slide there, managing all those people. But it was a lot simpler just trading myself. The problem with Payne Weber was a lot of selling, and I wasn't into that. So I went on my own and have been on my own ever since the 1990s. I've written several books. There are some still on Amazon. Here's the books written about me, because I tend to be excitable on stage, and they usually put me on first on the expos to kind of gin up the crowd, because I'm very passionate about what wins and what doesn't. So I'm gonna have to try to slow down here. The Disciplined Trader was something that we started, and still, of course, is the main thing that we do, in 2000. So we've been around 25 years, going in our 26th year. But our focus, and continues to be, is the mental and emotional aspects of trading. Without that, nothing is going to happen for you. But about 20 years into it, realized that we were getting people disciplined into lousy trading plans. And since I've written books on trading plans, and I manage these kinds of rooms that I talked to you about previously earlier today, I realized that I better help people with the trading plans too. So that's where Loaded Gun, I'm sure you've heard about it. The Simple Trading Plan Loaded Gun was derived, and is still one of the more popular programs out there for trading. And came out with a book most recently, Their Money, Your Profit, cashing in on the prop trading revolution. So these are some of the reasons why I'd really like you to pay attention to what I'm going to tell you right here. Again, I'm not selling anything to you. I just want to lay it out for you so that you understand why you may be struggling. I will start by saying struggling is a habit. Losing is a habit. Winning is a habit. It's all a habit. Those habits create expectations, and those expectations bring you back to the habit. So proper trading and winning trading for most is largely a matter of breaking those habits and becoming a disciplined trader with the right trading plan for you. So let's get into it. Our purpose here, if you're with me, the purpose of this talk is to create a consistent, reliable income with prop trading. Tisha and I, my wife, who's really in charge of the mental part of what we do, we had a toast yesterday to a guy named Andrew, who in the 6th week got his first $2,000 trading. Now that's not a consistent income, but he's on his way. This can happen rapidly for you. We had a toast to Andrew. We love to get those kinds of emails, but this is what we're looking for right now. Consistent, reliable income with prop trading. This is the talk, and I'm going to construct to you the path of how to get this done, okay? First of all, the first issue that always comes up is I can't find a trading plan that works. I can't find a trading plan. I hop from trading plan to trading plan. I'm listening to convincing presentation after convincing presentation, and somehow after a few months and a few hundred or thousands of dollars, I need to find something else because it's not working. I can't find a trading plan that works. Well, I want to show you how to find the perfect trading plan for you. Every trader is different. In that room, every trader is different. You're different than the trader sitting next to you. You need to have a match. So we want to get into quickly what makes the perfect trading plan for you. Well, the first thing I would do, is to hand you a proven, simple trading plan. Now, you may have one, and that's okay. We have one in the Loaded Gun Simple Trading Plan. It doesn't have an RSI and a MACD. It has an RSI. You don't need 2 momentum indicators. It works primarily on a couple of moving averages, etc. It's a very simple trading plan. Again, simplicity is what I found works in that room and with traders who are professional. So you need a simple, proven trading plan, and I can hand that to you if you need it, okay? You need to, the next thing that I do with traders is to have a discovery call. I work with you one-on-one, you and I, and we'll spend a half hour, 45 minutes, an hour, hour and a half the other day I took because somebody was resistant in exposing who they are until I asked the right question. You're going to hide behind your habit. In a one-on-one identity discovery call, I want to identify who you are and not only what your habits are, but what's created that habit, what in your life, whether it is something personal that happened, if you want to share that, and many times traders do, or something that repeated in a bad experience in trading. Well, I want to know who you are from a trader's standpoint, and even from a personal standpoint, if you can do that with me, open up, especially in our first conversation, even just a little bit. Because with that knowledge, I can help you to tweak the simple trading plan to who you are. Let me give you the simplest of examples. If you are a person that has, for some reason, for whatever reason, and it's okay, you lack patience. Okay, if you lack patience, then you're not going to be able to work with a system that only has 2 or 3 triggers, spending 2 or 3 hours on the computer looking at your chart. You're going to bend the rules a little bit just to satisfy wanting to be in. I'm one of those people. I want to be in it. I don't want to sit there watching the screen. I want to be in as many trades responsibly as I can. So there are things that I do to make that happen. One of the simple things that can be done, and you may have thought of it yourself, is that the shorter time frame that you use, if you're used to trading a 10-minute candle chart, go to a 5, go to a 2. Don't go to a 1, but go to a 2. And there's reasons not to go to a 1, and that I will discuss with you privately. But the idea is that the shorter time frame that you use, the more any responsible trading plan will expose their triggers for you. That is the kind of match, the simplest form of a match with the subject of a person who has a challenge with patience. That's the simplest form of it, but there are many different things that you can do in your trading that don't increase to any great extent your risk management profile in your trading, but can match you who you are. Because unless you are matched to your trading plan, you will not succeed. Unless you are matched with your trading plan, you will not succeed. This is the main reason why traders go from trading plan to trading plan. They can't follow it. And when they can't follow it, they make excuses about, they'll point to the losing day that the trading plan had, or they'll make excuses to move to the next shiny object. There are many trading plans out there, some better than others, that can make you money. You need to find a trading plan that matches you, or nothing, or it won't work for you. You'll continue to hop from trading plan to trading plan. So if you start with a simple, proven trading plan, like Loaded Gun, that has simple elements on its own that without any adjustment work, but with those adjustments match you, this is the direction that you need to go to have the perfect trading plan for you. We call them nuances. We apply the nuances to match your identity. I've just given you one small nuance. There are probably 6 or 7 nuances for the trader who lacks patience. How about the trader who has fear of losing? How about the trader who revenge trades, which was the biggest issue with traders that came to me last year, revenge trading. When the markets start to be more volatile, there'll be increased revenge traders because you'll get caught in that volatility. On a losing standpoint, you'll want to get back into volatility, causing more damage. there are fixes for that issue of revenge trading. Okay, you need to apply, and I was the creator of nuances, and I created it in that room that you saw, and I've even added some along the way, because prop trading is a different arena, a different profile, and therefore need different nuances. So I'm saying to you that in order to have the perfect trading plan for you, you need a simple trading plan. I need to understand what your differences are as you as an individual, and then I would apply the nuances to match that identity. And this package of thinking and process that we call it the unique plan DNA alignment. It aligns the plan to you. Okay, and with that, you will have a plan that works. Okay. Let's go to the second question that I always get, the second issue that comes up. I'm going to take a drink of water here. I hope you're enjoying this and that it's ringing true for you, because it is true for 95, 99%. Okay, I'm going to leave that to you. I keep jumping off my trading plan. I got a trading plan that I think can work. I see it working, but I keep jumping off my plan. You need to stick to your trading plan every time. And that's what I'm going to show you how we do that for traders, to stick to your trading plan every time. This is the piece where all these pieces are separate pieces that we can help you with all the entire vision here. If you believe you have a trading plan that works, this right here could be your key, or it could be the third. But let me get into stick to your trading plan every time. This is the area that most traders resist. It's easy to go from trading plan to trading plan because you're not challenging who you are as an individual. I've just explained why that's a problem, and I've given you the fix. Okay, sticking to your trading plan every time is doable. People in our arena are doing it, but how do you do it? You've got to understand who you are and work with that. The first step is, again, a one-on-one identity, but not so much your experience with trading and your personal issues. It does bleed in. It's like a Venn diagram, but this is the area where you work with my wife, Tisha, who is a world-renowned subconscious trainer. She's been on probably most psychological covers of magazine covers in her career, and I brought her in 2000. Okay, we have been working together with traders since then. Okay, now if you're listening to this and you've worked with us, please do confirm what I'm saying in the chat to other people, because sometimes it's, it sounds like I'm bellowing. I don't mean to be, but I love my wife. And I've seen what she's been able to do. Anyway, one-on-one identity, mental and emotional issues. Again, fear of losing, and overcoming losses. That's a big thing. In other words, if you're losing and then not being able to take the next trade because you haven't overcome the loss, you got to put all of that aside. And revenge trading, lack of patience, too much greed is another thing that I think some traders don't. My wife will ask you the kinds of questions, again, on a one-on-one identity meeting, where she will identify who you are and truth, because you may think something is you, but when she digs in with you, you're going to realize and you may uncover something you never really thought was the root. And if you can uncover that one issue, that primary issue, and reverse it, it can be like a domino effect, where all of the other issues that you thought or that you come across that every once in a while all get taken down with handling the primary issue. This is what she's really, really good at. And she does that through a couple of different scientifically proven processes. And this square says scientifically amplifies strengths and eliminate weaknesses. And most traders will look to eliminate weaknesses. what we do is we not only identify your weaknesses, but your strengths also. It's easier to amplify. It's just as easy and more fun, maybe to some, to amplify strengths, but it's more, but it is important, and it's painless, really, in these scientifically proven ways to eliminate your weakness. Sometimes it's just neutralizing your weakness, but Tisha wanted, in this slide, I really had neutralized. Tisha made me change it because she is eliminating weaknesses. I just don't like to overstate things. She says it's not an overstatement. Eliminating your weakness that is getting in your way of your trading is the key, is the key in most cases to your success. Okay, so rather than blaming other things, it's time to look inward, discuss the situation with a professional, and then apply scientifically proven methodology. She uses her method of subconscious training, which is really just spending that time with you one-on-one and recording a meditation for you. I'll call it a meditation that is specifically for you and designed for you so that you get complete reversal of the weakness and amplifying of the strength, because it's the suggestions in the meditation are made specifically for you. They're not generic. Okay, that is important. Every trader is different. If you want to fast track things, you need to be specific, and that's what we do. She uses something called EFT, Emotional Freedom Technique, also, and she'll decide what she wants to do with you. Sometimes she uses both techniques with you, and you'll get 2 recordings to work on between meetings. So the idea here is that EFT is Emotional Freedom Technique. It is some call it the tapping solution. Most tapping solution advocates out there do it incorrectly. She was trained by the person who developed TFT, which was thought field therapy, which is streamlined into EFT. You don't want to get too into it, but she is literally one of the originators of this, and therefore she knows how to apply it specifically to you. It's a meridian oriented thing, and you can look at it and say, well, I don't believe in acupuncture or whatever, and I still don't understand. All I know is it works. There are meridians in your body and so on. She uses it. It is the go-to therapy now for soldiers who come back from the war, the post-traumatic stress disorder. It is the new elite therapy for post-traumatic stress disorder. And there are studies, and I show it in some of my other presentations, that not only does it stop in immediate fashion the post-traumatic stress disorder, but in the follow-ups, they no longer are categorized as post-traumatic stress disorder. That's what this therapy does. Now, I'm not comparing the trauma of traders, but it is a trauma. We apply that process to you if you need it. Okay, it's painless. It's a matter of, it's only a 5-minute process that you'll do online with Tisha. You repeat after what she says as you're tapping meridians on your body, and you'll get the recording to do it on your own. This is science. This is the difference between winning and losing for the majority of traders. Okay, so you want to identify what your issues are. You want to apply the scientific methodology for you personally, and then you want to periodically troubleshoot that for performance. In other words, when you meet with Tisha, you'll get your applications to work on your own, whether it's the subconscious training or the EFT session or both. And then Tisha she'll want to meet with you in a couple of weeks. Because traders some traders, they only do it every other day instead of every day, even though it's a 5-minute session. If you're going to do this, do it. Don't come to me and say I didn't have time to do it. If you're going to be a professional trader and have consistent, reliable income, this piece right now that I'm describing to you is the piece that makes the difference for the vast majority of traders. Okay, this is the piece that you need. It's the most resistant piece, but it's the piece that's the most important. Okay, so you've got to, if we can identify, and we will, you're one-on-one with, she will identify your primary issue, reverse that, causing a domino effect many of the times, using the scientific applications that we use, and then periodically troubleshoot. We call this process the personal empowerment blueprint. And when you're on this blueprint, you will wind up with 100% confidence. okay? Now you have your plan. You have the inner capacity to run it. Now it's a matter of maintaining that possibilities, because I know you know this. You have a trading plan, you bought it for whatever price, it sounded good in the beginning, or it was something expensive, you thought by spending a lot of money that would work. It worked in the beginning, then it crashed. I need to go to something else. It's like everything else. It only works a short period of time. I will say something about AI right now that I do believe, and we can discuss this. I just want to make this statement from my working with professional traders and having been one and rated with other professional traders. The professional traders that are rated top this year may not even be on the list next year without AI. Right now, in the next year or 2 years, you're going to be experimented on with AI. That's all I'll say, that you continue to need to trust yourself, okay? I believe that 5 years from now, everybody will be doing AI, okay? And probably including me, because why not if it works? But I will say to you that the next couple of years, I believe from my sources, professionals that I've talked to and others in the industry, you're going to be experimented on. So the next couple of years, you need to do this on your own and do it the way I'm talking to you about. This is the path, okay? So it works in the beginning, then it crashes. This is what happens with trading plan after trading plan. So how do we solve this? So what you want to do is you want to achieve long-term income by design, okay? We're not doing this to have a good day or a good year. You want to have a reliable long-term income by design. And how do you achieve that? Okay, here's how we help you achieve that. Okay, first of all, we have a trading room. You'll get access to the loaded gun trading room. Okay, it's run by a guy named Dan DeMaria, who is a CBOT floor trader, retired. He was the floor traders. Just like Bam Adebayo, who's with the Heat, all the players go to him when they want to know what's going on. Every basketball team has its experienced person that everybody goes to. This is the trader. This is the floor trader that everybody went to. He was telling me some of his track record yesterday. I could not believe it. And he showed me the statistics. He is running our trading room with his son, Matt, who is getting paid by prop firms. But his son is 27 years old. The two of them run the trading room. Not only is it fun, but it is effective. Okay, he will show, and the two things that I hear is how the first thing is how he keeps the losses very small. He is willing to take a loss and go on to the next trade. It's the person. There's a book called The Best Loser Wins. If you haven't read that book, you may want to. It's not about what you do when you win. Yes, you have to maintain your equity and so on, especially in prop trading where you don't want to dissipate open trade equity. But you want to limit your losses, and it's easy to say that and let the runners run. But how to do that is a habit, and that's what he's good at. One of the things, the other thing that I hear, and not only is he so dogged on keeping the risk very small, when he does lose 2 trades in a row or whatever, it affects him zero. He goes right on to the next trade. Many weeks, and we've had consecutive month after every month we've had since we started this room in April has been a profitable month. I believe there's only been 1 week that has not, but that's not the point. The point is that when you're down, you need to continue to let the long-term capabilities of the trading plan work for you. And that is what I hear, that it does not phase me. He goes right on to the next trade without any baggage, okay? You're gonna learn to do that. You can do it and follow each of his trades and learn how to win, because this is the other thing about the trading room. Winning is a habit. Losing is a habit. Struggling is a habit. And if you're struggling, you're going to continue to struggle until you break that habit. When you follow a winner, I'm talking about the kind of winner that I'm describing. This is just not any trading room. This is a pro and his son showing you how it's done. He taught his son, and now they're both teaching you. Now, you're going to either you can watch it and see it happen and do it on a sim account, which is not the best thing, or go ahead and take the trades on a very small basis with them as they trade. Learn what it's like to win. That's what you'll learn in the loaded gun trading room, okay? You're going to model traders that get paid. They're not; those two are not the only ones that get paid. We have Marina in the room. We have Julie in the room. Notice I just mentioned a couple of women. Those are the two that come to my mind. Women, I think, because they can easily put the ego aside. I'm going to say they make better traders than men. They get there faster, okay? Because they don't have a lot of baggage. Whatever it, and listen, I'm one of those men. I'm one of those men that had a lot of baggage and took. That's why Tisha helped me through this, and now we're going to help you through it. I always knew how to trade, but I needed the mental help. She helped me. Now we're bringing both of that to you in our packages, okay? You want to model traders that get paid, and they're not only the two that are running. There are others in the room. You get to discuss with them. You can match up with them. Listen, trading buddies have that is a major asset to a lot of traders to keep you responsible to who you now are, and that is a winning long-term income by design trader. Okay, and we also have a school site that I've developed. I wish people would be more, I think people are getting used to what a school site is, but it is just a site where we get all together. I try to post on it every day some of the thoughts that I have about that day's trading. Dan, the one who runs the trading room, Maria, he posts on it daily, and we have input. I think most people are just flies on the wall like they are in these presentations, but it's okay to be a fly on the wall if you're getting something from it and you're winning. We also, every last Wednesday of the month, I hold a meeting with everybody. We all discuss some of our wins. The new people talk about some of the things that breakthroughs that they've made. And if there are questions, we answer them. And I don't answer all the questions. We're a community. We're the loaded gun community. And so it is important that you have the backing. You got to have somebody have your back for the long term. We've got your back. The trading room is there for you. You can model the traders, the trading room, what's happening there, and you'll see others that are winning in the trading room. Just not a bunch of strugglers. We have people who are getting paid. You can get paid too, but you have to follow the process. Okay, this to me is the yellow brick road. I'm seeing it work over others. Why not have it work for you? Okay, again, the monthly meetings and the school site. So this area right here on our long term, we call this the total support framework. Okay, this is the total support. Again, you can buddy up or not, or you can just use us in the monthly meetings. You can just be in the trading room and get the support there. This is a long-term support so that you can listen. We're about to be in markets that I believe have not been experienced before. This is just we've never had a president like this, whether you love him or hate him. Things are going to happen, and volatility is going to happen possibly like never before. You need a community. You need to know who you are. You need to match yourself with your trading plan. Okay, you need to be able to run that trading plan, and you need a community to support you in general, even if you're not a community type person, even a fly on the wall. But I'm going to tell you that these 3 steps, these 3 parts of let's call it the pyramid, to achieve consistent, reliable income, we call it the consistent payout roadmap for prop traders. And I put prop traders, but this of course works for any kind of traders. Even if you're a stock trader or an option trader, all of this can work for you. It's just that I happen to focus on futures because it's my love, and prop trading is primarily futures, and that's cool. But if any one of these pieces, if you're a stock trader, whatever, it can work for you. But again, my focus is on prop traders. This is the consistent payout roadmap. You're fooling yourself if you think it's just a trading plan that works for everybody else, and all I have to do is buy it and run it. Not gonna work. Not gonna work. Okay, what you need to match the trading plan to who you are. And when you have that down, you need to then match the input that you're getting from society and the markets and whatever to allow you to offset that, use that as energy to apply your plan so that you can stick to your trading plan every time, so that you have 100% confidence. And then when you have those two pieces together, you need to work on the long term, or let the long term work for you. And that's what that's what this last piece is about, this total support framework to work for you. I told you that this presentation was not like something that you may have heard before, but it is the total truth in one package. This again is my email address. What I'm urging you, and I felt it's like saying urging, what I'm offering you is a conversation with me without pressure, to help you in one or all of these aspects. There are some of you that can afford the whole package and really make it happen for you without the question, because you're dealing with all three aspects. There are some that may believe that they have a trading plan that works, and that's fine. May be able to kind of help you tweak it, maybe, but the idea is that it's the mental and emotional piece that you want. We have separate packages for that. That's probably where a lot of people start that are less financed, because they know they can do it, they know they're capable, but they just can't stick to their guns on applying the system. That's the piece that we've been famous for 25 years. And if you have those pieces together and you need support for the long term, we can do that for you too. So you've got the whole package, all of the pieces. I want you to understand more about how we may be a match for you. No pressure. I'm not going to ask you to do anything. I'm just going to tell you what we have, and then I'm going to ask you if there's anything that you'd like us to help you with. So that is just email me, and I'll show you my calendar, and we'll set something up. Won't cost you a dime, but and only serious people, please don't. I can tell right away. Okay, I want to know that you're serious about being a long-term professional trader that's desirous of long-term prop trading income. These are the people I want to work with, okay? So if you're that person, let's do it. Let's do it. Let's do it together. Let's join the community that's doing it now, and let's make this happen. Okay, well, I wanted to leave that up, and that's what I'd like you to put into the chat. I want to leave this screen up just in case you have any questions. Let's see if there are any questions. I'm going to take a look here, and I'm not real good at discovering the questions, but if there are no questions, then we should be able to get our next presenter up. But Anthony, do you see any questions that I've been asking, or are we pretty much done?
Kumar asked, what if you don't have a plan?
Well, that would be our loaded gun simple trading plan. This is where you know, our current reputation has been born. I think you've probably heard of the loaded gun simple trading plan. My wife thought it was too aggressive name when we named it about 4 years ago. Actually, we made about 5. I took a plan that was working with that room, a general plan that I use, and I converted it with some elements to defend against things like the drawdowns that are counted against you in prop trading and so on, and then tested that, and now we've been working with that literally for the last 3 years as it is. Then we have the nuances to help you fit. So we have the loaded gun simple trading plan. Just email me and I'll show you what we have in that respect. But it is not, you know, it's not unaffordable. It's a great plan, and I think that's probably why you've heard of it. So good question. Are there any other?
How long has the loaded gun trading room been around?
The loaded gun trading room has been around since June. And the good thing about the loaded gun trading room is that I'll give you a trial. You can try it for free, and you can see, I am confident that even with a week in the trading room, if that's all you want, a week in the trading room, you'll see, you know, we've been profitable week after week there. And so I want you to see how that is done. You know, through the day, we'll have winners and losers, but again, the losing is very short-lived, and then we're on to the next trade that has the profit profitability. In fact, each of the months that we've had, the lowest monthly earning was in the mid 2000s, and we had 1 month that was 6,800, which was last month, in that room with the trades that we do online, okay, in the room. So it's but again, you're going to have to look at the room, experience. He may talk too fast for you. He may not talk fast enough for you. Whatever, you have to feel good about the trading room too, not only the fact that he's winning. So everything in this business is a match. When you're uncomfortable, you do stupid things. Okay, so any other questions?
I think that's it.
Okay, well, I'm right on time. Thank you, everybody. I really look forward to communicating with traders who are serious about making this happen for yourself. This is a doable thing. It's happening. Love to help you do it also. Thank you, Anthony, for the opportunity. I always appreciate it.
Oh, yeah, thank you. Thank you, Norman, for that honest and practical look at prop trading success. And we always appreciate you being here as well. So if you're interested in Norman's services and his team, then make sure you email him. So thank you again, Norman, for being here.
Thank you, Anthony.
Yep. Our next presenter is Floyd Bradley, a CEO and founder of TradePilot AI. Floyd will demonstrate how automated and semi-automated strategies work inside NinjaTrader, discuss the benefits of diversification across multiple strategies and instruments, and share how automation can help reduce emotional trading. So please welcome Floyd Bradley. Floyd, I think you're on mute.
Okay, now I'm okay?
Yeah, you're good, thank you.
Great, thank you, Anthony. I have a scratchy throat because I picked up a cold on an airplane flight yesterday, so I apologize. But let's
okay.
get going. I am CEO and founder of TradePilot. Happy to be here. Thank you for the invitation. Hang on a second. Can you still hear me? Because I've gotten feedback that there was a problem.
Yeah, we can hear you.
Okay, I'm sorry. So the disclaimers here: futures trading and options trading have large potential rewards but large potential risks. And you should carefully consider whether trading or active investing is suitable for you in light of your circumstances, knowledge, and financial resources. You could lose all or even more of your initial investment. All right, so having said that, let's go on. A quick biography. I'm American, but I lived half my life abroad. Spent my first 8-9 years in consulting. Then I went into the software industry and worked for NASDAQ-based companies, mainly running UK, running Europe, or running international for those companies. Then I semi-retired and started doing active equity investing, including also option swing trading, and then moved on to futures day trading, which became my favorite area. And so my kind of last career here is I decided to start designing, developing, and marketing futures trading systems, which is what has become TradePilot AI. This is the first homepage on our website. Eventually you could go there and look at our products, services, and team, etc. But we have services and products. I'm going to quickly go over the services, but it's products that I want to concentrate on today. So we had a Sunday education program. We used to do it every week, and then it became once a month, and now it's more sporadic. But we have 30 past presentations that are available. More importantly, now we have the Futures Trading Club, which is our trade room. It's actually a silent trade room, but we have 9 automated strategies working on 5 popular instruments. So that's 45 simultaneous charts, which we scroll through. We have our bot optimization lab, which is looking after backtesting and optimization of our own strategies, and also occasionally I'll do some consultation. But today I want to talk about our products. Our products are all designed using the NinjaTrader trading platform. We decided it was best to focus on one good technology, and NinjaTrader is what we've chosen. We had applied for and been accepted into their ecosystem. And about 3 months ago, I did a similar presentation, and we were invited to do that about automated strategies. So I've just upgraded and updated the presentation for Traders Forum. So here are the 9 automated strategies, or robots, or auto traders, or bots. I'll go through each of them quickly, but on our website, you'll see there's a tagline for each of them, describing the slight difference between them, or major difference between them. Some are maybe understandable by their name, and some require some explanation, and you'll definitely hear more explanations as we go along. One of the best things about our suite of products for people who have more than one product is that they all look and feel very similar. I mean, they're obviously all built on NinjaTrader, so they have some common look and feel right there, but we've also made many of the properties and settings and features consistent across the 9. And if we come out with a 10th or 11th or 12th product in the future, we'll obviously do the same. For example, we all have, each of the bots has time filters. A lot of people have one time filter in their strategies. Some have 2, some have 4. But I think we're the only company that actually has 6. So you can turn the product on automatically at any time, on and off, on and off, on and off through the day, hands-free. We have an extensive money management capability, including account daily goal, max loss, and then strategy daily goal, max loss, which is different than the account because you can have multiple strategies running in one account. And then we have 2 types of profit protection, one for the account, which will turn off the account when it falls below a high water mark, and it'll turn it off for the day, or a trade profit protection it'll turn off the trade, but it will enter new trades as they're triggered. And then we have various things like trade target, trade loss, and the other typical targets and stops that you would expect per contract, including in ticks, dollars, sometimes ATR as well. And clearly there's room for, we have static, but more importantly, we have dynamic, trailing and break even stops, as well as we support several advanced trade management strategies, which is what NinjaTrader calls their the templates, ATMs. Other common look and feel is we support NinjaTrader's 2 of the 4 different start behaviors: wait until flat or immediately submit. Direction can be long only, short only, or both. We have created our own interface for useful information. We put it in the 4 corners. I'll show you in a minute the look and feel of that. You can turn it on or turn it off, but it adds a lot more information than what you normally get from NinjaTrader, including the last trade's P&L, the cumulative P&L for the day, and then whether your different money management filters or settings are on or off, etc. We have optional indicators. We have our own VWAP. You can turn the background colors to different colors based on the moving average directions. We have a squeeze momentum indicator, ADX, a few others. And then we have filters. We've added these a lot in the last year, depending on which bot you're using. Some of them are more appropriate than others, but we have got all of these and are adding a few more over time. The chart trader function in NinjaTrader also allows us to build toggle buttons for many of the features that I've talked about. It allows you to pause and unpause and flatten, turn trailing stop on and off, turn break even on and off, that type of thing. And then some bots have additional buttons that aren't appropriate for all of them. So, but generally, again, the look and feel is very good. And for each product, we have a user manual that's around 20 pages, PDF. Most people don't need to read one after if they've read one and they want to install the next 2, 3 products, it's really pretty much they don't even have to at that point. And how to install is for novice NinjaTrader users. Anybody who's ever had a strategy NinjaTrader knows how to install it. getting started, some tips and techniques. And then we also do send out emails about settings and things. So just to give you an idea of those information panels I mentioned, those 4 green boxes in the corners, again, they can be turned on or turned off. They turn red when the product, when the trade or the result is negative, and they turn green when it's positive. But again, you could change your colors if you want. But look at the different bots here, and you can see they all have those 4 green, four corner info panels. This one happens to be red in the background because I've got the trend background color turned on. That is the 3 moving averages that come as default that you can change, but if they're all in alignment, going bearish, background is red. If they're bullish, green, obviously, or you can any color you want to change that to, but blue if you've got 2 that are bullish, and yellow if you've got 2 that are bearish. Again, the info panels in the corners. Right, so now what are the differences between the bots? Why do we have a suite? Well, those of you who have used automated strategies, and some of you maybe who haven't, but have thought about it, know that there's not necessarily one strategy fits all market conditions. Very typically, you might have a trending strategy or a mean reversion strategy. Those are the 2 main characteristics of different genres of strategies. But you can also have specific things like pivots and order flow and breakout. And so without my reading every word on the slide here, you can see that each one of these different strategies has slightly different characteristics or major different characteristics. And I'll go through each a little bit more in detail. But we are encouraging, we have a vested interest, of course, but we're encouraging our customers to use more than one strategy. And I'll talk more about that, the benefits of a portfolio of strategies, as well as what kind of benefits such as diversification and smoothing of results, and sometimes not being able to anticipate whether a market's going to trend or not trend during the day, and being able to catch at least 1 or 2 of the movements. So these are just screenshots. I will show some live or playback since it's the weekend. Quick demos if I have time. I think I do have time. But TrendBot is a scaling. It's a trending strategy, and it's based on piling on, not really scaling in terms of scaling in on pullbacks, but piling on continuation of trends. So you could be in with one contract, and then the trend continues. You actually go in with a second, and then go in with a third and the fourth, and up. This is an example. All these examples are based on a maximum of 5 contracts, whether they're micros or minis. These just happen to be minis. But you can see this is after the trade completed. You can see that 1, 2, 3, 4 green lines here. Maybe there could be a double on one of them, I'm not sure. But basically, as the different moving averages crossed, it entered, and then it hit the target for the day or whatever the reason was that it closed. But that's how the TrendBot, that's a good TrendBot trade looks like that at the end. The second product, these are all chronological to how we introduced them. The second product we came out with was the ScalerBot, which basically it scales in and scales out. So you're adding new contracts as you get a retracement in the direction that you're looking for. So again, based on moving average crosses to start, as you go back on fixed tick retracement levels, they don't have to be equal, but very often they are. It's just simpler that way. You can see here where that red bar is at the end. If it goes down a little bit further, it's going to buy in at 73.51. If it goes down further, it's going to buy in at 73.39. If it goes down one more time, it's going to buy in at 73.27. But hopefully, based on the moving averages, it's going to bounce back. And so as it goes up, it scales out in a bullish market. If it goes down, it scales in, and eventually it'll end hopefully with a winning trade. We do have a button on the right here, RE on, that stands for re-entry on. So if this trade goes back up and hits the 73.87 target, and you have the re-entry button on, it will actually re-enter a whole new set of trades. So you basically can turn your scaling bot, your scaler bot, which is really a sideways movement bot, into a trending bot, or you can not have re-entry on. The Bouncer Bot was our third product. Very similar to Scalar Bot, but it doesn't use fixed ticks to enter on retracement. It uses the moving averages. We have standard 8, 21, and 34 EMA moving averages, but you can set them to 9, 18, and 30, or whatever number you want. You make them SMA instead of EMA, etc. But we have this, the concept here is that instead of the fixed ticks, it bounces off. And if you look closely, you can see here, it was a bearish trade. You can see that by the red, which means it's a bearish trade, the red 2 there, but you can also see it by the background color here. Price retraced up, hit the white 21 and entered, and then eventually sold for a profit. Up here, hit the magenta 34, entered, and went down and sold a profit right away. Then hit the 34 again, went down and sold. So again, this is an example, and these are longer. These trades took longer, but they bounced off the 8 EMA. So that's a perfect trade of Bouncer Bot, how it looks when you finish. Our fourth product was the Reversal Bot, which is based on identifying pivots, and when there's a reversal bar indicating a pivot's coming. If based on our definition of a reversal bar, it gets painted yellow, and after it does on the next candle, the trade enters. And then when we have a reversal bar going the other way, it's painted blue, and again, a entry comes at the next candle. And in this case, we're using what NinjaTrader calls the ATM. And the ATM over here, you can see ATM strategy. Basically, we've got this one set up to take enter with 5 contracts with an average 40 tick stop, and take out targets at 10, 20, 30, 40, and leave one for a runner. So that's a typical NinjaTrader ATM. And that's the first time we added ATM capability to one of our bots. Our fifth product that came out was Auction Bot. We think we're the only company that has an unfinished auction automated strategy. It identifies through a footprint chart, which you can turn on or turn off. I've not turned it on here because it can get a bit messy to look at. But the footprint chart discovers an unfinished auction and then sets that as a target. So if I try to show you going back, this green bar here started down here, left an unfinished auction, and that's painted cyan. You can paint it any color you want. And so that became a target for the short. And then the shorts were entered, and then there were obviously stops, and then the stops were on a trailing stop, et cetera. Anyway, so basically, it's a sideways movement strategy. Doesn't work very well in strong trends, but works great in sideways movements, particularly low volume time periods and low volume instruments. Our sixth product come out was the breakout strategy. We talked about, some of the previous presenters talked about breakouts. Real easy to set up. Most of our customers use it for opening range issues. Some people do 15-minute opening range, some do 30-minute opening range, some do 60, some do 3. But in the trade room for the Futures Trading Club, we use a 30-minute just because it's in the 90 minutes of trading. It's sort of the good time to look at setting up. So basically, here's an example of RTY. A green line or any color you want is painted at the high for the 30-minute open. These are, by the way, California times down here because that's where I was living for 16 years. And then the bottom is red, and so that's your range, your opening range. And then when when price breaks the range, breaches it up or down, a break up or break down, the trade is entered. And then we have 3 ways of doing that. We can you can use an ATM, which is not this example, or you can use fixed targets and fixed stops, or you can use trailing stops. And you can, the fixed ones I mentioned are fixed as a percentage of the range. So it actually is a dynamic calculation. It'll take the range and maybe set the 5th target to be 1 times the range of the leading up to that, etc. Very easy. It's one of our easiest bots to use, to learn and to use. And then our squeeze bot, recently introduced. It's based on the squeeze indicator, which we have built our own. We actually sell it separately, but most people buy it with the bot, or comes with the bot. And those of you who know the John Carter squeeze, or you know the interplay of the Bollinger Bands with the Keltner channels, and as volatility creates them to be compressed or expanding, the momentum histogram goes up and down, and then the squeeze of compression is shown by a red dot. But when the red dot turns green, it's known as a firing of the squeeze. It's when compression has sprung open, and you normally get your big movements. In this case, the product enters the trade after the first green bar, green dot. So that would be here. We have the ability to scale in. So here it entered, but probably scaled in it for a while. Anyway, and then quickly made its target, which in this case was, I'm guessing, $384. So that's the squeeze bot. And then the ATM bot, which again, using the NinjaTrader advanced trade management strategy template, it's called ATMs. Basically, it's a very simple strategy that looks for a moving average crossover. Here, you can ask for the fast moving average crossing the medium. You can ask for the medium crossing the slow. You can ask for the fast crossing the slow. And you can define those moving averages. As I said, you don't have to use 8, 21, 34. You can use your own. And then the ATM will kick in. You can use any ATM of your own that you've created in the past, and we also offer 4 sample ATMs, 2 for NQ and 2 for ES. And typically, people who use the ES ATM, if they don't use their own, they'll also use the same one for gold and crude, etc. And then the 9th one is the reversion bot, which is, as it sounds, it's a mean reversion strategy. And it's based on first standard deviation, second standard deviation, third standard deviation, and typically will enter like 2.5 standard deviations and take the profit at 1.5, or however you want to set it. It's our newest bot. We haven't actually formally released it yet, but we have a number of customers who are using it, even though we have not publicly, advertised it yet. It is available. Now, as an example, let's see if I can get these to work. The breakout is probably the simplest one to show you. Some of these are on fast playback. The breakout bot, here's gold before the market opens. Again, it's a this does have Eastern time, 9:30. So now the market's open. These are 1-minute bars. Most of our trading in the trade room is done on 3-minute bars. The breakout bot doesn't require 3 minutes, 1 minute, 2 minutes. It works on anything, because as soon as the breakout occurs, it will take the trade. On the other hand, if you want, you can set it to trade immediately, enter when there's a breach, or you can say wait till the bar is finished, in which case it does matter what bar you're using, whether you're using a 1 minute or a 3 minute or 5 or something. I believe this one is set to when it hit. Okay, so the 30 minutes is over. You can see we've changed the color of the high and low range. It's now looking for the white dotted line to be breached, either up or down. And there it enters with 5 contracts, with 5 fixed targets and 5 trailing stops. Well, these are not trailing stops. These are fixed stops, but they disappear, shall we say, as obviously as their counterpart targets are reached, the stops. If you don't give your product, if you don't give your strategy room to trade, then you may not be able to reach your target. So these are just an example where it's not a breakaway trade, but it worked. And in this case, it hit its daily max goal. Right. So that is Example of breakout bot, scalar bot. Again, as I described it, it's based on a moving average. It'll start with a moving average crossover. And again, we'll have maximum 5 contracts. Okay, so the open is just, there comes the open, it's just open now. And this is NASDAQ. And we've got, it's actually taken a long, because at the time of 9:30, the yellow was above the white, which does look a little bit counter to what you might expect, but it's turned out to be a profitable trade. And here we've got re-entry on. So after it made its first target, it re-entered a whole new set of buys and stops, targets and stops. And if you look on the lower left-hand corner, it's up to $900 trade so far. Yeah, it can go into the red on at any moment in time as it scales back. But you want to keep your eye on the total target, the total market. And again, I've got this set for an account daily goal. You can see in the upper left-hand corner, $1,500, account max loss of $750. We're up to $1,220 now. And you'll get slippage one way or the other when it hits these, because you know, there's a small lag between when price hits targets, or when there's a signal to close everything. You know, there's going to be a nanosecond or whatever for NinjaTrader to execute that, and there'll always be some slippage one way or the other. But this is an example where it's getting close to the daily goal. In fact, I think just reached it there. Okay, so but there we got $110 of positive slippage. Always nice to see positive slippage. Always painful to see negative. All right, so that's the second one. I'll give you an example of a couple more here. If I can get back to PowerPoint here, okay, so here we've got an example of a bot that's got a filter on. We've just added the squeeze filter to the trend bot. So here you see it on the lower panel, you've got the squeeze, which right now is a negative histogram, although yellow meaning it's not as negative as it was when it was red. Now we're actually turning positive. But we don't actually have a squeeze yet. So this is based on do not take a trade unless there has been a squeeze and then the squeeze fires. So this is now really setting up a trade. Well, it's not even setting up yet because there's no squeeze firing. And so it won't trade at all. Otherwise, it would have traded because the trend bot is based on a cross of moving averages. So if the squeeze filter had not been on, it would have taken probably a bullish trade here. I think is the blue turn, yeah, the blue crossed the yellow, and it would have taken another trade when the yellow crossed the pink and the blue crossed the pink, you know, but it didn't. Now we've got a squeeze going on. Again, this is a 3-minute bar sped up. And here it will wait until it sees a green dot, and the green dot has to close. Okay, now it closed, and it went in. So it was in and out quick. $1,000.25. But again, we are using more and more filters for increasing probability of trades, and that was an example of one that we've added. Auction bots, since you don't, most of you have not seen it on unfinished auction, probably. Here's the footprint chart. Again, it's not blown up right now, but and this is pretty fast because I've sped it up for the purposes of demonstration. But basically, when an unfinished auction appears, a line will be drawn, a horizontal line there, and then the scaling in entries will appear. The trade may not actually trigger because price may not have retraced to the point where there it has. Now the purple line, see if it can't get back to a minimum profit level, it doesn't even take the trade. It lays out the trades and looks for a retracement. So again, we're up to 1370. And there's a trade entry. There's another trade entry. And now we've, I think, reached our target. Right, with a $10 negative slippage. A minor slip, it's very minor. Okay, so let's see, how am I doing on time here? 15 more minutes, right? Well, I think I've got time for the last one. Bouncer bot. Now, bouncer bot is very similar to the scalar bot. So let's go on and talk about other things, because you get the idea. All of these are on our YouTube channel. We have over 150 examples on our YouTube channel. Let's get back to what did I do? Did I lose? I lost my place here. All right, sorry. Let me get to see if I get down. Okay, here we are. Okay, so I wanted to talk about diversification. Some of you who have never used automated strategies might like to try using one. And we can give advice as to, based on your style or your interests, which one might be the best one to start with. But for those of you who have already used one or two in the past of other vendors, it might even be worth considering starting with a couple to get an idea of the diversification. And there really are 4 different levels of diversification we can offer to the extent that our bots work on any instrument, and we have 9. So the simplest way, obviously, is to start with one bot against one instrument. You get no diversification, but you clearly get focus. If you like to trade the Nasdaq, using the trend bot with Nasdaq is probably our biggest sweet spot in terms of past performance. The second level or first level of diversification would be to use, just let's say, license one of our products and use it on multiple instruments. So you could trade the Nasdaq and the ES, and gold, or RTY and CL, or you can do some obscure things like heating gas and copper and palladium. I mean, there are a lot of instruments that NinjaTrader supports. Most of our users are using the ones that I've talked about, the ones we test, typically ES, NQ, RTY, GC, and CL. The third level diversification is to actually have different bots working on the same instrument. Now, the way we've designed our product, you need more than one account to do that, because you can't use 2 different bots on the same instrument in the same account. That's going to have a conflict where one bot might be saying go long and one might be saying go short at the same time. But with multiple accounts, particularly if you're using prop firms, etc., it's easy to accomplish. And then the final level would be multiple bots on multiple instruments. I call that the Unger method. If those of you know who the guy who won 4 of the world trading competitions, annual trading conferences, the only person who's won 4, he does like 30 different 30 strategies, I believe, running probably across 10 or more instruments. All right, so let's take a look at what that looks like. One bot, one instrument, quite simple. If you know NinjaTrader, or if you don't, you'll typically have a tab at the bottom showing you've got one chart, one bot. Here's the Nasdaq in one window, one tab, one so-called workspace. You want to go to the next level where you want to have more than one instrument, but the same bot. So here's an example of the breakout bot. But if you look, hopefully you can see it at the bottom. I've got 5 tabs. I've got an ES tab, NQ, RTY, gold, and crude. And so this is the gold, and it's looking for, here's the 30 minutes, which is now, oops, sorry. The 30 minutes has finished, but the price is still not broken out one way or the other yet. But meanwhile, while it's waiting, it could be Nasdaq has already broken out and taken a positive trade, or a profitable trade. Or you could have had a fake breakout, as we know it can happen, or you might be losing money on CL right now, but waiting on gold. So, but again, NinjaTrader allows you very easily to set that up, and we would recommend, if you have the breakout bot, for example, to run it on more than one instrument. It doesn't cost any more. We have one price. You can unlimited number of instruments. So the third level, when I talked about where you had multiple bots on one instrument, because I said you had multiple accounts, You don't have to have it set up graphically like this, but you can, a 2x2 matrix can give you an example. We've got, you have different accounts for each of the bots. So here I've got TrendBot working on Russell 2000, got ScalarBot working, oh, sorry, this is an example where you're running on the same instrument. So all 4 of these are running on the same instrument, but you have to have 4 different accounts. So you got Breakout Bot, ATM Bot, TrendBot. And that's the format, probably the best way to watch that if you were doing it that way. And then the final one would be where I talked about multiple bots, multiple instruments. There you've got, again, the different tabs like Scalar Bot working on the ES. You've got Bouncer Bot working on the NQ, Trend Bot working on RTY, Auction Bot working on GC, and Reversal Bot working on CL. You're talking, again, maximum diversification. In this case, you would have to license 5 of our strategies if you wanted to have 5 tabs. You could have 3 tabs, you can have 10 tabs. You can have tabs for micros and tabs for minis. You can have micros and minis in the same account because they're different instruments. So that is an example of the discussion about diversification. The pricing is on our website. We offer leases, and we also offer and encourage lifetime licenses. So working backwards, the lifetime license is $2,500 roughly. 12-month leases, $1,495, and 6, 3 and 1. So the easiest way or simplest way to put your toe in the water is going to cost $295. But clearly, if you really want to go in for 3 months, why spend $900 when you only have to spend $600? If you're going to go in for 6 months, why spend $1,800 when you only have to spend, we've got it clearly priced so that you are encouraged to try it for longer or use it for longer. But definitely, if you're going to use it more than a year and a half, you might as well buy the whole shebang, and you get 2 CPU licenses, free tech support for life, free upgrades, and free updates. We do have multiple bot volume discounts. They're not published yet. I have a PDF for that, but just email me. The onboarding process is a little bit multi-step, but basically you normally purchase on our website. You have to then sign up. Part of the process is signing up as a member, and then we email you the software user manual, getting started manual, the installation manuals, etc. And then you submit your machine ID in the members area and you start trading. And any of these products can be traded semi-manually as well as manually, because you can modify the stops and targets. Before I talk about the bonus plan at the end, this is kind of a bonus plan because we used to charge for this, but we're now making it free. But it's free for anybody, not just Traders Corner members. But the Futures Trading Club is our free trade room, but it's a silent trade room. I run it, but I don't talk. I'm busy enough as it is scrolling between 45 charts. Basically, all 9 strategies are working against those same 5 instruments I showed you today, which means we have 45. Sometimes I'll run 50 or 55 because I'm testing some new setting, testing live. We start at 9:15 with a PowerPoint, and then at 9:30, trading kicks in. The bots turn themselves on and turn themselves off automatically using a simple time filter. We trade for 90 minutes because I used to trade for 2 hours, but I found the last 30 minutes, most of the trades had already hit their daily goal or hit their daily loss, max loss before 11 o'clock. So it just wasn't worth keeping the trade room open after 11. So it's a 90 very interesting minutes. Most of it's hands-free. Occasionally you'll see me move a stop up or move a target down, or vice versa, as I see something that sometimes it's easier to do that than to set up a complicated trailing stop and break even ATM or whatever. But it's 90% hands-free. And then basically this meeting ID, you don't need this link down here if you're a Zoom. Anybody can really be a Zoom user without that. Anyway, just write that down, those numbers, that meeting ID, and the passcode FTC for Futures Trading Club means that you can come in anytime you want. The format looks something like this, like you've seen before. Here's an example where I'll zoom in once in a while on a winning trade. There's example of the bouncer bot. Right, so what's the bonus? Because we're running out of time. 3 bonuses. I think we're giving away more than anyone else is giving away today. This is a $10,000 bonus, the first one here. It's only available for about 3 days to make your decision. If you buy one of our lifetime licenses of any of our products, doesn't matter, because you'll see the deal. We'll give you 4 more for free, for life. So you're talking about $12,500 of software for $2,500. So $10,000 for free. And you choose any 5 you want, and you can swap them. So you could buy 5. You could, for the price of 1, buy 5. And a few months later say, I don't really like Bouncer Bot. It's too close to Scalar Bot. Why don't I try Auction Bot? And we'll swap them for you. All we have to do is just do the back end switch on the machine ID. And it's easy for us to switch them over for you. You've got to email me. All these offers are free. It's email. I don't have a landing page for these. So just email me, fbradley@TradePilotAI.com. The second one is for anybody who comes. Sorry, I say recorded. I guess this is not being recorded. So those of you who are watching today, and I know there's over 100 people logged in. This expires at the end of January. It's a 3-for-1 instead of a 5-for-1. Basically, for the $295, instead of just getting 1 month, 1 bot, we'll give you 3 months for 1 bot, or we'll give you 3 bots for 1 month, or 1 bot for 3 months that you choose. You know, it's the same giveaway, 3-for-1. Again, email me with that subject line. And then for anybody the rest of this year, any new customer from Trading Forum who's never bought from us before, will honor a 50% discount on any product, any lease, any purchase, just using the promo code at checkout. Again, off the website, TF 2026. And again, if you were going to do that, instead of just buying 1 month for $295, I would recommend buying 3 months or 6 months, because you'll get a better deal. Totally. Right. 3 more minutes. Any questions? I don't know if I'll see questions. Anthony, are you still there?
Yeah, I'm here. Yeah, I was just gonna ask you, are you able to see questions or no?
Yeah, sorry, I can see the box now, or
Okay.
my email address, which you put in. Thank you.
Yeah. So Dan's asking, can you do commodities?
Well, yes, absolutely. In the sense of a commodity being an agricultural product or a metal or energy product. Gold, technically gold and oil are commodities, but you can do wheat, sugar. You can do any product that's supported by NinjaTrader.
Okay.
I used to do the DAX. I made a lot of money on silver one weekend. This was a couple of years ago when I was developing the products. But you know, I typically don't now. I just don't have time personally. But you can use also ZB, ZN, you know, the fixed income products. And I guess you can use some of the, you know, this is not a Forex product per se, but you can definitely use the NinjaTrader. You know, you can use sterling and the euro and the yen, whichever ones are supported by NinjaTrader.
David's asking, how long have your bots been available to retail traders? And he says yes, because he's tried a few bots and that have been around for a few years or several years, and then they seem to work initially, and then after a few months, performance sours. So he wants to know, do you update the algorithm to adjust to market changes?
Yeah, good question. We've been around. I started developing these and designing them in 2022. We started coding in 2023, and that's when we first sold TrendBot, and then we became an LLC in 2024. We've gone from 1 bot to 3 to 6 to 9. What we don't, so we say, upgrade algorithms. We normally add features and functions. So we've expanded the money management functionality. We have added filters, and we have, you know, when requested by a user for something that we didn't think of, we've added, you know, again, a capability. what we tend to update is more of a sending out on a regular basis based on what strategy you own. What our back testing has said now looks like a better setting. TrendBot is now working really well on NASDAQ and ES, but for some reason does not seem to be working as well on RTY as it used to. We think we should probably not use RTY.
Okay, and
better stops and targets, things like that. We'll show our latest back testing results.
okay, and how do you send optimized parameters?
Well, how do we, or how do the user do it?
Sorry, yeah.
How does the user? Okay, so anybody who, the properties settings in NinjaTrader are extensive. I mean, we're talking about people who know will know it can be pages and pages of settings, and most of them are default settings, and there are only 5 or 6 like key settings. So the user would basically go in and just change the key settings like moving averages or target stops, money management, things like that. They're real easy. You set them, you put them in, and you save them as a template. What we do is when we back test, we use what's called the playback utility with market replay data. So it's tick-based price data. We don't use the NinjaTrader strategy analyzer because we find it's not accurate and not reliable for intraday scalping. It's more based on a 1-minute bar and doesn't work for the kind of bots we have.
Okay, and John's asking, what is the pricing for the trading room?
The trading room's free. We used to price up $1,400 for a year or something. It's now free. But again, it's silent, so you're not going to get tips and techniques from me. It's more of a demonstration of the bots working in real time. You'll see winners and you'll see losers there.
Willie wants to know, can you do Forex?
Only we haven't done it, but and I guess if NinjaTrader supports it, but we don't have any users. We've not kind of advertised that per se. We just know people have used it with using the the futures for the pound or the euro, etc. But we're not specifically trying it with Forex.
All right. And one last question, how can we get performance data on your bots before purchasing? Win rate, profit factor, max drawdown, etc.
Email me and I will give you as much as I can.
All right. And what's your email address? Might as well give that
there on the last page.
Oh yeah, it's there. F Bradley at TradePilotAI.com.
Yeah, and you've got it in the looks like you've got it in the chat.
I got it in the chat there. Yeah. So,
thank you, Anthony.
You're welcome. You are welcome. Thanks for being here.
Great day.
Yeah, it was. Yeah. Thank you, Floyd, for that insightful look at automation and systematic trading. Floyd's email is in there. So if you have any more questions in the chat box, be sure to email him. And what else did we say? How do they contact you besides that? Just go to the website, TradePilotAI.com.
Yep.
Yeah. All right. Thank you, Floyd. We appreciate it. Thanks for being here. All right. Our next presenter is Leigh Goldstein, a trading director at 10minutetrades.com. Leigh has over 10 years of experience trading futures with a focus on news and event-driven markets. He'll be introducing the magnet strategy designed to trade around market opens, closes, and major news events with consistency. So everyone, please welcome Mr. Leigh Goldstein.
Okay, can you hear me?
We can
Testing
hear
1,
you.
2. All right, good. Hey, you're scaring me calling me Leigh. It's like it's like.
Is it Leigh or Leigh?
It's Leigh.
It is Leigh. All right, sorry.
We've been doing this long enough.
I've always been wanting to call you Leigh because I worked with a Leigh for a long time. But
yeah,
for some
no
reason,
problem.
Yeah. Thanks for
If
being
I
here.
told you all the different things people called me my whole life, leg and lag, it's kind of crazy. All right, I'll get started. Thanks for the invite and thanks for the thanks for getting started. All right, so I want to say hello to everybody. Usually I'm early on Saturdays. I usually like to go early, but today I'm late and I know there's just one more after me, so everybody must be tired trying to figure out which system is the best for you. So I'm just going to talk about our new software today. We have a product called the Magnet Strategy that I'm really excited about. It's something new that my members want to kill me because it hasn't been released yet, something we've been working really hard on. And it is literally, I hope, no more than a week or two away, or people literally going to come to my house and murder me because we wanted to get this out at the end of the year. And it's just, we've added a lot of features to the software, and it's been a more complicated upgrade than we thought, but it's going to be worth it. And I want to talk about what magnets are, why they always work, and why usually in trading you never use the words always and never. But with magnets, we can use the word always, and I'm excited about it. So my name is Leigh Goldstein. I'm the trading director for 10-minute trades. Please remember, you can lose money trading futures. Everybody should know that. Trade carefully. You know, don't trade your mortgage money until you know what you're doing anyway. At 10-minute trades, we trade using the NinjaTrader platform. We are a NinjaTrader partner. That means they've done some vetting about us, that we are an honorable company. We trade futures, and our software installs into the NinjaTrader platform. At 10-minute trades, we have a system. What we do is very systematic. We are a news trading company, but really when you expand it, we trade news, we trade fast moving events, we trade market opens. So we don't, almost anything you trade anyway is news, right? I mean, something causes the market to move. So much of what people trade is news trading. Sometimes you don't even know it. But it's important to know it so you don't get stuck in the market when a news release is coming out and it destroys a trade. So no matter what, it's very important to know about news, and everybody should go to our website, 10minutetrades.com, and sign up for our free video, how to find your own 10-minute trades, because if you do that, we'll give you our free schedule. We'll send it to you every week. And we call our schedule the WMM, the weekly market movers. We have a system that has 4 major elements: weekly market mover, daily market movers are the trade reports. Our trade room access is element number 3. And then of course our software. Our software is made up of a lot of different setups. We've got the news trader strategy, the magnet strategy, and our trap trade strategy. Inside the news trader are 3 major strategies that we use: the breakout or spike trading, which everybody knows what that means. Put an order above and below the current price, the news comes out, the price explodes, and you wind up hopefully having a really nice profit. Let me show you a spike trade, because we had a great spike trade at the beginning of the week. In January, the WASDE report, which is a grain report, comes out together with the quarterly grain report. They trade together every January, and they're very often an excellent trade. What's fascinating is, because of what's been going on with tariffs and China not buying soybeans, finally they bought some soybeans a few months ago after a year of not buying soybeans. But the WASDE report and the quarterly grain report is definitely affected by the amount of trade and the tariffs regarding China, because they were one of our biggest customers. And we're starting to see these grain reports moving in a more volatile way now that soybean sales are starting to happen again. The WASDE report, you could see there was a big explosion. It went to the short side, pulled us into the market. Every single person in our trade room made money on this trade. And this is how the trade happens. Let me show it to you. The actual trade itself was at noon on Monday. And you could see on the right, I was trading soybeans in a profit account. On the left, I was trading corn in our cash account. And we made over $400 in cash, and the same in our prop account on the soybeans. And like I said, every single person in the trade room made money on that trade. We have a setup We send our members the setup. That's called our daily market mover. That's our setup. And as long as you just followed our setup that morning, and we've been trading this event for as many years as I've been working for 10-minute trades. It's 8 years now we've been trading the WASD and the quarterly grains report. It's been one of our best trades. And we have a setup for it. And we send the setup the day before the event. It's part of our system. That's how we do things. The day before the news, we send our members reports on many of the events we're going to trade the next day. So the elements of our system, the weekly schedule, the daily trade reports, trade room access, and of course our software. This is a sample of what our weekly schedule looks like. And the weekly schedule has the important events that we believe will move the markets in the upcoming week. And these are the futures markets. And we have our time of the event, the time that our trade room opens, because our trade room, we leave it open all week so people can bounce in and out of the room, talk to each other, but the trade room is active at very specific times, and those times are around the news. So you can see on the weekly schedule when our trade room is active, what event we're trading, possibly the instruments we're considering to trade, and then we also show if we're going to stream that day on YouTube, which event. And then we have something called watch mode. A watch mode is a mode where it might be an event we're not trading, we're just keeping an eye on it. Maybe we traded it before, maybe we're thinking of trading a new event that's looking good, but watch mode usually means it's something we're keeping our eye on, not necessarily trading. This is an example of our daily market mover, our trade reports, and many of our trade reports, we have a couple of different styles of trade reports. We have deeper dive and we have smaller trade reports. This is a deeper dive where it has a mini journal, the last 6 trades and what happened. It also has a setup that we're considering using that day. It has up to 2 years of history, tick movement, things of that sort. Of course, the instrument we're trading, and then some commentary about the event. And there might be a second or third way that we're going to trade the event. So our trading system, you know, you might have a report, you might have a news report that moves the MNQ, it might move the RTY, and it might move bonds. So we are studying the event and figuring out which is the best instrument to trade, and then we create our setups around what we feel is the best instrument. And sometimes it's tricky. Sometimes reports are inconsistent, where maybe 1 month the MNQ was great, maybe 1 month the YM was great. So it's our goal always to try and trade the best of the best events, the events that are consistent, week in or month in or quarter in, over and over. Some are weekly reports, quarterly reports, monthly reports. Our goal is not to look at so much technical analysis. We're looking at the way events behave, and we study the way they behave, and over, month after month, we are deciding which events to trade by the ones that behave the best. And when I say behave, you know, if a report goes in one direction most of the time after the news is released, then that report most probably would be a spike report or a breakout. If a report chops around and reverses a lot, then that report might be what we call a trap trade. We have a very specialized type of a reversal trade. One of the events that we do a lot of trap trades on, FOMC and US retail news. And this is what a trap trade looks like. This was existing home sales, which is another one of our trades that we use a trap trade. So what we do in a trap trade, we put our orders on the chart 5 seconds before the news comes out. And if you watch on the right side, let me get it right before the news came out, right on the right side, we have 2 orders above the current price, the orange arrow, 2 orders below the current price, and with a trap trade, when the news comes out, if the price shoots up, we go short. If the price shoots down, we buy the market, and we expect to make our money as the market changes direction. This particular trade on the right, existing home sales, we got filled to the short side. Price reversed. It went up first, filled us short, and when it finished moving to the short side, we took some profit. Then what happens, very often, sometimes it will change direction, go back in the original pop, which in this case was long. You could see this one, we actually left some money on the table because it went down, it went up first, put us in short, then it went down, and then it took us out of the market, and then it went down again. And sometimes that happens. But it was a very, very nice, profitable trade. It popped up first, put us in the market short, it changed direction and went short, and that's where we made our profit. And then, you know, at that point, maybe we'll take a second trade using a different feature in our software. We have quite a few different setups that let us trade at the exact moment of the news and around the news. After the news is over, there are many opportunities. And one of the big things that we've programmed into our magnet, the new magnet strategy, is trading after the news. Inside of our magnet strategy, we have a whole full-blown signal trading system that helps us trade after the news. One of the things we've seen is these tremendously reliable reversals that we see, especially after new highs and new lows are being made. And our magnet system takes advantage of those reversals. So the key to what we do, however, is we trade on a schedule. We trade around news or at the news. And we call our trading system appointment-based trading. It's a time-based, pre-planned approach to the market. You can schedule your trades up to a month in advance, and we have different categories that trigger our trades. High impact economic reports, GDP, jobs reports, existing homes, big company earnings reports. Let me show you a great earnings report, because what's coming up this week? Netflix earnings. So earnings season is just getting ready to start heating up, and we trade a lot of the big tech earnings, and we make very nice money on these trades. Now remember, we're not trading the stock, we're trading the earnings using futures. One of our favorite earnings trades, United Health. They release their earnings very reliably every quarter. They release their earnings 5 minutes to 6 in the morning. We all get up early and we're all in our trade room nice and early. Our software creates a range trade. What happens is we put orders above a range, below a range, and when the earnings come out, it causes the instrument we're trading to burst, most often in a very strong one-directional burst with United Health. We've been trading this event for years, and you could see we were trading the YM. It burst in one direction when the earnings came out. We were able to move our stop into a safe position and then trail if it didn't hit our second target. In this case, it hit our second target for a very nice multi-hundred earnings winner. And what's great is we were done in that trade in less than a minute, and it was 5 to 6 in the morning. But that's earnings trading futures. We study major earnings trades, and we find which instrument, which future is being affected the most by the earnings. Apple, of course, would be the NQ, Amazon, the NQ. United Health, we trade the YM because that moves the best. And then category number 3, market opens and closes. Every morning, we are in our trade room. We trade the market open. We trade the US market open, the oil market open. And then sometimes, in particular, when we trade earnings in the afternoon, we'll trade the market close. And those are also very nice setups that we have. And again, we go over those setups in our trade rooms, and we teach our members how to take these setups using our software in the trade room. There's hundreds of these triggers that are inside these three major categories. There's literally hundreds of events. We find these events on the various free calendars like Forex Factory, investing.com. Those are the places that we're looking for our events. If you've never been to forexfactory.com, they have a weekly calendar where they list all the events and they color code them by importance. We have vetted all these events over the years. So we know which the best events are to trade. We go over them with our members, and we also used a website called investing.com. And again, we teach our members how to find events, how to study the events, how to look up extra data about the events. And it's a fantastic way to trade. We love trading on a schedule. So we teach you how to find the trades, and then we show you how to trade them. And we do the same thing with earnings. We have an earnings site that we use, earningswhispers.com. They have a great earnings calendar. They list the important earnings trades that are coming up, and we explain to our members, these are the things you want to look for when you're looking for the good earnings trades. You know, we want companies that have billions of dollars in revenue. We want companies that release their earnings on a regular time frame. In other words, you can't trade earnings if one quarter they release their earnings at 6 a.m. and the next quarter at 7:30 in the morning. There are many companies that release their earnings over and over at the same time, and those are the main ones that we use. And then the fourth calendar that we use that we really enjoy is a calendar called Financial Juice. They have a squawk box, and it isn't free, but it's worth signing up for. If you're a news trader, they have something they call voice news. So, and we listen to the news being released in our headset. They talk it, and that is a great way to trade the news. It helps you not have to leave your charts to look at text, but you're hearing the news in your headset. It makes it a great addition to trading events, trading the news, listening to what's going on during the trading day. Let's be honest, with everything that's going on, maybe a tweet's being made, maybe a Fed head saying something. You want to know what's going on because it's going to affect your trades. So whether you trade the news or not, if you spend 1 month with us, it'll make you a safer and a smarter trader. So that's something I would highly recommend. Spend a month with us at least and learn about keeping yourself safe as a trader. The way that we trade, you can trade the news in prop accounts. You got to make sure you choose the right companies. Not every company lets you trade right at the moment of news, but more and more are allowing it these days. And we teach our members what companies we like the best, and we have a great community. In our community of traders, in our trade room, people do an unbelievable amount of sharing, and that is like the key part of becoming a good and successful trader. Sharing your setups, sharing your learning, you know, things you do wrong. If you don't have a place where you can share, it's really hard to just trade all by yourself in your room, and it's lonely. So being part of a community is a great way to trade. It's a great way to learn, certainly if you're a new trader. And we love our community. We have really nice people, and they all really share well. A lot of people, the person that went before me was talking about how he made money on silver. A lot of our traders are actually trading the silver open in the morning. We trade the gold open at times. It's really great to be part of a community where people share their setups. No one company can supply everything and all there is to know about trading the market. And that's why it's so important to be part of a bigger group. So just quickly, our software strategies are custom add-ons to NinjaTrader. We have multiple setups. reversals, breakouts, trap trades, earnings trades, discretionary trades, automated trades, semi-automated trades. There's many, many different ways that we can trade. And our software is a super, what I call it, it's called a super ATM. It's an automated trade management program. So what does that mean? You know how when you load up a platform and they have a programming language in that platform, and that language controls whether your trailing is on or if your trailing is off. And a lot of times it's complicated to learn that language. Well, our software can replace that necessity for learning the language. Our software essentially takes the place of the internal ATM of NinjaTrader. So I call it a super ATM. Well, let's get into the magnet, because this is, you know, kind of a short presentation. Let me tell you what is a magnet and why we love our strategy so much. Now, we've had version 1 of the strategy for the past year, and it's been a fantastic strategy. But magnets are, when we were trading news over the years, we always noticed that news tends to pop to certain levels or drops to certain levels. And just in general, when you're looking at charts, certain levels are always getting tested over and over all day long. Every instrument that you like trading, magnets are coming up on the chart. And we realized that these levels are getting tested over and over. And then, of course, we did some research. Why are these price levels acting as magnets all the time? You know, it has to do with so many traders are putting their orders at the same areas, and those orders are they're like pulling price into the areas. And those areas of price, especially where lots of traders put their orders, act as magnets. So let me show you what I mean when I say a magnet. So we have any instrument can be a magnet. One magnet, very popular magnet, is the high of day. High of day, low of day is my favorite magnet to trade. Every instrument has high of day and low of day magnets on the chart. They get tested multiple times during the day. So our magnet strategy, it's not just a once and done, it's a multiple time of day trade. Also, other magnets where traders are constantly putting their orders, the VWAP. We have a specific setup that targets the VWAP. We have specific setups that target the PP, and also the 6 p.m. market open the day before the day you're trading. That's a magnet also. So the VWAP is a great place to trade around the high of day, low of day. In this particular example, I was trading the high of day, low of day, and one of my favorites over the years has been gold. I love trading gold futures. So our software automatically puts the entry lines on the chart, and then basically with a magnet trade, you set your trade up, you put your orders into the software, how many ticks do you want, but our software automatically targets position number 1 3 ticks away from the magnet. So what I believe is get out before the magnet is hit for target 1, and then target 2 is a bigger target. If you burst through the magnet and keep going, keep making a new high, then you have a bigger target number 2. So in this trade, I was just simply targeting the magnet, which is the green line above the heavy line, and it was gold, and I was just we were in an upward trend, and we have ways that we teach our members to look at trend. When the price goes through the order line on our chart that our software puts on the chart, we get filled long, and now you're just waiting for price to keep pulling to the magnet, which it does so often. It's going to burst, hit our target, and the magnet trade will be over. Watch, here it goes. That's it, another winning magnet trade. Let me show you another one. That was gold. Then we also have plenty trading that we do with oil. Oil is another magnet. Any instrument can be a magnet trade. This was a short oil trade, and it was after the oil news report, the storage report. Our software automatically puts the magnet on. Now, deciding to trade the magnet is discretionary. You're looking at the charts, you're seeing that the price is getting ready, what looks like to make a new low, and you can then put the magnet on. The magnet can be automated. In other words, it could trade automatically, or it can give us an alert, a purple blink and an audio alert of the magnet button, and you can then press a button to enter the trade. So you can enter a magnet trade either fully automatically or completely discretionary. And that's something I love about this style of trading. It's not, sometimes you're going to get signals, and signals don't always work. And I love robots. Our magnet strategy now does have a lot of elements of a robot, but I love robots that work best with intervention, because what we've discovered over the year, and what most of us know, is robots need reconfiguration. I've never seen a robot that works over and over and over and over and never stops working. But one beautiful thing about magnets, low of day magnets, I think I can comfortably say will work forever. You'll never have to reprogram the low of day or the high of day magnets. And probably, and the reason for that is till the end of time, people are going to look at the low of day and the high of day as being an important area on the chart that price is going to go through. So that's the reason magnets are great. We found these levels. These levels get tested over and over and over, and our software takes advantage of those tests. So think of it this way. A magnet is simply just an area on the chart where price is going to exit, and that's where your trade is going to exit. So if we have a magnet trade, here's another trade. This is micro gold. You could trade any futures instrument. Micro gold is getting ready to make a new high, and gold, as you know, has been making unbelievable new highs for so long now. It's at all-time new highs. Gold is in an insane bullish run. So we didn't get filled yet, and that's the beauty of the magnet. You have the ability to move your order entry line so that if you want to get filled closer to the high of day, you can move the heavy line so you don't get filled until you're closer. You can use a little bit of market structure to help you decide where you're going to put your entry, okay? This is another perfect magnet trade. High of day, it's going to be tested. We're going to get filled at that heavy line. And there it goes, watch. It's going to go through this trade, this particular video. I didn't finish recording, but trust me, whether you believe me or not, that price went through and created another magnet. We teach you how to set up your charts. We have a special way that we like to set up our charts. The new magnet strategy that we'll be distributing will include all the indicators that we use. There will be a chart template so that you can just load the template in, and your charts will virtually be set up in about a minute or two. And we also teach you how to set up your charts, because we think it's important. If you know what you're doing, you're going to do much better. You always want to be in control of your own destiny. So again, what triggers a magnet trade? What triggers the magnet trade is all of these price levels where orders are sitting, the trend. We teach you how to look at trend. So you're not going to want to take a short on gold if gold is down $100, unless there's very specific reversal strategies that are coming into play. Otherwise, you're going to try to trade in the direction of a trend. And there are elements and there are indicators that are free also. You don't have to spend a lot of money at all to figure out what the current trend of the market is. So we trade market opens, magnets at market opens, and our new software has a lot of new targeting features. So, and we have something in our new software called the ARS system. So unfortunately, the markets are not open today. But this is a replay chart, if you notice here, our charts are very, very simple to look at. Let me grab the control panel here. This is just a NinjaTrader playback. I'll put the charts on so it almost seems like time is passing. But I'm going to move time up to like 8 in the morning. All right, just 8 in the morning is a great time, in my opinion. It's one of the times of day that we trade a lot because a lot of news comes out at 8. So a couple of things that we've done in our new magnet. We've made it so that most of our choices can be made right on the NinjaTrader chart trader. If you want to trade the high of day, low of day, you just choose high of day, low of day. Here's our orders. That's where my order is going to be entered in. Here's the high of day up here. If I want to enter in the low of day, if I want to enter above the PP, for instance, I can move my order above certain pivots. It's very, very easy to place your orders for various magnets. There's magnets all over the chart. We've got the VWAP in the middle. We've got PP down here. Those are popular magnets that very often will get tested. I have the ability to scroll through our different setups. I can turn the high of day, low of day off, and then we still get our trading signals. If you're one of the popular levels that we trade is the VWAP. VWAP and high of day are important levels that are always getting tested. So we have built into our magnet software, we call it the VWAP signals. And when the VWAP gets tested and it then reverses off the magnet, we generate a trade signal for entering an opposite direction trade when the VWAP is tested. And we do the exact same thing when the high of day is tested. So we have a full-blown trading system inside our magnet trading system. It's really more than, it's 2 full trading systems in one. You have all your magnet trading, and then you have your after the magnet trade is over. We have those trades. It's very, very powerful, but easy to follow system, because look how clear the charts are. We really believe that the key is to have very clear, not confusing charts so you can see and make a decision as to whether or not you might want to take a trade. Now, this was a morning, was the other day, January 16th, and we were getting ready to trade news. It might have been CPI or PPI, I'm not sure, but we almost always are interested in trading the magnet. We also, in the morning, in our market open trade, every morning we trade YM magnets. The YM very often at 9 o'clock in the morning is in between the high of day and the low of day. And then when the market opens, the YM goes and tests those levels. So the magnet strategy takes advantage of the testing of those price levels. That's what our magnet strategy is. And again, because so many of those levels have orders sitting around them, it tends to pull price into those areas. It's a fantastic, fantastic way to trade. And again, as I was saying, we have a system called the aftershock reversal squeeze built into our magnet. And we also have a way of trading just signals. Also, in that trading signal system, you can tell the system, take less signals, make the market work a little bit harder, and change the frequency of the signals. But just looking at a random chart, we got a short signal here that was beautiful. We got a long signal here that was good. And now we have a short signal, and I don't know if it's going to work. I'm going to speed this up to be pretty quick, just out of curiosity. Let's see if it worked. And look, any signal system, you're going to do yourself a big favor by understanding time of day, understanding trend, understanding if it makes sense to take a signal at that time. And those are things that we teach our members how to decide what signals are good, what signals are not as good, and that's what you base your trading on. Anybody that tells you a signal system is perfect and will always be winning is just not being honest. And the best thing you can do is have a signal system and understand why signals get generated so you can make an intelligent decision about whether or not you might want to take a signal. My personal favorite signals are the signals that are based around the high of day and the low of day. They are, in my opinion, the most reliable signals that we see. When the market is done making a new high or a new low, particularly on gold or the MNQ or the ES, it very often does incredible reversal trades, and our software gives those signals to take those reversals. And we call that the ARS system, and it's part of our Magnet 2.0. And we are really excited about it. It's been a hard job to get this software finished because we've added a lot of features to the software. So let me get back to the area in my slides. The time is almost over, and I know it's very hard to know in a short presentation, is this what you want to learn about? Is this what you want to make an investment in? So we always make a great offer to everybody that comes and spends time with us on Traders Corner. So I'm going to make that great offer again. Take a trial with us. If you're not sure that you want to trade news, or you're not sure you understand what the magnets are, take our trial. Here's the deal. Spend all of our upcoming news earnings, which are coming up this week. The great earnings are starting. Join us for all of our trade rooms, everything that we give our full-blown members, all of our software, all of our trade reports, all of our trade room appointments. You can be part of all of this trap trade software, everything that we sell. Magnets are fantastic for trading in prop accounts because they're very consistent trades. This is a final trial opportunity. It's going to expire Sunday at midnight. Just $20.26 for 30 days. Our only rule is you have to be a new member. You have to be a new member to take our trial. We have a special link for folks that aren't new. I'll post it into the chat in a minute. But www.gopro25.com. You can join us for 30 days for $20.26. Join us and make 2026 a great year for you. Learn about magnets, learn about our signal system. So join us at www.gopro25.com. It expires Sunday, this offer. If you love us, and most people love us and stay, our monthly full-blown membership is only $97 a month, and you can cancel at any time. Just send us an email. It's not a big deal. Here's what you get. Every news trading software that we have, all of our software suite, the Magnet Trade, the Bracket Trade, Spike Trading will teach you everything about appointment-based trading in our trade room. We'll teach you how to create a schedule for trading. We'll teach you how to do the earnings trades. The earnings trades are some of the best trades that we take every quarter. We just love our earnings trades. Broadcom will be coming up soon. This member made over $800 trading Broadcom. Look at the way it exploded. This is an exploding candle, and many of the earnings trades, that's what's happening on these trades. And we're showing our members how to trade these events using futures. These are all the things you get. I will guide you step by step. I'm in the trade room every day, teaching our members how to use our software with these setups. So just $20.26 for 30 days. If you need help, or if you want to cancel your subscription, help at 10minutetrades.com. So please make your way over to www.gopro25.com. Join me in the trade room. The trial is going to expire Sunday night at midnight. Let me see if we have any questions here. The magnet trades are used after the New York Open. Or is it looking, okay, so David's asking a good question. Are you looking at the previous day, high of day, or are you looking at today's? Now, David, normally we're looking at today's high of day, but there's no reason that if you find that magnets are working at the previous high of day, which I believe they probably will, the key with magnets are enough people looking at that level to make it pull the price so it bursts. That's the key, or one of the keys about choosing the best magnet levels. I do believe that previous high of day and previous low of day would be good magnets. We just have enough magnets we're already trading that we don't really need to use those, but you can certainly, if you like Fibonacci levels, you can use Fibonacci levels as well. So it's up to you. You don't have to trade the magnets we trade. And in fact, we have a custom level where you could just type in any level you want and you can make that your magnet. So besides all of the specific indicators and pivots that we programmed into the magnet, you can type your own level in and use a custom level and trade that way as well. And that's also, it makes it very powerful software because you can do whatever you want. And I'll say it one more time, magnets are always and forever. People are always going to look at high of day, previous high of day, fibs. They're just going to continue looking at these levels. So everybody, Anthony, thanks for having me today. I hope I explained it well enough for everyone that you're excited. You want to join us, www.gopro25.com. And I'd love to see you all in our trade room next week. So thanks a lot, Anthony.
Oh, thank you, Leigh. Thank you for that exciting look at news-based trading and the magnet strategy. Leigh's special link is now posted in the chat. I believe it was www.gopro25.com. So check that out. Seems like a really great deal, amazing deal on that price there. All right, so our final presenter today is Rory Powers of Right Line Trading. Rory will be sharing how Bionic AI bots are being used to create a powerful edge for prop traders, combining automation, discipline, and precision execution. Everyone, please welcome Rory Powers.
Hey, Anthony, thank you for that great introduction. I really appreciate that.
Thank you. Thanks
it's always an honor to be on Traders Corner, and thank you very much for having me. What a great presentation today, just packed with great information. My presentation is on our AI Auto Trader. We like to refer to it as the ultimate edge for prop trading. And before I get too far into the presentation, I just want to, before I get into Marcia, I just want to get the CFTC out of the way. This broadcast, this presentation is for educational purposes only. It's important to know that I'm not a licensed financial advisor. I'm not offering any type of trading advice here today. There is a significant amount of risk when trading the financial markets. If you're not familiar with that risk, we do highly recommend consulting with a licensed financial advisor. All right, let me backtrack now to one of my favorite clients. Her name is Marcia. I wanted to start with her because, you know, if there was ever a genuine review and a genuine person, it's Marcia. She's the epitome of honesty. You know, Marcia came to us completely green, a complete newbie at trading, had never traded futures in her life. In fact, her only real exposure to trading, she had bought some Forex bots, some bots that traded the pairs from a vendor that kind of delivered her the goods and then never helped her whatsoever with getting it set up or how to trade it, kind of left her high and dry. And that was her initiation into the trading niche. So she came to us, you know, she had just been burnt, and her trust level was very low. But she was very ambitious and very hungry to do well. And Marcia, within the first 45 days of trading our automated bots, I kid you not, had successfully passed 10 Apex at $50,000 evals. And not soon long after that, she was up to 15 or 20 with no experience whatsoever. So these automated bots do have the potential to significantly shorten the learning curve and achieve results that would take years for you or I to be able to accomplish that, just learning to trade on a discretionary basis. And Marcia is really a tremendous inspiration to so many of our members in our trading community. Right line trading, very quickly, has been around for 14 years now. I'm going on my 12th year with the company, and it's our mission to provide our trading community with an edge when they trade the financial markets. Well, what kind of edge, what you may think? Well, an edge is really to give you an indication of the future direction of price. And with strategies, we can automate that process and get you into a trade automatically when our software deems risk to be at its absolute lowest. Along the way, we've built a beautiful community of traders of all experience levels, from the far left with Marcia, who is a complete newbie, to the far right, the seasoned, veteran professional trader, that this is what they do for a living, day in and day out. And we have plenty of those as well. But everything that falls in between that wide spectrum, we have in our trading community. Our hub that we all communicate is through Discord. That's our community of traders. We consider it our family of traders. Just to very briefly, I know it's been a long day, and I don't want to put you to sleep. I just want to acknowledge the members of my team. It's not just me pulling the switches and flipping the levers here. I'm part of an extremely educated and talented team of software developers, engineers, and we have a college student, Mr. Brock Miller. But first, very briefly, our professional traders. We have Mr. Craig Emery, David Kushner. We've just added a new professional trader onto our team. His name is Savvy Trader. I'll have him up here soon. He's going to be on our YouTube live streams. And last but certainly not least is my main man, David Wise. If anybody has any interest in ever trading options or learning how to trade options, David's your man. I call him the Pete Rose of options trading. Pete Rose in baseball was the all-time hit leader. But his nickname was Charlie Hustle because he was always on base and always moving the goalposts, always putting points on the board. And that's David. He has, over the course of the last 5 years, he's maintained an 88 or to 90% win rate, which is just amazing. But we do have a free trial if you do want to check his service out. Behind the desks here at Rightline, we have Mr. Brock Miller. He's our college student getting his degree in computer science. We have Mr. Sergio Luque Rodriguez. He's a software genius developer and has his master's degree in computer science. And our team is led by the owner of Rightline Trading, Mark Miller, who has his MBA from Cal State. His expertise lies in automation and robotics, and he is a U.S. Army vet. In fact, he was a sniper in the U.S. Army. But Mark has brought those core military traits, those core military values of honesty, transparency, and good old-fashioned hard work into everything that we do here at Rightline Trading. A little bit about myself. I put together a little collage from the holiday season. My name is Rory Powers. I reside in South Florida, and besides trading the financial markets, my passions are also saltwater fishing and my family and friends. Just a very brief story about some of these images. Obviously, a fishing image with Mark and Sergio. Mark got married. Mark Miller recently got married over the holiday season, and he had a beautiful wedding that the whole team attended. It was a very small and intimate party, and God bless. It was a beautiful ceremony. I was also able to visit my mentor, Mr. David Wise, and I brought him a trophy because he's the best darn options trader I've ever seen. He's the real deal. I'm sure he would have rather had a check, but I brought him a trophy. And every fisherman has a fishing story, and my fishing story for today is about the big one that didn't get away, and that was my beautiful wife, Christelle. Christelle is a Haitian American, She's just got her master's degree as a nurse educator, and she's practicing RN as well. And God has blessed us with these two beautiful girls that are the apple of our eyes. Okay, let's move on. We refer to these bots as going from stress to success. And I'm going to be, this presentation is how automated trading, specifically AI trading bots, can really change the whole trajectory of your trading career as it did mine. You see, some very common side effects of discretionary trading in volatile markets include, you've probably heard those commercials that come on every now and again that tell you about the side effects of the medication that they're trying to push on you. Well, these are the side effects of discretionary trading in volatile markets. The side effects may include heightened stress levels, impaired decision-making under pressure, sleep disruption, elevated heart rate during market hours, reduced confidence following a drawdown or a loss, difficulty stepping away from the screens, and in some cases, a noticeable decline in interest for intimate pursuits. So that discretionary trading, I was right here at Trader's Corner, and there was a presenter, his name is Chris Vermeulen. He did a presentation and highlighted he did a study on human personality traits and whether or not they lend well to being a good disciplined trader. What he found, to make a long story short, in the course of his study, bad news for most of us. 90% of us, genetically, we were, through genetics, our personality just does not lend well to being a good disciplined trader. In my first slide where I showed the professional traders, those guys all have something in common. Okay, something that unfortunately most of us don't have. They have patience and discipline. They're able to sit there and wait and make decisions. They have etched in stone rules in their heads that certain technicals must line up, and they're disciplined and patient enough to wait for them. And once they occur, they pull the trigger and get in the trades. There's no emotion based in their decisions. Which, I answer the phones here. I've been here for a long time, and the vast majority of us are unable to do that. In fact, most of us have experienced problems making money with trading. Consistency is the problem. That's the number one killer. Most of us suffer from over trading, revenge trading, making impulsive decisions, or we've, been seduced into buying indicators or trading systems that just don't work. It all leads to the same the same cold, desolate place of blowing out our trading accounts. And this is, the genesis of the AI Auto Trader. It's been my team's commitment to bring this to an end. You see, we've narrowed it down to just two things that are going to create trading success. Number one, because the vast majority of us suffer from these emotional errors, ideally, we need software that can get us into these trades automatically. When the risk is at its lowest, where the potential for a winning trade is at the highest, all of the technicals have lined up, and our software defines risk at being the absolute lowest. We need software that can automatically get us in. Now, the elephant in the room, when you talk about automated bots, are all the bots that just don't work, right? We've been around for a long time. We've developed bots that, just when market conditions change, the inputs get stale. And we have to continuously, in a never-ending loop, we have to optimize the inputs of those strategies to the ever-changing market conditions. The problem is that we can never keep up with it. It happens too fast and it changes too frequently. So ideally, not only do we need software that can automatically get us in and out of trades, but technologically, we need something more advanced than static parameters that we have to randomly choose which bot to trade during a certain market condition. We need a system that will automatically choose the bot for the current market condition and give you the highest percentage chance of getting yourself into a profitable trade. And that's what we're going to be talking about here today. The main benefits from using our AI Auto Trader, well, there's no more overthinking or hesitating on a perfect trade setup. Our system is going to place your stop and your profit target in the most ideal location based on average true range of the market. If you're a prop trader, stick around. Listen, prop trading has tremendous advantages. Being able to get into the game with the potential to make really money that we dreamed when we began trading, we have the potential to make that money. And the nice part is we have that potential without risking our own capital, right? Doesn't that make it nice? We can get in the game and leverage 5, 10, 15 accounts via the use of a trade copier and 5, 10, or 15x our winners. I mean, you know, those emails that our inbox was full of about how much money they made and how fast they made it. Well, now we start to see a pathway on how we can realistically get there. And that's the exciting part. I do want to say that, you know, there are positives about prop trading, but it would be unfair not to point out the negatives. Those trades that we can 5 or 10 or 15x the profits, well, it's a double-edged sword. We could 5x, 10x, and 15x our losing trades. The prop firms have turned something pretty difficult in trading into something even more difficult with the additional rules that they put on us. And I just wanted to throw that out there for transparency. But if you're a prop trader, stick around. I've got something real exciting to show you. We've got a portfolio that we've focused on prop traders. In fact, a number of our strategy parameters were all developed with prop trading in mind, with those trailing thresholds, the daily profit limit, the daily profit goal, the daily loss limit, the consistency rules. All of that has been taken into consideration, and we've automated the adherence to those strict guidelines that these prop firms are making us adhere to. So we refer to this system as a machine learning algorithm, and it also has pattern recognition. The charts are very symmetrical and geometrical. The system has the ability, the system has the ability to recognize certain candlestick patterns throughout the trading session that often reoccur, and they know the reaction of the market through that machine learning algorithm. One example that we're using the pattern recognition is in our trade management. With our trade management parameters, which are very unique. You see, we've kind of, let me tell you, the development of this bot, of these strategies, is completely out of the box, okay? What I mean by outside the box is it's not standard. It's not something that's just a NinjaTrader, you know, property. This is all thought out, outside of the box development that Sergio was able to accomplish, you know, through a collaboration with really a world-renowned AI lab. So the candlestick pattern recognition is one component of our trade management parameters. Once the system recognizes, for example, if we're in a long trade and there's a bearish engulf, a big ugly bearish engulfing candle, well, the market is normally anticipates a reversal on that candlestick pattern. But what the system will do is instantly exit the trade and lock in with any profits that you may have at that point, or prevent you from taking a full loser. The system is very unique. It will only trade during the hours of the day that are the most profitable. It has a machine learning algorithm that recognizes certain market conditions and it will only trade the triggers that perform the best in that certain environment, A, B, C, or D. Our trade management strategy, I'm going to show you a video. You see, our biggest problem as futures traders is really our risk to reward, is our trade management. Sure, it's important when you get in, but once you get in, how you manage that trade is probably just as, if not more, important. So we've coded into these strategy parameters something that's very unique. And I'm going fast because I know it's been a long day, but the reason why we're doing the things that I've just outlined, where we're only taking certain triggers in certain market conditions, are only trading during certain market hours, or positioning our stop and profit targets based on the average true range, the reason we're doing that is we need to filter out our losing trades. As developers of automated strategies, that's the #1 goal. It's not necessarily to get you into every winner. In fact, at the expense of letting some winners get by us. And it's frustrating to watch. I know, and I get calls all the time. I think something's wrong with my system. This big, beautiful move, I watched it, and my bot didn't take a trade. Well, that's going to happen sometimes because the most important thing is there's a fine line between filtering out losers and getting into winners. So some of them are going to pass us by. So the video I'm about to show you is this bot that I'm going to show you, the trade management parameters. Is the initial stop on the trade is 60 ticks. The profit target is 100 ticks. It's a one contract strategy. Now you have the ability to always scale up. All of these parameters are completely adjustable. Towards the top, I have my daily profit goal and my daily loss limit. And these are completely adjustable based on your risk tolerance and your account size. Once one of these values has been reached, the system will automatically cease and stop trading. Capital preservation is extremely important. So the way we're managing these trades is once the trade goes 50 ticks, in this example, my profit target's 100. Once we go 50, my stop is going to go to break even plus 11. So the worst case scenario now is the trade, once it goes 50, comes back on me, and it stops me at it plus 11 for a nominal gain, okay? However, if the trade continues to mature towards my profit target of 100, and it comes within 25 ticks, or plus 75, my stop is going to automatically come 25 ticks behind price, which is at 75. So it's going to come to plus 50. All right. So now my stop went from plus 11 to plus 50. And now I've triggered what we call our leapfrog integration. Check this out. This is the trade management that is a dream come true for futures traders. You can see in this video that I get into the trade, it's matured down to my profit target to where on the 30 range here, I'm now in the leapfrog, okay? And as the trade matures down, I'm in a short trade here. As the trade matures to the downside, my stop and my profit target are gonna do what we call the leapfrog. They're both gonna jump and continue to jump and lock in profits as the trade matures. On my left here, the NQ20 Unirenko is also in the trade in a short position, and it's going to do the exact same thing. Now, keep in mind, these bots are trading micros, okay? Risk on this 30 range bot is $120. Now, I pull over my trade copier because I want to show the P&L on the trade. And you could see this trade as it starts to mature, what the stop and the profit target do. Another leapfrog there. And then my 20 Unirenko starts leapfrogging. And this trade will continue to trail, not on a static trailing, out of the box trailing stop that Ninja has, but in a leapfrog that gives it room, lets the ebb and flow of the market breathe. I like to refer to it as wiggle room, breathing room. If you squeeze it too tight, it's going to wick you out. This leapfrog keeps it at a nice distance, and we control the size of the offset based on the volatility. If we want to make that offset wider, we have a parameter within that leapfrog integration that we can make it wider. Now, what this does for traders over the course, well, number one, let's back up. For prop traders, where we cannot have unrealized gains, right? They've made something hard, even harder, with unrealized gains. They go at your high water mark. What this does with this leapfrog is it doesn't allow you to accumulate a tremendous amount of unrealized gains. Worst case scenario, it's going to come back and hit your stop, but your stop is going to be trailing in a beautiful way. But what this does over the course of a week or a month or throughout the entire trading year, it's going to put your risk to reward at a place where you don't have to win 70 or 80% of your trades. Okay, and that is what hurts us as futures traders. Me, I'm somebody who habitually squeezes their stop. I can't help myself. It's like a knee-jerk reaction. The second I see my P&L turning green and I'm up $200 or $300, well, for the love of God, I do not want to give it back. And I'm going to instantly take my stop and move it too tight. And it's going to wick me out, and I'm going to watch it go a country mile, and I'm going to be on the sidelines sick as a dog watching it. So this is going to give you an equity curve that is absolutely beautiful. This particular trade, trading the micros on these two bots, it was a $4,000 trade across 3 PA accounts. So that leapfrog is really giving us some trade management advantages that nobody else has. Nobody else has. Now, we've also integrated ChatGPT as in our AI trading agent. The way this trading analyst works is it gives you the ability to, I'll show it to you real quick. What we can do, for example, is we can go to our trade performance. This is the AI trading analyst. And on NinjaTrader, if I bring up my trade performance, what I could do is I can go to, instead of my summary, I can go to my trades. And I can get the trades from every single one of my bots. And I can export it. And once I export it, I name the export. I usually name it what the period of time is that I'm getting the trades for. And what this ChatGPT will do, I'll show you. Yesterday when we were going over the results, let's see, for one full month. This is 2 months back. This is 1 month back. So for 1 month back, if I import that trade history from my NinjaTrader and click on process this week's trades, what it'll do is it will give me my most profitable bots. And I can go on and ask questions about that data. And that's really the strength of AI, is it's able to crunch a tremendous amount of data, break down the numbers, and give it to you, give you the performance metrics on your top performing bots. So this tells me in the last 30 days, my #1 bot was the RJ Star drone because it made $12,000. So the ChatGPT can provide you with incredible insight into your trading history, into your trade performance, your historical performance. And what we've done is we've just streamlined our entire portfolio. We used to what we were doing was a little bit complicated. We had a bot and a drone that traded together. Well, we've transitioned away from that, and we've streamlined our portfolio to now what we're doing is we're using our best bots. You might ask, what in the world is a best bot? Well, what this logic does, and I heard a presentation earlier about, having a beautiful portfolio, a diverse portfolio of strategies, which is important because we want to have a bot that does good for each market environment. Is it a choppy, ranging market? Is it a trending market? Depending on what the market environment is, we want to have settings for a bot that's going to find the ebb and flow of that particular environment and thrive in it, okay? But what we've done with this new Bionic Best Bot is we've taken all of the guesswork out of it. You see, the way it works is our NQ Best Bot is going to automatically analyze every NQ bot in our portfolio. We've cut our portfolio down to just 10 bots. So our portfolio consists now of 10 bots. 2 of them are the best, and 2 one-day passes for prop trading. 2 of the 10 one of is the NQ Best Bot, and 1 is the ES Best Bot. And what they're going to do is the NQ Best Bot will automatically analyze every NQ bot in my portfolio. It's going to evaluate the profitability, the volatility of the market, the momentum. It's going to know the trading environment, and it's going to select. Yes, this is live, Lance. And it's going to select the the bot that it deems is going to provide you with statistically the best chance of hitting your daily profit goal. So it eliminates which one should I trade. The first few years that we were running this, we were pulling the hair out of our head. It was almost like a horse race. We don't want you to have to select which one to trade. We want the data and this logic, the technology, to do the heavy lifting for you. So it's going to select and trade the single best performing bot for the current market condition. It's going to execute those trades with zero emotion, no hesitation, no manual input whatsoever. And that is what we just released yesterday. So the portfolio is a beautifully, it's a beautiful portfolio. There's a tremendous amount of diversity in it. Our money makers, and listen, we're not dogmatic about the instruments that we trade. We'd love to have a gold and a crude oil and a Russell and a soybean, but you know what? We only trade the ones that make money, period. And that's a hard stop. If one of those other instruments, we could find the inputs that give us more profits than the ones we have, we would put these ones we have out to pasture quickly. I assure you of that. So we've got a lean and mean portfolio of our best performing bots. We're going to run 10. 2 of them are the best bots. And that best bot is only going to trade the bot that's found the ebb and flow of the current trading environment. Okay. So let me show you some numbers because we're in a unique situation here at Rightline. Most vendors in this niche, if they had one strategy that was profitable, they'd be thrilled. That's really all you need is one, if you think about it. If you had one that was consistent and that can make you money every day, well, shoot, you wouldn't have to look any further. Now, I don't want to misrepresent you. This is not the holy grail. This is just a tool that's going to provide you with an edge. You are going to have some losing days. It's just the reality of it. It's the reality of trading. But let me show you the numbers because they really are extremely impressive. One of our best bots, and it seems to be a theme, our best bots, there's power in numbers. I started saying that we have a beautiful community of traders. Well, listen, if we've been around for 14 years, we have thousands of members. But our family of traders that are running this system has provided us with our best parameters. Robert is a perfect example. This AI ES30 range, there's a backstory, but I don't want to put you to sleep. It's been a long day, but the numbers speak. The numbers speak into the long story. It makes a long story short. From the September 1st to December 13th, it made over $15,000. This is not a back test, okay? This is not a strategy analyzer, which is completely bogus. These are actual trades taken on a live market, okay? $15,000 in profit trading one contract after commissions. That's the ES30 range. We also have our moneymaker drone, which coincidentally is also on the ES30 range. From July 27th to December 13th, it was up over $22,000. In fact, I wanted to show you. I was talking about Discord and our family of traders. Robert, the gentleman that helped us with the inputs of this strategy, I kid you not, I want to show you these numbers. Robert happens to be a professional in this niche, and he showed me the ES30 that he shared with me. Over the course of 6 months, he actually made over $60,000 running this ES30 range. I kid you not. He told me, he said, Rory, listen, I've got bots from just about every vendor out there. I love them. It's what I love to do. I love to optimize them. I love to play under the hood and tinker with them. But yours is unique. He says, because I've never had to touch one of the settings. I've never had to do back testing and strategy analyzing and fiddling with the parameters. This thing out of the box is a winner, and I never have to touch it. Remember Marcia? Marcia was the newbie with no experience that passed 15 prop evaluations in her first 45 days. This speaks right into that experience that Marcia had. So the numbers look extremely profitable. This bot here, I mean, is just blowing my mind. This NQ150 RJ happens to be in the medical field here in South Florida, very close to where our home office is in South Florida. RJ shared the parameters of a NASDAQ bot that trades a 150 range bar. Now you think of the NASDAQ, you think of like a Lamborghini or a Ferrari, a fast moving bot, that can run up the score really fast. You can win a lot of money. And it's very exciting. It's almost addictive. In fact, I think I might have an addiction to it. But this NASDAQ 150, what it does is it slows it way down. It turns it into a Honda Accord, and it's very smart and efficient. This 150 range, let me show you what I'm talking about. If I go to my trade performance and I show you this 150 range, this is right out of my NinjaTrader. This is not a back test. This is no, smoke and mirrors show. If I uncheck it, it's going to go to 0. And if I generate it, it's not going to change, okay? If you look at the summary of this, this is going back to November 1st of last year to Friday. This bot is just over $19,000. $19,000. It's absolutely incredible. So that's our 1-2 punch, is the ES and the NQ. And listen, the data is why we've made those decisions. It's not because we have a liking to them for any other reason. The ES30 range is just a tremendous moneymaker. We have another variation called the Star Drone. From July to December, very similar to what Robert got, we were at $30,000 in profits. So these bots the numbers speak for themselves. You could trade a live account, a prop account. It makes absolutely no difference. We like to refer to this as prop trading on steroids. Part of the portfolio, I mentioned that we have 2 one-day passes. What that means, the one-day pass, is if you've ever traded a prop account, you know that most prop accounts start with an evaluation. Unless you pay a significantly more amount of money for the account, and you go straight to the sim funded, where you can use it as a vehicle for payouts. Well, the evaluation can be very stressful. It could be a seesaw, a lot of blood, sweat, and tears to get across the finish line. Well, we've kind of streamlined that evaluation process, and we've built our one-day passes. Our one-day pass will take a trade during the time of the day that the software has defined as the most profitable time of the day to trade, looking at historical trade performance. It'll take the trigger that wins the most, and it's going to get you into the trade with the maximum number of contracts that they allow, and go for the minimum number of ticks in order to pass your evaluation, okay? Let me show you some numbers, what to expect. The 2 that we kept, the NQ and the ES. The ES one-day pass is no joke. Let me tell you something. This is going back to November 16th to January 16th, over the course of the last 2 months. This has a win rate of 66%. Okay, I answer the phones here at Rightline. I don't want you to call me upset, so I'm going to cut that in half. Let's say that this is going to pass 1 out of 3. Okay, so meaning statistically, if you were to buy 3 evaluations, statistically this is going to give you at least 1 PA. Now this is trading. You do run the risk of losing all 3. On the other hand, you could win all 3. But over the course of the last 2 months, this one has done 66%. I'm the type of person that likes to under-promise and over-deliver. So I'm going to keep it at 33%, knowing that I'm going to answer their call when you call me, because that's what I love. I love talking to traders. You know, when I think about traders, you know, I think of fighters. I think of people that are perseverers, soldiers, very determined, resilient, steadfast, like the old Timex commercial. They take a licking, but keep on ticking. So I love talking to traders. So, I mentioned, I alluded to myself, these bots have been have been a turning point in the trajectory of my trading career. I'm the world's worst trader. What can I tell you? Christopher Mullen did that study based on human personality traits. I have the personality that completely trades on emotion, and I've got it so bad. I've tried to kick it. It's just extremely difficult to stop it. So these bots allowed me to trade the entire year last year. These 3 accounts, these 3 PA accounts, I was up over $45,000 in net profits. And that's trading those 3 PA accounts from January 15th to December 19th. And I can assure you, if it was me trading and not the bots, I can find 10 ways before 10:30 to blow out an account. Whether it be human error, stepping on a banana peel, I'm going to find a way to mess it up. I am famous for sabotaging my own results. And listen, I answer the phones, and I know you know what I'm talking about. The most common question is, Rory, can I get payouts? Yes. This is considered a semi-automated strategy. All of the trades project on your chart. They don't want you to set and forget it. You got to be in front of your chart. You have adjustable parameters. It's not a black box system. It's not a high frequency trading system. This will be allowed by the vast majority of prop firms because of those reasons. It's a semi-automated strategy based on their own definitions. Let's get to the special offer. Woo, that was a lot of talking. The special offer today, listen, if you decide to come aboard, and the special offer is going to run through Monday, if you decide to come aboard, it's the beginning of a relationship, okay? Like that vendor, that Forex vendor that, you know, that sold those Forex bots to Marcia, and then didn't look back and took her money. Well, you know, karma is something else, and it will catch up to them. Let me say this. If you decide to come aboard, it's the beginning of a relationship. Not only are we going to provide you with a white glove installation, but ongoing support throughout the lifetime of your membership, okay? And what I mean by ongoing support is one-on-one consultations. We're going to trade the bots with you live on YouTube on a daily basis, Monday through Friday. And you're going to be in our Discord community along with a very interactive group of traders. And we also do usually weekly or bi-weekly live training and onboarding and live Q&A sessions. We do it at least a couple times a month, okay? Also included is that ChatGPT integration that we're actually building out. And there's more coming with that. This is the YouTube. That we do daily. We're going to include the full portfolio. We're not going to break it. We're not going to break it into pieces. If you come aboard, you're going to get everything. We want you to have the best chance of success. We want you to have the full portfolio, and that's the way we've designed it. To give you the best chance is to run them all. Use those best bots, and they'll determine which one to go ahead and trade. We're also going to include the prop trading templates. So here it is, the special offer for Traders Corner. We're going to do a 25% discount across the board. It includes the full portfolio, everything that I've just mentioned. Use coupon code SAVE25% at checkout. The monthly normally is $9.98. It's going to come down to $7.49. The annual membership, again, the full portfolio, all of the bonuses that I've described. Use coupon code SAVE25% at checkout, and I'm going to put a link in the room right now. Excuse me just a minute. Bear with me. I got to find the chat box under my mess. Chat, here it is. What? Hold on, webcam. Chat, okay. Okay, there's my special offer. It's good through Monday. The lifetime is really the best value. The best value is the lifetime. If you're like me, you hate subscriptions. If you have the means, it is the best value. At 25% off, it comes down to $37.44. PayPal Pay Later is an option at checkout. If you do qualify, they have PayPal Credit, where you could split your payment into up to 6 months with no interest. It's not only me that did well. We have members all over the world, the UK, Singapore, Thailand. We have traders in Australia, New Zealand, the UK, Limit Up. A lot of our members have put up numbers that they never dreamed possible. Ron N made 10 grand on our gold bot that we have in our Discord chat. Suzanne is one of our greatest members. She's always willing to help, to lend a helping hand, and extremely knowledgeable. But listen, this is Traders Corner, okay? And we always do something special for Traders Corner because they always treat us so well, and they always have us on their venue, and we're very grateful. We love the Traders Corner venue and their audience. So what we're going to do is we're going to roll back the clock, and we're going to go to our holiday pricing, our lowest prices of the year. We're going to bring them back through Martin Luther King Day, okay? The greatest orator of all time. Martin Luther King, man, you know, I get pumped up every time I hear him speak. But we're going to roll back the clock and bring it back. We're going to do the 50% off, and we're going to bring the monthly down to $4.99, full portfolio. The annual membership is going to come down to $14.96. And that's for the full year, the whole portfolio. And then if you take advantage of the lifetime, there's 2 coupon codes for the lifetime, okay, to get us where we want to go. 2 coupon codes. You're going to need the 50% off and the save 500 at checkout. 50% off and save 500 at checkout, okay? Take a screenshot if you will, because you'll probably forget. But on our website, we don't even have those coupon codes that show on our website. This is a Trader's Corner especial. So I want to end by saying this. If your trading journey's been, not as described, filled with potholes and speed bumps, and you're like that lady in my first slide, ready to put the sledgehammer through your monitor in total frustration, I come with a message of hope today. I was very much like her, blew out dozens of hundreds of accounts combined. There is hope. I come with a message of hope. I truly believe that these bots will give you the potential to have an equity curve like I showed you that I was able to accomplish over the course of the year last year. I want to thank you very much for your time and listening to my presentation. God bless you, and I hope to see you on Monday morning or Tuesday in our YouTube live stream. If I didn't get to your question, let me end with this. Please, only Anthony and I can see your name and number. If you would, please put your name and number in the chat box. I want to respect everybody's time. I know there's a lot of questions, but I don't want to keep everybody hostage. So if you would, please put your name and your number in the chat box, okay? And I will give you a call. Give me a chance to get a drink of water, and I'll give you a call, and I'll do my best to answer your questions. Thanks again for having me, Anthony. It's always a pleasure. Thank you.
Oh, thank you, Rory. Thank you for a fantastic way to close out today's summit. Rory's special link is now available in the chat box. On behalf of everyone at Traders Corner, thank you for spending your day with us at the Investors Summit, Roadmap to Profits in 2026. A special thank you to all of our presenters for sharing their expertise, insights, and strategies. We hope today's session gave you clarity, confidence, and ideas you can take forward into a profitable 2026. Have a great rest of your day, and we look forward to seeing you at our next Traders Corner event. Thank you so much.